Okay, it's on the YouTube. Okay, online students, good morning everyone. And so in our last class, that is last 4 days session, we have completed the discussion up to few chapters. There are few more chapters which are left. So I am starting with one easy going chapter, that is time of supply. So you can see that time of supply. See, time of supply is like mathematics only. So you need to just remember what is the provision, and based on that provision you need to apply it in the question that is given. So you can see time of supply provisions, which is in page number 63. So in this, what we are going to cover is what is the due date of invoice, and then time of supply in case of goods or services, and special points on time of supply and circulars on time of supply. These areas we are going to cover in this. And in that, the first one you can see due date of invoice. Due date of invoice is given under section 31. So in section 31, there are totally 6 provisions. Section 31 talks about due date of invoice. So first, to understand the time of supply, we need to know we need to know due date of invoice. What is the objective of time of supply? Why we need time of supply? Number one, to determine the due date of payment of GST. That is, so the due date of payment of GST for a transaction depends upon the time of supply, and the time of supply in turns is relevant for the purpose of due date of payment of GST. For example, you take July month, July 1 to July 31st. If there is any transaction and the time of supply falls in this period, now next month by 20th August we need to pay the GST for the transaction. So what is the objective of time of supply? First objective is to determine the due date of payment of GST. Second objective, to determine the exchange rate. Exchange rate, why? When you import the goods or import the services, export the goods or export the services, the transaction will be in foreign currency. That has to be converted into Indian rupees. For conversion into Indian rupees, we need a rate. Okay, for conversion into Indian rupees, we need a rate. For that purpose also, we have to take one time of supply. Is it clear? So time of supply is for the purpose of determining. So you can write somewhere over there, what is the objective of time of supply? So what is the objective of time of supply? Somewhere here we can write, so you can make note. So there are 3 objectives of time of supply. Objectives of time of supply. So what is the objectives of time of supply? Number 1, to determine due date of payment of GST. To determine due date of payment of GST. To determine due date of payment of GST. Number 2, to determine exchange rate. To determine exchange rate. To determine exchange rate means whenever the transaction is denominated in foreign currency, we need to convert that into Indian rupees. For that purpose, we need to know. So it is to determine the exchange rate. And then number 3, to determine rate of GST. To determine rate of GST. Okay. So these are the 3 objectives of time of supply. Is it clear? So first one, to determine the due date of payment of GST, then exchange rate, and then rate of GST. But the time of supply for a transaction is dependent upon the due date of invoice, by when the invoice needs to be given. That's what we are trying to understand now, by when the invoice needs to be given. In case of section 31 subsection 1, normal cases, and 31 subsection 4, continuous supply of goods, 31 subsection 7, sale and approval or on return basis. Sale and approval or on return basis means, first I am delivering the product to you. If you like the product, you will buy the product. If you don't like the product, you will return that product. So that is known as sale on approval or on return basis. So in case of sale on approval or return basis, we need to see the due date of invoice as 6 months from the date of removal or date of acceptance, whichever is earlier. So when is it considered as sale? Only when you are accepting it is considered as sale. Got it? So whenever you accept, it is sale. But for that purpose, I should not wait for 1 year, 2 years and all, 6 months. So within that 6 months, whenever you are accepting the date or the 6 months, whichever is earlier or whichever is later, whichever is earlier will be taken as the due date of invoice in this case. Is it clear? And next one. So section 31 subsection 4, continuous supply of goods. Continuous supply of goods means there will be successive supply of goods for which the payments are collected on a periodical basis. That is known as continuous supply of goods. So we need to see date on which account statement is issued or the payments are received, as the case may be. What does it mean? Say for example, I enter into contract with you, wherein I will be giving you, whenever you are asking goods, I will be supplying the goods to you. Now, how the payments are settled between us? The payments are settled between us on a periodical basis. Okay, say quarterly the payments are settled between us. Now in this case, quarterly when the payments are settled between us, so first monthly I will collect some ad hoc amount, like say 2 lakhs you pay for every month. Again I am repeating, I enter into contract with you, at frequent intervals I will be making supplies to you, and wherein we will do the settlement on a quarterly basis. But first month, second month and third month in the quarter, you need to give me some ad hoc amount, say 2 lakh rupees, 2 lakh rupees, 2 lakh rupees you need to give, and again at the end of the quarter I will be raising invoice to you. So in that invoice I will be telling you have to give me 6,80,000. So already you gave me 6 lakhs, 2 lakhs, 2 lakhs, 2 lakhs. So remaining 80,000 you need to give me. So now for the first 2 lakhs, second 2 lakhs and third 2 lakhs when I am collecting, whether it is based on account statement or irrespective of account statement, irrespective of account statement. So due to that reason we need to take as and when the payments are actually received. Whereas that 80,000 rupees whatever we are collecting is based on account statement. So for that we need to take the account statement date. That is the meaning of which date on which account statement is issued or the payments are received, as the case may be, should be taken. Whereas in normal cases we need to check whether supply involves movement of goods or supply does not involve movement of goods. If supply involves movement of goods, at the time of removal. If supply does not involve movement of goods, at the time of delivery. For example, now you are placing an order with me. I am moving the goods from one location to another location. Now in this case, if supply involves movement of goods, we need to see at the time of removal. Means whenever I am removing from my place, that should be taken. When supply does not involve movement of goods, at the time of delivery. So whenever I am handing over the goods to you, that should be taken as the due date of invoice. So 3 provisions. So tell me what are the 3 provisions? First, supply, like normal cases. When normal cases will applicable if there is no continuous supply of goods or sale on approval or return basis. Normal cases, 2 points. Supply involves movement of goods at the time of removal. Supply does not involve movement of goods at the time of delivery. Then sale on approval or return basis. Last case, sale on approval or return basis. Whenever he accepts, or 6 months from the date of removal, whichever is earlier. And next, continuous supply of goods. In case of continuous supply of goods, if the payments are based on account statement date. If the payments are irrespective of account statement, the payment received date. That should be taken. Then look into the next one. In case of service also we have 3 provisions. So if you are not remembering the subsection also, it is okay, but at least remember the section 31 and the situation, because you know for which situation what should be taken as the due date of invoice. Then look into for services. For services, again we have normal cases, continuous supply of services, cessation of services. What is cessation of services? Abruptly stopping the service is known as cessation of services. Example, an actor enters into contract with the producer and to act in the movie, he acts for 5 days. After 5 days, he abruptly stops, acting in the movie. But for 5 days, he need to get remuneration for which he will raise invoice. That is known as cessation of service. So immediately upon cessation, he need to raise the invoice. But it's immediately upon cessation. Then we have continuous supply of services. What is a continuous supply of service? You can see here, a service which takes more than 3 months to complete and involves periodic payment obligation, that is known as continuous supply of service. Example, renting is a continuous supply of service. Usually renting is for 11 months. Monthly rent will be payable. that's a continuous supply of service. Construction is a continuous supply of service because it takes more than 3 months to complete the construction and involves periodic payments. Even your CA intermediate coaching is also a continuous supply of service because it takes more than 3 months to complete CA intermediate coaching, I mean regular batch, correct? And whether it involves periodic payment obligations, no. That's why it is not a continuous supply of service. Is it clear? Because everywhere you have to pay the fees first and then you need to join. Why like that? Because first initially and all classes will be nice only, but thereafter as we progress, after 1 month or 2 months only, we will know the reality. Because initially and all, you know, like some good faculty will be coming and taking because fees needs to be collected, no. And thereafter what will happen? So we will know the true reality. At that time, if there is installment facility, first installment only we will pay, second and third installment we will not pay. That's why fully they will collect upfront itself. So is it a continuous supply of service? No. Why it is not a continuous supply of service? Because it should take more than 3 months to complete and involves periodic payment obligation, then only it is called as a continuous supply of service. So in case of continuous supply of service, 3 situations are there. Number 1, due date of installment is ascertainable from the contract. What does it mean? In the contract clearly we know what is the due date of installment. Okay, due date of installment means, say for example they will be telling, so by 30th September you have to pay this much, by 8th of October you have to pay this much, and by 25th of December you have to pay this much, like the dates are given. So that particular date is the due date of invoice for that particular amount. So due date of installment ascertainable from the contract, such date of installment will be taken as the due date of invoice. Due date of installment not ascertainable from the contract. Not ascertainable from the contract means what? So in the contract we are not able to find the due date of installment, but the payment is linked to completion of event. So they will tell in construction and all, once you complete the pillars you have to pay this much. Once you complete the wall and tiling work you have to pay this much. Once you complete first floor you have to pay this much. Once you complete painting work you have to pay this much, like that. They will be connecting it to a milestone event or a completion event. So whenever that event gets completed, so whenever the pillar laying work is completed, whenever the first floor is completed, so the payment will arise. So that will be taken as the due date of invoice. So if the payment is linked to completion of event as and when the event is completed. Suppose if due date also not ascertainable from the contract, payment is also not linked to completion of event, then what will be taken? Due date of installment not ascertainable. So therefore the date on which payment is received. So whenever the installment is received, for example we enter into contract, there is nothing specified, due date of installment also not there, date of completion of event also not there, nothing. So then usually the recipient will pay in installments now. Whenever they pay the installment, that installment date will be taken as the due date of invoice. Is it clear? So 3 points. Next, we have normal cases. In normal cases there are 2 sectors divided. Banking sector, insurance sector, it is 45 days from the date of completion. In all other cases 30 days from the date of completion, that will be taken as the due date of invoice. For banking or insurance how much? 45 days from date of completion. Others how much? 30 days from date of completion. Okay, so this is about due date of invoice. So total 6 provisions, 3 provisions for goods and 3 provisions for services. Okay, just 1 second. Okay, so now we will proceed on to the next area, that is time of supply in case of goods and services. What should be taken as the time of supply in case of goods and in case of services? You can see this chart. So we have different provisions, but in these different provisions we have different sections. So you can see generally time of supply in case of goods is given in section 12, in case of service is given in section 13. Liability to pay GST is based on time of supply. I told you the first objective of time of supply is what? To determine the due date of payment of GST. So when will I pay GST to government depends upon the time of supply. So that is given in 12 subsection 1, 13 subsection 1. Then 12 subsection 2, 13 subsection 2 talks about time of supply in case of forward charge mechanism, and 12.3 and 13.3 talks about time of supply in case of RCM. Then 12.4 and 13.4 talks about time of supply in case of vouchers, and 12/5, 13/5 time of supply in residual cases. 12/6, 13/6 that will be time of supply in case of interest, late fee or penalty for delay in receipt of consideration. Okay, so this will be section 13 subsection 6. Okay, so if you observe for 12/4 and 13/4, 12/5, 13/5, 12/6, 13/6, not only the situations are same, even in these three places the provisions are also same, which means you don't have to remember different provision for goods and different provision for services. The provision will be same, let it be goods or services. Whereas in this case, goods under FCM, service under FCM, goods under RCM, service under RCM, we have different provisions. So therefore first we need to understand what is the time of supply in case of goods under FCM. That is first point. Second point, we need to know what is the time of supply in case of services under FCM. Then third point, what is the time of supply in case of goods under RCM. Then we need to know what is the time of supply in case of services under RCM. These 4 points, and there are different provisions between goods and services for this. Thereafter, vouchers, residual cases, time of supply in case of interest, late fee, penalty, these three between goods or services, same point, you don't have to remember separately. So fifth point, you need to remember what is the time of supply in case of vouchers. Then sixth point, time of supply in residual cases. Then seventh point, time of supply in case of interest, late fee or penalty for delay in receipt of consideration. So these 7 points if you complete, so with that the time of supply is over. Okay, so the 7 points only you need to remember. What is the first point? Time of supply in case of goods FCM, then services FCM, goods RCM, services RCM, vouchers, residual cases, interest, late fee, penalty for delay in receipt of consideration. Look into the first one, time of supply in case of goods under FCM. Section 12 subsection 2 read with notification number 66 of 2017. I asked you to remember few notifications. So in that few notifications, first I asked you to remember notification number 12 of 2017. What is this notification number 12 of 2017? So services, exempted services, correct? Exempted services. The list of exempted services is given in notification 12 2017. Thereafter we have notification number 13 of 2017. What is notification 13 of 2017? That is services under RCM. Services under RCM. That is notification 13 of 2017. The next one that you need to remember is notification number 66 of 2017. Notification 66 of 2017 contains time of supply. Time of supply in case of goods under FCM. Time of supply in case of goods under forward charge mechanism. That provision is in notification 66 2017. So these three notifications you need to remember, and wherever possible in the exam you only should create the opportunity to write the notification numbers, okay, so that they will feel like okay fine, so this person has read lot of information, notification number and all he is writing, so he is intelligent fellow, like that they will think. Okay, so therefore this three notification numbers you remember. Coming back to this, so time of supply in case of goods under FCM, so what should be taken for two people? For those two people, person opting for composition scheme or supply of specified actionable claims. What are specified actionable claims? HC block. What is HC block? H for horse racing, C for casinos, B for betting, L for lottery, O for online money gaming, G for gambling. So in these cases, what should be taken as the time of supply? Due date of invoice or actual date of invoice or date of payment, whichever is earlier. So due date of invoice, actual date of invoice or date of payment, whichever is earlier will be taken. In other cases, what will be taken? Due date of invoice or actual date of invoice, whichever is earlier, which means whether GST payable on advances in case of a person opting for composition scheme. Yes, carefully listen. In this month I received the money, but next month I am raising the invoice. Thereafter next month only, the due date of invoice will come. Whichever is earlier is this month, which means on advances should I pay GST? Yes, because date of payment is also one date, whichever is earlier. Whereas if you see other cases it will be what? Due date of invoice or actual date of invoice, whichever is earlier. Okay, due date of invoice or actual date of invoice, whichever is earlier will be taken. Due date of invoice means the date by which invoice needs to be given. What is the date by which invoice needs to be given? Already we discussed. This is the due date by which invoice needs to be given. Or actual date of invoice. Actual date of invoice means the actual date on which invoice is actually given. So whichever is earlier will be taken. For example, due date of invoice is 15th October. Actual date is 18th October. Whichever is earlier is 15th October. If the due date is 15th October, actual date is 10th October. So whichever is earlier will be 10th October. So tell me what is the first point you need to remember. Come on. Time of supply in case of goods under FCM. Two classifications. What is that? Person opting for composition scheme and specified actionable claims. 3 points. Due date of invoice, actual date of invoice, date of payment, whichever is earlier. Others, due date of invoice, actual date of invoice, whichever is earlier. Then next one, time of supply in case of services under FCM. In this case, just we need to check whether the invoice is given within the due date or not given within the due date. If invoice is given within the due date, actual date of invoice or date of payment, whichever is earlier. If invoice is not given within the due date, then date of completion or date of payment, whichever is earlier. Just 2 points pa. You need to check whether the invoice is given within the due date. If yes, actual date of invoice or date of payment. If not given, completion date or payment date, whichever is earlier. Let's try to understand this with the help of this example. See this example, serial number 1. So date of completion is 13th March. And what is the date by which invoice needs to be given? So invoice needs to be given by 30th day. Because what is the due date of invoice? Normal cases. Services normal cases. Services normal cases. What is the due date of invoice? 30 days from the date of completion. So what is the date of completion? 13th March. 13th March, 30 days means, so by 12th April, the invoice needs to be given. Okay. And say the invoice is given on 12th April only. Exactly by due date they have given the invoice. Now, as invoice is given within the due date, invoice is given within the due date. So what should be taken? Actual date of invoice or date of payment, whichever is earlier. Which is earlier? 12/4 is earlier. If 12/4 is the time of supply, I told you, if time of supply for a transaction falls in a month, we need to pay GST by next month 20th. What is next month 20th? 20th of May. By 20th May, we need to make the payment. Is it clear? Then next one, suppose if date of completion is 13th March and the actual date of invoice is 13th April, means there is a delay in invoice by 1 day. Actually, invoice should be given within 30 days. Exactly 1 day there is a delay. So beyond 30 days. Now, whether invoice is given within the due date? No. So we need to take date of completion or date of payment, whichever is earlier. Which is earlier? 13th March. If 13th March is the time of supply, next month due date, next month 20th will be due date, that is 20th of April. 20th April. So therefore here what happened? So there is a delay in invoice by 1 day. As there is a delay in invoice by 1 day, what happened to the due date of GST? It got preponed by 1 month. That is the consequence. Got it? So therefore, again I am repeating 2 points you need to remember. First one, time of supply in case of goods under FCM. So composition scheme, specified actionable claim, 3 dates, invoice date or payment date or due date of invoice, whichever is earlier. Whereas here just the invoice date. Which date? Due date or actual date, whichever is earlier. Then time of supply in case of service under FCM. Check whether invoice is given within the time. If yes, invoice date or payment date, whichever is earlier. If not given within the time, completion date or payment date, whichever is earlier. Then next one, time of supply in case of goods under RCM. We need to take 3 dates, whichever is earlier. That is date of receipt of goods. So whenever it is RCM, from whose point of view you need to check the time of supply? Recipient point of view. Because in case of RCM, the liability to pay GST is on recipient. Okay. So time of supply in case of goods under RCM, date of receipt of goods or date of payment to supplier or 31st day from the date of invoice by supplier, whichever is earlier will be taken. So whenever the recipient has received the goods, whenever the recipient has made payment to supplier or 31st day from the date of invoice by supplier, whichever is earlier will be taken as the due date of invoice in this case. Time of supply in this case. Is it clear? So even if the supplier gives the invoices on time, but the recipient may not report it on time. So recipient may delay receipt of goods, recipient may delay making payment to supplier. That's why they brought in this 31st day. That cannot be delayed now. Invoice already given by supplier. So the recipient has to make the payment. If he is not making payment, or if recipient is not reporting the transaction in his records, even then 31st from the date of invoice will be earlier, so that will be taken as time of supply and the liability gets arised. Then next, in case of services under RCM, service under RCM, so we need to take just one point, date on which payment is made to supplier, or 61st day from the date of invoice by supplier, whichever is earlier. For your May 25 exam, just remember this provision alone. So here we have 3 dates: date of receipt of goods, date of payment to supplier, or 31st day from the date of invoice. Here we should not take that, so date of receipt of goods. Here just date of payment to supplier, or instead of 31st day it will be 61st day, whichever is earlier. That's it, okay. And this provision is amendment for September 25 exam, which you don't have to bother now. Then generally in case of self invoice, what is self invoice? Generally who will give invoice to whom? Supplier will give invoice to recipient. But in some cases, when the supplier could not issue the invoice because the supplier is unregistered and the recipient is registered, and the recipient is liable to pay GST under RCM, then recipient will be giving invoice to the supplier. What is the time limit within which that invoice to be given? Within 30 days. Invoice to be issued by recipient to supplier in case the supplier is unregistered and the supply is covered under RCM. What is the time limit to give that invoice? 30 days from the date of receipt of goods or services. Then next one, so we completed 4 provisions: goods FCM, services FCM, goods RCM, services RCM. Then we have vouchers. Vouchers are divided into 2: identifiable voucher, non-identifiable voucher. Identifiable voucher means can be redeemed against a particular product or a particular service, means you cannot use it for any other, only for a particular product or particular service, then it will be coming under identifiable voucher. For identifiable voucher, what should be taken? We need to take the date of issuance of voucher. Example, Domino's 1 regular pizza voucher. So whichever day the voucher is given to you, that date itself that pizza is considered to be sold and they need to pay GST. So date of issuance of voucher. Now say you are healthy conscious person, so you will not eat pizza and all, and you got 1 Domino's voucher. You are not eating pizza, means you are not redeeming it. When you are not redeeming it, but they already paid GST considering it as sale, what pa? The date of issuance of voucher itself they would have paid GST na, but you are not redeeming it. Then in that case what will they do? So already they paid GST unnecessarily, so they will get the refund. See, first thinking that the pizza is sold, they paid the GST, but you are not redeeming, and the voucher will have a validity. The validity expires. When the validity expires, so definitely whatever GST they have unnecessarily paid, that they will get as a refund, okay. Whereas non-identifiable voucher, you see, in case of non-identifiable voucher, what will be taken as the time of supply, date of redemption of voucher. So whenever the voucher is being redeemed, that will be taken, can be redeemed against any product or service of supplier. Example, Zudio 500 rupees voucher. Now when you get a Zudio 500 rupees voucher, you can go to Zudio and buy anything. What and all you can buy? Dress you can buy, perfume you can buy, footwear you can buy. What pa? Then else, what else? Socks and all also they will be selling, and accessories also they will be selling, correct? So anything can be purchased in Zudio using that 500, means it is identifiable or non-identifiable? Non-identifiable. So what should be taken as the time of supply? Date of redemption. Whenever you are actually redeeming the voucher, that should be taken, okay. So therefore in this case the payment of GST unnecessarily will not arise, because I am the shopkeeper. Whenever you come and redeem, then only I will pay GST. Today I will not pay GST. What if you are not coming and redeeming? The GST liability itself will not arise in my case, and this is common for both goods and services. That's why I gave you, so one example for service, one example for goods. Is it clear? So next, you can see 6th point, time of supply in residual cases. Time of supply in residual cases, so when it will be applicable? So time of supply in residual cases, that we will understand. That is, go to point number 4 in the next page. Next page to next page there is one point, so have a look into that. Goods under FCM, or service under FCM or service under RCM? Can you please tell me this provision once? Goods under FCM, sorry, goods under RCM. Goods under RCM, date of receipt of goods or date on which payment is made to supplier, or 31st day from the date of invoice, whichever is earlier. And what if one date is not available? Out of these three, one date is not available, then you cannot determine the time of supply, correct? Second, service under FCM. Service under FCM, either due date, due date, actual date of invoice. If the invoice is within the due date, actual date of invoice or date of payment, whichever is earlier. If invoice not within due date, completion date or payment date, whichever is earlier, correct? Whereas services under RCM, date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. In these provisions, any one date is not available. Any one date is not available. Time of supply cannot be determined as per provisions. You cannot determine. Then time of supply shall be date of entry in the books of recipient. So now whenever we enter it in the books of recipient, entry date, because it is expenditure for the recipient. Supplier, it is income. He may not report it properly, but every person will report the expenditure properly, agreed or not. See, I may not recognize my income. I may defer recognizing my income, but I will definitely recognize my expenditure, because if I recognize my expenditure, my tax liability will come down. For that reason, recipient will definitely recognize the expenditure. So when you don't have the information from supplier records, go to recipient. In recipient, there will be one date he would have passed the entry of his expenditure. That date when he passed the entry of expenditure will be treated as entry of income in the hands of the supplier. So therefore, it will be chargeable to GST on that date. So time of supply will be what? Date of entry in the books of recipient. So time of supply shall be date of entry in the books of recipient. If that is also not available, from supplier records also we don't have any information, from recipient records also we don't have any information, then what we need to do in that case? Then it will be residual cases. So what is that residual cases? 12.5 and 13.5. Now you read residual cases. You understood here when residual cases will be applicable? So what will happen first? Come on. So goods under RCM, service under FCM, service under RCM. Any one date not available, then we need to take date of entry in the books of recipient as the time of supply. If that is also not available, then residual cases. In residual cases, just 2 points, where that person is required to file the periodical returns. Whatever is the due date of filing that return, that will be taken as the time of supply. So for example, September month, what is the due date of return? 20th October. So 20th October will be taken as the time of supply. Where periodical return is not required to be filed, means what? He is an unregistered person. Unregistered person is not required to file periodical return, but registered person is only required to file the periodical return. So unregistered person, periodical return not required to be filed. So in that case, whenever they pay the tax, that date will be taken. Date of payment of tax. Is it clear? Then next one. Time of supply in case of interest, late fee, penalty for delay in receipt of consideration. What is it? Generally, whenever you are not paying the money on time, you will be, like giving me extra money. That is interest I will be charging you now. For example, I gave you a credit period of 30 days. You have not made payment within 30 days. Now you are paying after 30 days. For every day delay, I may charge you some interest. That is known as interest on account of delay in receipt of consideration. So what is the time of supply in that case? The time of supply will be as and when that interest is actually received. So as and when such amount is actually received. So generally in GST, we pay everything on accrual basis. Accrual basis means received or receivable, whichever is earlier. But in this one place alone, we will pay GST only on a receipt basis. Then look into this additional point. So we completed the 7 points. So goods FCM we saw, goods service FCM, goods RCM, service RCM. Then we saw vouchers, residual cases, interest on account of delay in receipt of consideration. So these 7 points you need to remember with the time of supply is over. Now we have some additional points based on that. Point number 1. What will be considered as the date of payment? Date of payment from supplier point of view, if you see date of entry in his books or date of credit in his bank account, whichever is earlier. Whereas from recipient point of view, if you see date of entry in his books or date of debit in his bank account, whichever is earlier. Then next, whether GST is payable on advances. In case of goods, only for 2 places GST payable on advances. What is that? Composition scheme and specified actionable claim. But in case of services, always. RCM always, because wherever date of payment is one of the date for time of supply, then if date of payment is earlier, they will pay GST on advances. So payment received before invoice, GST payable. For goods alone, we have a relaxation, correct? In all other places, we need to pay GST on advances. Then third point is up to 1,000 rupees received in excess of the invoice. For example, I have provided you some services like it is like say telecommunication services, mobile postpaid bill we will take, mobile postpaid bill. This month bill is somewhere like 1,823 rupees. So now when 1,823 rupees, what a customer will do? He will pay 2,000 rupees. So why? Because the customer don't want to pay 1,823 fraction and all, 2,000 rupees like that he paid. Why he will pay extra? Because he knows that the extra money whatever is collected will be adjusted in the next month. So what is the extra amount that is being collected? 2,000 minus 1,823. Some extra amount is collected now. That extra amount will be adjusted against the liability in the next period. That is in future it will get adjusted. Are you understanding this? So therefore I will give invoice in the next month. Now what is it they are telling? What is the excess amount? What is the excess amount? What is the excess amount here? 177 rupees I received extra. For that 177 rupees received extra, should I pay GST this month or I should pay GST next month? Logically, if you see, when will I give invoice for this 177? Next month. But when I receive the payment this month, so whichever is earlier will be this month. Usually what is the time of supply in case of services? Invoice date or payment date, whichever is earlier, that is this month itself I need to pay GST, am I right? But it will be administratively inconvenient for me. For that what they are telling is that whenever the invoice is raised, at the time itself you pay. See there, up to 1,000 rupees received in excess beyond invoice price, supplier has option to pay GST on invoice issued for such excess amount. That is, as and when invoice is issued for such excess amount, GST is payable by supplier to government. Okay, that is up to 1,000 rupees. Supplier has option to pay GST based on invoice issued for such X amount. That is, as and when the invoice is issued for such excess amount, GST will be payable by supplier to government. And to whom this is applicable? This is applicable to composition scheme dealer, supplier of HC block and supplier of services. Then next one, point number 5. Point number 5, you see point number 4 already we discussed. Point number 5, there is a supplier who is located outside India and the recipient is located in India and it is associated enterprises under Income Tax Act. That will be given in the question itself, don't worry, that they are associated enterprises. Where is supplier located outside India? Where is recipient? Located in India. It's an import of service. Generally in case of import of service, RCM will be applicable. That we learnt in Sir, CG, got salads, I for import of service, liability to pay GST is on recipient. Now in case of services RCM, what is the time of supply? Check. What is the supply? Time of supply in case of service RCM. Date on which payment is made to supplier or 61st day from the date of invoice. So date on which recipient is making payment to supplier or 61st day. There is no 61st day from invoice because usually associated enterprises will not give invoice. That's why they have brought in one more point. What is that? Date of entry in the books of recipient. So time of supply is the date of payment to supplier. So whenever recipient makes payment to supplier or date of entry in the books of recipient, whichever is earlier will be taken. Okay. Then we have two circulars on time of supply. So these two are the latest amendments that is applicable for May 25 exam. First one, what is the time of supply in case of construction of hybrid annuity model projects to NHAI? So usually in hybrid annuity model projects, what will happen is that first we will be entering into contract with Highway Authority of India. We are a builder. We will lay down, for example, L&T. We will lay down the road, and not only laying down the road, during the period we will do maintenance also of the road, because road once we lay down, it will not be the same forever. So if rain comes or if summer season happens, because of which definitely there will be some damages to the road. So due to that reason, I need to do the repair work to the roads. So maintenance also I am doing for a period, say for a period of 10 years like that, I will enter into contract. In this 10 years, what I will do? I will get the money from government. I will get the money from government in the form of annuities. I told you, generally toll charges is exempted. but consideration collected by way of annuities will be taxable. So now, where it will be coming? Will it come under continuous supply of services? Yes, because first it is a service. Construction is a service. Is it taking more than 3 months to complete? Yes. And whether it involves periodic payment obligation? Yes. Installments is involved. So it's a continuous supply of service. Understood up to this? Now, for continuous supply of services, what is the due date of invoice? Just turn the pages and see. What is the due date of invoice in case of continuous supply of services? If due date of installment is ascertainable, if due date of installment is ascertainable, the due date of such installment is the due date of invoice. If the payment is linked to completion of event, as and when the event is completed, and in the absence of that, the date on which payment is received. Correct? Now, go to services under FCM. It's a service under FCM. Service under FCM, what is the time of supply? If invoice is given within the due date, invoice date or payment date, whichever is earlier. Invoice not given within due date, completion date or payment date, whichever is earlier. That is the twist here. Completion date. Sir, invoice date is the date on which they give, or payment whichever is earlier. But what if the invoice is not given within the due date? If invoice is not given within the due date, completion date or payment date whichever is earlier, what should be taken as a completion date? So completion is actual completion. We don't know when it will take. For that reason, they have brought in a circular and they are telling the due date of installment is there na, that itself will be taken as date of completion if the invoice is not issued within 30 days. So completion date or payment date, whichever is earlier. Have a look into this. In hybrid annuity model contract, HAM contract is a single contract where the supplier is responsible for both construction of highway and its operation and maintenance over a period of time. It is a continuous supply of service, and due date is determined as per section 31 subsection 5 and time of supply as per section 13 subsection 2. Installment payable by NHAI. Every installment will have interest component also. Every installment will have an interest component also. Interest component should be included, correct? Generally on interest also GST will be payable. But whether we need to pay GST on interest based on receipt basis, yes. But in this case, usually it is a part of installment. So if interest alone is separately received, whenever you are receiving the interest, you need to pay GST. But interest is including the installment. So whenever the installment time of supply, we need to go by that only. So installment payable by NHAI include interest component, which is part of value as per section 15(2)(d). So write down one more point. So date of installment, due date of installment, due date of installment, due date of installment, due date of installment is deemed to be due date of invoice. Sorry, is deemed to be date of completion. Is deemed to be date of completion. So whenever the installment is due, that date itself will be taken as the date of completion. Due date of invoice is deemed to be the date of completion. Next, in relation to this, I have given one amendment based question. You can have a look into that amendment based question for this. This question is in page 53, page 53, question number 7. Page 53, question number 7. Larsen and Toubro has entered into hybrid annuity model contract with the National Highway Authority of India for the construction, operation and maintenance of a highway. The contract specifies that L&T will receive payments in 20 equal installments over 10 years. Each installment is rupees 10 lakhs, which includes 1 lakh as an interest component. The deemed date of completion of milestone event is 30th June 2024. The due date for the first installment is 1st July 2024. However, L&T issued the invoice for the first installment on 5th July and the payment was received on 15th July. The applicable rate of GST for such contract is 18%. Now, up to this clear. What is the due date of invoice as per section 31 subsection 5? So whether it takes more than 3 months to complete? Yes sir, 10 years. 10 years. and whether there is periodic payment obligation. Yes, installment facility is there. No doubt it is a continuous supply of service. For continuous supply of service, what should be taken as the due date of invoice? Check whether payment due date of installment is ascertainable in the contract. Checking the question whether due date of installment is ascertainable in the contract. Yes, because they are telling the due date of first installment is, the due date of first installment is 1st July 2024. So this 1st July 2024 itself will be taken as the due date of invoice. If due date of installment is ascertainable from the contract, the due date of installment will be taken as the due date of invoice. So 1st July 2024 will be taken as the due date of invoice. Is that clear? Clear pa? Due date of invoice. Second point, what is the time of supply as per section 13 subsection 2, and what is the due date of payment of GST? Check whether invoice is given on time. When the invoice is given for first installment, when the invoice is given 5th July, is it within time or beyond time? Beyond time. When invoice is not given within the time, what will be the time of supply for services? Completion date or payment date, whichever is earlier. What is the completion date? No, 1st July should be taken. Why 1st July should be taken? That's a point which we discussed right now. Due date of installment is deemed to be the date of completion. Okay. So therefore, what is deemed as the date of completion? 1st July. 1st July or 5th July, whichever is, 1st July, or payment date is 15th July. So see there, time of supply for first installment is date of completion or date of payment, whichever is earlier. As invoice not issued within due date, what will be considered as the date of completion? The due date of installment is there na. The due date of installment itself will be taken as the date of completion. That date or payment date. What is payment date? 15th July. Whichever is earlier is 1st July. If 1st July is the time of supply, what is the due date of payment of GST? Next month 20th. What is next month 20th? 20th of August. Due date of payment of GST for such installment is 20th August 2024. That is due date of GSTR 3B for July 2024. Is it clear? Next pa, next. Calculate the GST liability for the first installment. Simple. The first installment is what? 10 lakhs including 1 lakh. So 10 lakhs should be taken. Interest should be included. On the 10 lakhs, what is the rate of GST? 18%. So 10 lakhs into 18%, 1 lakh 80,000. Then fourth one, what will be the time of supply if the invoice is issued on 1st July, and what is the due date of payment of GST? If invoice is issued on 1st July, what is the due date? 1st July. Invoice also issued on 1st July, means invoice issued within the time. When invoice is issued within the time, what should be taken? So date of invoice or date of payment, whichever is earlier. What is the date of invoice? 1st July only. Date of payment is 15th July. Still the answer is same. Correct? See there, time of supply will be date of invoice 1st July, date of payment 15th July, whichever is earlier is 1st July. So next month 20th we need to make the payment. That is 20th of August. Then come back to this. One more circular is there. What is time of supply in case of spectrum allocation? What is the time of supply in case of spectrum allocation services by government to telecom operators? Usually government will have spectrum, that is radio frequency waves, which is given to whom? Telecom companies. For what purpose? Telecom companies will use it for the purpose of voice, data transmission, etc. and all. So this spectrum, whenever they are allocating to the telecom companies, they will be collecting so this charges and royalty. So it is also a continuous supply of service. And we have discussed one point in exemptions, services provided by government to business entities. In that 14 specific exemptions, one point we have seen assignment of right to use telecom spectrum before 1/4/2016. Both one-time charges and annual royalty is exempted. But this is not before 1/4/2016, it is after 1/4/2016. Usually there are two options which are given to telecom companies. Either they can pay upfront amount, so lump sum amount they can pay, or they can pay in installments. Suppose if the upfront amount is paid or installment amount is paid, concentrate. What should be taken as the time of supply? Whenever the payment is due or whenever the payment is actually made, whichever is earlier. So simple time of supply. They created a new time of supply provision here. Got it? Whenever the payment is due or whenever the payment is actually made, whichever is earlier. See there, see there. So due date of invoice under section 31 subsection 5, the tax invoice should be issued by the telecom operator on or before the due date of payment. Therefore, GST liability arises when the payment is made or the payment is due, whichever is, very good, whichever is earlier. GST liability arises when the payment is made or the payment is due, whichever is earlier. And what will be the due date of invoice? That is not relevant. Not relevant. We don't have to bother about this due date of invoice. Whenever the payment is made or whenever the payment is due. This is for upfront amount. Whereas for deferred payment also same. Whenever the payment is made or whenever the payment is due. Okay. So therefore, GST liability arises as and when the installments are due or whenever the installments are paid, whichever is earlier. How do we know the installments? One frequency assignment letter will be given by telecom companies. So by the government to telecom companies, frequency assignment letter issued by Department of Telecommunication to telecom operator. So there we have the installment. Can that be taken as the invoice? No, that is not the invoice. That cannot be considered as invoice. Really an invoice needs to be given. Okay, that invoice to be given by the regular time limit. What is the regular time limit for giving invoice for continuous supply of service? The same will be applicable. But the time of supply alone, the time of supply alone will be whenever the payment is due or whenever the payment is made, whichever is earlier. So that's it. With this we completed time of supply provisions. So we have first due date of invoice, then time of supply for goods, time of supply for services, then some additional points we discussed, and this circulars on time of supply. Now related to the second circular, amendment, I have given one more question. In questions on amendments, have a look into that. Question number 8. Question number 8 you can see. In question number 8, Reliance Jio has successfully bid for the allocation of spectrum by the Department of Telecommunications (DOT) under the Government of India spectrum allocation model. The total bid amount for the spectrum allocation is rupees 1000 crore. Reliance Jio is given two payment options. Option 1, make a full upfront amount of 1000 crore on or before 30th June 2024. Option 2, pay in 10 equal annual installments. The first installment is due on 1st July with each installment comprising both principal and interest. The installment amount considering an annual interest rate of 10% is as follows. Okay, so they have been given two options. Option 1, either they will pay upfront amount of 1000 crores or they will pay over installments. Each installment there is an interest component also. So total 10 installments is given. Now the frequency assignment letter from DOT, Department of Telecommunication, specifies these payment options and also states that GST at the rate of 18% is applicable on the spectrum allocation. Assume that the invoice is issued by Department of Telecommunication on 15 June 2024. You are required to determine the following. Determine when the GST liability arises if Reliance Jio opts for full upfront payment and calculate the GST amount payable. Assume that the payment is made on 28th June 2024. Suppose if it is full upfront payment option, what will happen in full upfront payment option? Date of payment made or date of payment due. So what is the date on which payment is due? 30th June. And what is the date on which payment is made? 28th June. Whichever is earlier, 28th June will be taken as the time of supply. Easy. Second, what will be your answer in one above if the payment is made on 5th July and such delay is condoned by Department of Telecommunication? What is the payment due? 30th June. When the payment is made? 5th July. Whichever is earlier, 30th June. And what is the GST payable? So how much is the money? 1000 crores na. On the 1000 crores they need to pay GST. Then next, suppose third point, determine the GST liability timing and amount if Reliance Jio chooses to pay in installments. Suppose if they are going for option 2, installments, and specifically calculate the GST payable for the second installment if the payment is made on 30th June 2025. So simple. Second installment due date is what? Second installment when we need to make the payment? 1st July 2025. When the payment is actually made? 30th June. Whichever is earlier, 30th June. What is the second installment amount? Second installment amount 144 crores. 144 crores into 18%, 25.92 crores. And if 1st July, 30th June is the due time of supply, next month 20th will be the due date of payment of GST. Then 4, what will be your answer in 3 above? If the payment is made on 4th July and such delay is condoned by Department of Telecommunication. So 4th July, what is the date by which it is due? 1st July. And when the payment is actually made? 4th July, whichever is earlier, that is 1st July. 1st July means 20th August will be taken as the due date. Understood here? So out of these two questions, any one question you can expect for this May 25 exam, because there is an amendment related to this. I think Jan exam already they asked on HAM contracts. Okay. So therefore second question is possible. This one about that spectrum allocation. Spectrum allocation possibility is there. Then, so please look into the concept grill questions on time of supply. Concept grill questions on time of supply, page number 22 and 23. 22 and 23. So total some 12 questions are there. So we will do it 5 like that. Okay. So come on, start with the first 5. You refer the book and you arrive at the answer. Okay, write in pencil or some other page, so that even if it is a mistake, we can correct it. Live stream ported. Okay, finished. 5. See the first one. ABC Limited received an advance payment of 1 lakh from XYZ Private Limited on March 1st, 2024 for supply of goods. The goods were dispatched on March 10 and the invoice was issued on March 12, 2024. First of all, we need to check whether it is goods or services. Is it goods or services? Goods. And we need to determine the time of supply. What will be taken as a time of supply for goods? Is it composition scheme, goods under FCM or RCM? Total 7 points are there for time of supply. Goods FCM, correct? RCM not given, so goods FCM. So in case of goods FCM, how to determine the time of supply? So write down goods under FCM. Goods under FCM. What will be taken as the time of supply? A. Due date of invoice. What is due date of invoice? Due date of invoice, when the invoice needs to be given. So again we need to refer to due date of invoice provisions. Is it sale on approval or return basis? No. Is it continuous supply of goods? No. So is it covered under that what is that point? Normal cases. Yes. Normal case also again too. Supply involves movement of goods, supply does not involve movement of goods. What is it? Supply involves movement of goods. So when supply involves movement of goods, what will be taken as the time of supply? Date of removal. So here supply involves movement of goods. How you know? The goods were dispatched. When you see the words dispatch, means supply involves movement of goods. They are dispatching it from one location to another location. So what is the date on which the goods are dispatched? 10th March 2024. Or B. Actual date of invoice. What is actual date of invoice? March 12. So date of payment is relevant or not relevant? Not relevant. So whichever is earlier. Whichever is earlier. Which is earlier? That is 10th March 2024 is earlier. So due date of invoice 10th March, actual date of invoice 12th March, whichever is earlier will be 10th March. That will be taken. Suppose if they are under composition scheme or specified actionable claim, so one more date we should have been taken, that is date of payment, but here it is not required. Is it clear? Then look into the next one. Second one, PQR Limited provided consultancy services to MNO Limited on 1st April 2024. The invoice was issued on May 10. Payment was received on May 20. Consultancy services. So whether consultancy services is under RCM? No. So where we have consultancy service in RCM? Sir, CG got salads. Nowhere we have. So therefore it is coming under FCM. Services under FCM. In case of services under FCM, what is it we need to check? Check whether invoice is given within the due date or not given within the due date. So invoice is to be given by what time? 30 days. Usually what is the time limit for giving invoice? 30 days. So 30 days from the date of completion. What is the date of completion here? 1st April. So 1st April, May 10. Is the invoice given on time? No, not given on time. So therefore we need to take date of completion. What is the date of completion? Date of completion will be 1st April 2024. Or B, date of payment. What is the date of payment? Date of payment will be 20th May 2024. Whichever is earlier. Which is earlier? Whichever is earlier. Which is earlier? That is 1/4/2024 is earlier. Then next, DF Limited entered into contract with GHI Limited on January 1, 2024 for supply of IT services over 12 months. So it is taking more than 12 months to complete. Milestone payments are due every 3 months. So means continuous supply of services. And the first milestone event was completed on March 31st and the invoice was issued on April 5, 2024. So again it is what? Services are goods are services. And whether it is coming under RCM? No. Construction, it's not coming under RCM. So it will be FCM. So therefore services under FCM. In case of services under FCM, what should be taken as the time of supply? If invoice is given within the due date, then invoice date or payment date, whichever is earlier. If invoice not given within due date, completion date or payment date, whichever is earlier. What is the due date here? What is the due date here? Due date is continuous supply of service. It's a continuous supply of service. As per continuous supply of service, what should be taken as the due date of invoice? If the due date of installment is ascertainable. The due date of installment will be taken as the due date of invoice. What is the due date of installment? Ascertainable or not ascertainable? Due date of installment is ascertainable or not ascertainable? Not ascertainable, not ascertainable. They are telling payment is linked to completion of event, because whenever the event is completed, at the time only the payment will be received, correct or not? So due to that reason, due date is date of event, date of event, that is 31st March 2024. Whether invoice is given within the time limit? No, because the date of invoice was April 5. Again I am repeating, concentrate. First it is service under FCM. For service under FCM we need to check whether invoice is given within the due date or not. What is the date on which invoice is given? April 5. What is the due date? For due date we need to go to continuous supply of service. Due date of installment not ascertainable, but the payment installment is connected to completion of an event. So when the event is completed, 31st March, that event itself, date itself is the due date of invoice. Okay, so due date of invoice is date of event, that is 31st March, and invoice not given within due date. So we need to take date of completion or date of payment, whichever is earlier. What is the date of completion? 31st March 2024. Or date of payment, what is the date of payment? 5th April 2024. No, payment date is not available. Okay, payment date is not available. So whichever is earlier, which is earlier? So date of completion, whichever is earlier, that is 31st March 2024, will be taken as the time of supply. Are you understanding this? It's a very good question. Mark it as important. Then question number 4. ABC Limited imported goods from a foreign supplier on August 1st, 2024. Invoice is issued on the same date. The bill of entry was filed on August 5 and the goods were cleared from customs on August 10 and entry duly made in books on the same date. The payment was on August 15. It is what? Goods. Correct? Goods under FCM or RCM? RCM. Because on import of goods, importer will pay. So write down goods under RCM. In case of goods under RCM, what will be taken as the time of supply? A. Date of receipt. Date of receipt. What is the date of receipt of goods? Date of receipt of goods. What is the date on which goods are received? 10th of August. 10th of August 2024. B. Date of payment to supplier. What is the date of payment to supplier? Date of payment to supplier is 15th August 2024. Then see, 61st data, 31st data. 31st day from date of invoice. What is the 31st day from date of invoice? Invoice is issued on same date, August 1st. August 1st, 31st date is what? 30 days in August, 1 day in September. So 1/9/2024. Whichever is earlier. Just you need to remember the formula. What is that formula here? Provision is the formula. Just apply it to the question and arrive at the answer, like maths only. Okay. So date of receipt of goods, date of payment, 31st day from the date of invoice. Whichever is earlier. Which is earlier? 10th August 2024. Then next. ABC Limited provided consultancy services to XYZ Limited. The contract value was 5 lakhs. An advance of 1 lakh was received on October 1 and the final payment of rupees 4 lakhs was received on November 5, 2024. The services were completed and the invoice was issued on November 10, 2024. So what should be taken as the time of supply in this case? Goods or services? Services. FCM or RCM? FCM. So services, FCM. Services under FCM. In case of services under FCM, what should be taken? So first we need to see, there are two amounts. There are two amounts. First there is an advance. First there is an advance and there is a balance. Okay. First there is advance and there is a balance. For advance, what will be taken as the time of supply? First check whether invoice is given within the due date or not given within the due date. Usually what is the time limit for giving invoice? 30 days from the date of completion. Services pa services, 30 days from completion. What is the completion date here? When the service was completed, and the service was completed and the invoice was issued on November 10. So service also complete on November 10, invoice also issued on November 10, means invoice issued within the time. So within the time means we need to take date of invoice or date of payment, whichever is earlier. What is the date of invoice? What is the date of invoice? 10th of November 2024. And what is the date of payment? Advance. October, 1st October 2024. So whichever is earlier, which is earlier? 1st October 2024 is earlier. Whereas the balance amount, for balance amount, what is the date of invoice? Same. Date of invoice will not change, 10/11/2024. And what is the date of payment for balance amount? 15 November 2024. You can see there, balance payment was received on 15 November 2024. Whichever is earlier will be 10/11/2024 will be taken. Are you understanding this? So that's how we need to determine the time of supply. Now, out of these 5 questions, how many correct? 5 out of 5. 1 wrong. 4. Okay, good. So now do the next one, 6 to 12. 6 to 12. Read it, properly refer to the provision, and then arrive at the answer. Then only you will learn the mistake. is finished. Okay. So see sixth one, DF Limited supplies goods continuously to GHI Limited under a contract that requires payment every month. The goods for the month of July were supplied by January 31st, 2024, but the invoice and account statement was issued on February 5, 2024. The payment was received on February 10, 2024, and such payment is not based on account statement. So first we need to see time of supply in case of goods. This is goods. So in case of goods covered under FCM. So goods under FCM. Goods under FCM, what will be taken as the time of supply? Is it composition scheme? No. So goods under FCM, it's not composition scheme and it is not specified actionable claim. So therefore due date of invoice or actual date of invoice, whichever is earlier. What is the due date of invoice? It is continuous supply of goods. So whether the payments are based on account statement or irrespective of account statement, see there, the goods were supplied by Jan, but the invoice and account statement was issued on February 5 and the payment received on February 10. Such payment is not based on account statement. So means the due date of invoice is date on which payment is received. What is the date on which payment is received? February 10. So 10 February 2024, not the account statement date, the payment received date. Okay. B, whereas date of payment also same, that is due date of invoice, actual date of invoice. What is the actual date of invoice? The date on which invoice is actually given. Okay. February 5, but the invoice and the account statement was issued on February 5. So February 5 2024, whichever is earlier. This is for what? This is for the money which is received, not based on account statement, correct or not? What about the balance amount based on account statement? You write down below, for balance amount based on account statement, for balance amount based on account statement, comma, due date of invoice is 5th February 2024 and actual date of invoice is also February 5 2024, because if you observe here, but the invoice and the account statement was issued on February 5. For balance amount based on account statement, due date of invoice also same date, actual date of invoice also same date. Then next one, GHI Limited send goods to JK Limited on supply on approval basis, sale on approval basis on June 1st. JK Limited accept the goods on June 30. The invoice was issued on July 1st and the payment was received on July 15, 2024. So what should be taken as the time of supply? Again it is goods under FCM. So goods under FCM. So it is not composition scheme or specified actionable claim. So we need to take due date of invoice. What is the due date of invoice? When the invoice should have been issued. So it is sale on approval. Sale on approval, 6 months from the date of removal. So when the date of removal June 1st, 6 months, that will be July, August, September, October, November, December 1st. And when the goods are accepted, 30th June, so 30th June 2024, within the time itself it is accepted within 6 months. So the date of acceptance is the due date of invoice. So 30th June 2024. B, actual date of invoice. What is the actual date of invoice? 1st July 2024, whichever is earlier. So that is time of supply is 36 2024. Then 8th one, MNO Limited entered into a contract to provide consultancy services to UVW Limited for a period of 1 year starting January 1, 2024. An advance payment of 2 lakhs was made on January 1st. However, the contract was terminated early on June 30. A final invoice was issued on July 5 for the services rendered and the payment was received on July 15. So what will be taken as the time of supply in this case? So it is goods or services, services, and the contract got terminated. So be careful with respect to this. It is services under FCM. Services under FCM. In case of service under FCM, we need to see whether the invoice is given within the due date or not. So what is the due date of invoice? What is the due date of invoice? When the invoice should have been issued? It is termination, means abruptly stopping the service, cessation of service, immediately upon cessation. When the contract was terminated, the contract was terminated on June 30. So 30th June 2024. Check whether invoice is given within the time limit. No, invoice was given on July 5, beyond. So therefore what will be taken as the time of supply? Date of completion or date of payment, whichever is earlier. So first we have advance. What is the advance amount that is received? Date of completion. So date of completion, when they completed 30th June 2024, and date of payment, when the payment was received. So January 1st itself, January 1st 2024, whichever is earlier. Whichever is earlier is 1st January 2024. Is it clear? And balance payment. What about the balance payment? For balance payment, date of completion is 36 2024. For the services rendered, the payment was received on July 15. So 15th July 2024, the balance amount is received. For that, whatever is earlier will be 36 2024. You got this? Very good. So because it is connected to cessation of service. Actually every question is independent, like every question is unique. One is on one concept. Okay. Then 9th one, ABC Limited located in India receives consultancy services from its associated enterprises in the USA. The services are recorded in ABC Limited books on 1st March and payment is made on 15th March. What is the time of supply in this case? First, whether the invoice is given, this is what? Associated enterprises. So associated enterprises, we have a special provision. What is that? Import of services by associated enterprises. Import of services. Import of services by associated enterprises. So what will be taken as the time of supply? Date of payment. What is the date on which payment is made? So 15th of March, 15th of March, or B. So that is date of entry. Date of entry. Date of entry in whose books? Recipient books. See what is the date on which entry is made. The services are recorded in ABC books on 1st March. So 1st March, whichever is earlier, that is 1st March will be taken as the time of supply. The next 10th one, a retailer issues a voucher on 10th January which is redeemable for specific services. Specific services means what? Identifiable voucher. Identifiable voucher, what will be taken as the time of supply? The time of supply will be date of redemption or date of issue. Date of issue. Time of supply is the date of issue. When the voucher is issued, that is 10th of January. Date of issue of voucher Date of issue of voucher is 10th of January, will be taken as the time of supply. Then number 11, a hotel issues a general voucher on 5th May, which is redeemable for various services. The voucher is redeemed on 15 June. What will be the, when the time of supply will arise? Identifiable or non-identifiable voucher? Non-identifiable voucher. Non-identifiable voucher. For non-identifiable voucher, what will be taken as the time of supply? Time of supply is date of redemption of voucher. What is the date of redemption of voucher? When the voucher is redeemed, 15th of June. So 15th of June will be taken as the time of supply. Next, 12. A service is provided on 10th September and no invoice is issued. The recipient records the receipt of service in their books on 15th September and the payment is made on 25th September. What will be the time of supply? As there is no information from supply records, what we need to do? Services FCM, services RCM, goods RCM. When there is no information from supply records, date of entry in the books of recipient. Okay. So when there is no information, when there is no information in suppliers records, for determining time of supply, comma, date of entry in the books of recipient, is time of supply. That is, what is the date of entry in the books of recipient? 15th of September will be taken. Date of entry in the books of recipient, that is 15th September, will be taken as the time of supply in this case. Okay. If that is also not available, then residual cases we need to determine. Okay. So with this, we completed all the questions on time of supply. We will take a small break and then we will continue with, so one more interesting chapter, that is composition scheme. Okay. Okay, now we'll start discussion related to segment 9 composition scheme. So composition scheme, basically it's a simplified scheme for payment of GST at reduced rates. Rather than paying GST at the regular rate, a person who is under composition scheme will pay GST at the very reduced rate, like 1%, 5%, 6%, like that. And is this composition scheme optional or mandatory? Optional. So therefore, if the person wanted to decide for composition scheme, they can decide for composition scheme. So it is not mandatory like they should go for composition scheme like that. So it is up to them. And there are two types of composition scheme, that is composition scheme under 10.1 and composition scheme under 10.2a. And only when composition scheme under 10.1 is not possible, they go for composition scheme under section 10.2a. And the disadvantages, there are some disadvantages of composition scheme, that is, if a person is under composition scheme, they cannot take ITC on their inward supplies. So they cannot take ITC on their inward supplies. And second disadvantage is that they cannot charge GST to their customers, means they need to pay reduced rate. That reduced rate they will pay out of their pocket. So that is a disadvantage of composition scheme. And advantages of composition scheme is that total profit increases, because the sales volume will increase na. As the sales volume increases, the total profit also will increase. How the sales volume increases? I am under composition scheme, I will not be charging GST to my customer. When I am not charging GST to my customer, so definitely he will prefer me over other person who is charging GST. For example, there are two shops. Shop A which is not charging GST to you. Shop B which is charging GST to you. Same product, no change in that. So definitely you will go and buy from shop A, because they are not charging GST, so the sales volume will increase. When the sales volume increases, automatically the total profit, even though profit per unit is less. Why profit per unit is less? Because they cannot take ITC on their inward supplies and they have to pay GST out of their pocket and they cannot recover the GST from recipient. But the overall profitability, if you see, that will increase because the sales volume will increase. So advantage of composition scheme is that the total profit increases as sales volume increases, and it reduces compliance cost. Why it reduces compliance cost? Because there are a lot of benefits in composition scheme, like they don't have to maintain all accounts and records. They need to maintain only some accounts and records. What are the accounts and records to be maintained by every registered person? I formats: I for inward supply, F for foreign trade, import and export, O for outward supply, R for RCM supplies, M for manufacturing and production related records, A for advances, received, paid and adjusted, then T for tax details, S for stock details. But a person who is under composition scheme is not required to maintain tax details and stock details. Also, person who is under composition scheme, rather than filing monthly returns, are required to file quarterly returns, and they need to pay tax also on a quarterly basis. Okay, so due to that reason, so there is a reduction in the compliance cost, and compliance cost as tax is payable quarterly. So these are the advantages and disadvantages of composition scheme. Now we are starting with composition scheme under 10.1. So who can opt for composition scheme under 10.1? Any person whose aggregate turnover during the previous year does not exceed 1.5 crores, and in case of 8 states it will be 75 lakhs. What are those 8 special category states? That is M, M, T, N, U, SAM: Manipur, Mizoram, Tripura, Nagaland, Uttarakhand, Sikkim, Arunachal Pradesh and Meghalaya. So these states, it will be, we need to take 1.5 crores. Aggregate turnover during the previous year does not exceed 1.5 crores, and in case of 8 states it will be 75 lakhs. Okay, and there are some places where we have state specific information. You kindly make note of that, because so this will be helpful for you, because like different places we come across the state specific information. First, we have special category states as per constitution. So what are the special category states? What are the special category states as per constitution? As per constitution, article 279A, article 279A of constitution, there are some special category states. What are they? They are M, M, T, N. What is M, M, T, N? Manipur, Mizoram, Tripura, Nagaland. Then A, that is Assam. S for Sikkim. A for Arunachal Pradesh. M for Meghalaya, then H for Himachal Pradesh, U for Uttarakhand, and J for Jammu and Kashmir. So these are considered as special category states. So M, M, T, N, Manipur, Mizoram, Tripura, Nagaland, Assam, Sikkim, Arunachal Pradesh, Meghalaya, Himachal Pradesh, Uttarakhand, and Jammu and Kashmir. These are considered as special category states as per constitution. Then next one we have, so like states for which applicable threshold limit is 10 lakhs. So applicable threshold limit for registration, applicable threshold limit for registration, applicable threshold limit for registration is 10 lakhs. What are the states for which applicable threshold limit is 10 lakhs? Only M, M, T, N, Manipur, Mizoram, Tripura, Nagaland. These are the 4 states for which the limit is only 10 lakhs. Then applicable threshold limit, applicable threshold limit for registration, applicable threshold limit for registration is 20 lakhs. So what are the states for which applicable threshold limit will be 20 lakhs? That is M, M, T, sorry, U stamp states. What are the U stamp states? Uttarakhand, Sikkim, Telangana, then A for Arunachal Pradesh, M for Meghalaya, P for Puducherry. Uttarakhand, Sikkim, Telangana. It is Telangana. Then A normal Arunachal Pradesh, not Assam, Arunachal Pradesh, and M Meghalaya, P for Puducherry or Pondicherry. Then next one we have starting point or ending point in economy class. Transportation of passengers is exempted. Okay, so transportation of passengers by what mode? Transportation of passengers by which mode? By airways. Transportation of passengers by airways. And in this transportation of passengers by airways, in which mode? Economy. Like which class? Economy class. Economy class, where starting point or ending point, starting point or ending point in, starting point or ending point in. So transportation of passengers by airways, starting point or ending point is in which places? It is in northeastern states. What are those northeastern states? Manipur, Mizoram, Tripura, Nagaland, then Assam, Sikkim, Arunachal Pradesh, Meghalaya. So these are northeastern states. Northeastern states. Thereafter one more place is there, Bagdogra in West Bengal. So these are the states where if the starting point or ending point of the passenger is by way of economy class in airways, then it will be exempted. The transportation of passenger is exempted. Then next one, applicable limit for lower threshold limit for composition scheme. That is composition scheme under section 10(1). So what is the limit? Specified limit. Aggregate turnover limit is 75 lakhs. So what are the states for which aggregate turnover limit is 75 lakhs? You remember M, T, N. Then U SAM. MMTN same, Manipur, Mizoram, Tripura, Nagaland. Okay. Then U for Uttarakhand, S, A, M. So Sikkim, Arunachal Pradesh, not Assam, Arunachal Pradesh. Okay. So these are the states that you need to remember. So in this all the points are covered. So wherever we come across different states, everything I have given in one place. Okay. So it will be easy, and what is that MMTN etc. and all you make note later point of time. Okay. So therefore, in case of 8 states, the limit will be 75 lakhs, that is under 10(1) composition scheme. So first we are discussing composition scheme under 10(1). If my aggregate turnover during previous year does not exceed 1.5 lakhs, in case of 8 states it is 75 lakhs, I can opt for composition scheme. And to whom it is applicable? Manufacturer, trader or supplier of food service provider. However, if they are a manufacturer, trader or food supplier, food service provider, they can provide any other service. To what extent they can provide service? Up to 10% of turnover during previous year or 5 lakhs, whichever is higher. For example, so I am a manufacturer, I want to provide some after sale service. I am a trader, I want to provide some delivery service, or restaurant, I want to provide some packing service or delivery service. Then in that case, to what extent I can provide the service? See the turnover during previous year. Say the turnover during previous year is 180 lakhs. So then first of all, I will not be into composition scheme this year. Suppose if the turnover during previous year is 120 lakhs, 120 lakhs into 10% is 12 lakhs. 12 lakhs or 5 lakhs, whichever is higher, 12 lakhs. To the extent of 12 lakhs, I can provide the services and I will be into composition scheme. That is this. So however, they can provide any service up to 10% of turnover during previous year or 5 lakhs, whichever is higher. What is the benefit of reduced rates? If I am a manufacturer, I will pay 1% of total turnover. Manufacturer will pay 1% on total turnover, and supplier of food service provider will pay 5% on total turnover. And if there is a trader or service provider providing service up to 10% limit, trader or service provider up to 10% limit, so 1% of taxable turnover. Okay, 2 people, 1% of taxable turnover, that is a trader, or this 10% limit of services they provide now. In that case also 1% of what turnover? Taxable turnover. Rates you need to remember. Manufacturer 1% of total turnover. Supplier food service provider 5% of total turnover. Trader or service provider providing service up to 10% limit, 1% of taxable turnover. You remember the rates like this, but when you write in exam it should be 0.5% CGST, 0.5% SGST, because a person who is under composition scheme should not make interstate supplies. They should make only intrastate supplies due to that reason. Then what is the current year limit for the reduced rates? Current year up to 1.5 crores or 75 lakhs, they will be into composition scheme. The moment they cross at 1.5 crores or 75 lakhs, they will be disqualified from composition scheme and they will be going into regular scheme, normal scheme. Okay, and some people cannot opt for composition scheme under 10(1). You can see that in the next page. Composition scheme under section 10(1) is not applicable. But all these restrictions we need to see for the current year. Means previous year I can make interstate supplies, previous year I can make non-taxable supplies, but all these restrictions are applicable for the current year. So following restrictions are for the current year in which composition scheme is opted. You need to remember these cases where they cannot opt for composition scheme with a mnemonic S9 RCM. Section 9 is RCM, correct? Section 9 is RCM. You remember like that. Section 9 is RCM. So S9 RCM. S for service provider. Which service provider? Which service provider other than supply of food? Because only 3 people can go for 10(1). Manufacturer, trader, supplier, food service provider. Suppose if my business is a coaching, can I go for composition scheme under 10(1)? No. Beauty parlor? No. Interior decorator? No. So no service provider can go for 10(1). But these 3 people also, if they provide any other services beyond 10% limit, which 3 people? Manufacturer, trader and supplier, food service provider. If they provide service beyond 10% limit, then also they cannot be into composition scheme 10(1). That is this yes point. Okay, service provider whether taxable or exempted other than restaurant service or service up to limit allowed. N for non-resident taxable person. An NRTP cannot opt for composition scheme. Who is a non-resident taxable person? Who come from outside India to India and is engaged in supply of goods or services in India and don't have any fixed place of business in India. I already gave you an example in discussing ITC itself. What is that? So usually cricket players, right now IPL season is starting. So therefore cricket players who are coming from outside India to play the cricket will be coming under NRTP, non-resident taxable person. Can they opt for composition scheme? No. Are they required to register? Yes, they are required to register but cannot opt for composition scheme. Then I for interstate supplier of goods or services. If I make interstate supply of goods, or interstate supply of services, I am disqualified from the composition scheme. Then non-taxable supplies. What are non-taxable supplies? Alcoholic liquor for human consumption and petroleum products. If I am making that, I cannot go for composition scheme. For example, generally can a restaurant opt for composition scheme? Yes. But in the restaurant, if they are selling liquor, can they opt for composition scheme? No. They cannot opt for composition scheme because they are making non-taxable supplies. Same way, can a supermarket go for composition scheme? Of course they can go for composition scheme, no restriction. But what if the supermarket is inside a petrol bunk? They cannot opt for composition scheme because petrol and diesel is non-taxable supplies. So a person who is making non-taxable supplies cannot opt for composition scheme. Then E, supply of services through e-commerce operator. For example, generally restaurant can opt for composition scheme, but if the restaurant is selling food through Swiggy or Zomato, they cannot opt for composition scheme. Can supplier of goods through e-commerce operator opt for composition scheme? Yes. Underline here, only services is given, but goods there is no restriction, only services. Supplier of goods through e-commerce operator. For example, I am selling goods from Amazon or Flipkart. Can I opt for composition scheme? Yes, very much yes, I can opt for composition scheme. Then R for RCM. RCM under which section? 9 subsection 4. When 9 subsection 4 is applicable, there is a promoter or builder who is making purchases from an unregistered person. If they have not paid GST on that, they cannot go for composition scheme. But this point is irrelevant because first of all, their turnover will easily cross 1.5 crores. Promoter or builder, by selling one flat itself, it will be more than 1 crore. So easily they will be coming out of the composition scheme. But this point is there. So if there is an RCM under 9.4 not paid stock held as on the date of opting for composition scheme, they cannot opt for composition scheme. Then C for casual taxable person. Who is a casual taxable person? A person who is coming from other state to this state and is engaged in supply of goods or services is known as casual taxable person. But remember, if they know the recipient before providing the services, before traveling here, if they know the recipient, then they will be coming under not CTP, normal interstate supplies. For example, we have a faculty, advanced accounts faculty, Chiranjeev sir, who is from Hyderabad. Okay, he is coming to Chennai and he is taking. So is he having any fixed place of business in Tamil Nadu? No, he is not having any fixed place of business in Tamil Nadu. Also one more faculty, so Sudarshan sir, who is taking auditing. He is not from Chennai, Tamil Nadu. He is from Kerala. He is coming and taking class here. He don't have any fixed place of business. Okay. And yet another faculty by name Gautam sir. He is also law faculty. He is also from Hyderabad. They don't have any fixed place of business in Tamil Nadu. But will they be required to take CTP registration in Tamil Nadu? No, because they know recipient. Who is their recipient? THARUN'S Brainery. So due to that reason, they know the recipient. It will be interstate supplies for them. They don't have to take CTP registration. If they come here, and if they announce a batch, so we are taking classes, and if you want, you can come and join with us like that. So now in this case, when they come and take class here, they are sourcing the recipients now only. They don't know the recipient before traveling, correct or not? So now in that case, they need to get a CTP registration, casual taxable person registration. That is this. Okay. So casual taxable person. Okay, sir, if they are taking casual taxable person, can they opt for composition scheme? No. They need to take CTP registration, but they cannot opt for composition scheme. Then M for manufacture of certain notified goods. What are those notified goods? So ice cream, edible ice, pan masala, tobacco and tobacco products, then aerated waters. Aerated waters means which is, so raw material for soda industry, beverages industry, they use raw material as aerated waters. In that aerated waters, they add essences, and that's where we get different Pepsi, Coca-Cola, then Sprite, Mirinda, etc. like that. So all these things will be coming under raw material, aerated waters. Why these notified goods they cannot opt for composition scheme? Because they are telling these notified goods industry is so big that they don't want them to escape from tax liability. They should definitely. But however, if there is a trader who is supplying these goods, can opt for composition scheme. A manufacturer of ice cream cannot opt for composition scheme, but ice cream shop which is selling ice cream can opt for composition scheme. See there, the entire restriction is only to the manufacturer, not to the trader. So what are those goods here? Ice cream, edible ice, pan masala, tobacco products, then aerated waters, bricks and roofing tiles. Okay, these people cannot opt for composition scheme. Now whatever we have discussed here, these points are common even for 10-2A also. For 10 to A also these points are applicable except the first point, that is service provider, because in case of 10 to A, any person can opt for composition scheme. Any service provider can go for composition scheme. You can see here above non-applicability is same for 10 to A except that any service provider can opt for composition scheme under 10 to A. So now come back. So what is the difference in conditions? So that S9 RCM, these are the cases where they cannot opt for composition scheme. Now you understood about 10-1 composition scheme? Yes. Now look into 10 to A composition scheme. When you read 10 to A also, we need to make a comparison between 10-1 and 10 to A. So who can opt for composition scheme 10 to A? See there, manufacturer, trader and any service provider. So what is the difference? 10-1 only manufacturer, trader, supplier, food service provider. But here any service provider, a coaching center, a beauty parlor, an interior decorator or a consulting service provider, any person can go for composition scheme 10 to A. But what is the limit for composition scheme 10 to A? Aggregate turnover during the previous year should not exceed 50 lakhs. For 10-1, what is the limit? 1.5 crores or 75 lakhs. But for 10 to A, the limit will be 50 lakhs. And all states it will be 50. There is no special category states and all for this. For 10-1 only we have. Is it clear? There 150, 75. Here it is 50 lakhs. Then what is the current year limit? There 150, 75 and here it is 50. Means current year when they cross 50 lakhs, they need to come out of the composition scheme under 10 to A. And what is the rate at which they will be paying GST under composition scheme 10 to A? Only one rate, that is 6%. In that 3% CGST, 3% SGST. 6% of what turnover? Taxable turnover or total turnover? Total turnover. But under 10-1 we have multiple rates, correct or not? So manufacturer means 1% of total turnover, trader means 1% of taxable turnover, supplier, food service provider means 5% of total turnover, like that. But here it is always 6% of total turnover. And what is the difference in the conditions? 10-1, that is manufacturer of notified goods and supplier of notified services cannot opt for composition scheme in 10 to A. But actually speaking, there is no services which are notified in this regard. So supplier of notified services cannot opt, but notified service is not yet notified. So we don't have to bother about that. Got it? So therefore manufacturer of notified goods cannot opt for composition scheme. So the conditions are same. Here S9 RCM, there it will be, that is section 10-1 it will be S9 RCM, 10 to A it will be 9 RCM. Means any service provider, come on concentrate, can opt or cannot opt or can opt for 10 to A. But in 10-1 it will not be possible. Okay. Next one. What is the meaning of aggregate turnover for determining the eligibility to opt for composition scheme? So meaning of aggregate turnover. What is the general meaning of aggregate turnover? Taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies. These four will come in aggregate turnover. Two things will be minus. 4 plus 2 minus. Taxable, exempted, non-taxable, zero rated. What is minus? Inward supply under RCM and taxes will be excluded. Is it clear? But for the purpose of aggregate turnover in composition scheme, 5 plus 3 minus 5 plus taxable, exempted, non-taxable, zero rated. Extra one more, pre-registration turnover, that is before getting registered. So I have a turnover of 40 lakhs. After 40 lakhs only I need to register. Concentrate. This year I commence business. Up to 40 lakhs I will not register. After crossing 40 lakhs I got registered and my turnover after registration is 120 lakhs. So now what is my aggregate turnover for the current year? 120 plus 40. That 40 is also my turnover only. So because I am only making sales there, but I not have got registered, that is known as pre-registration turnover. 40 plus 120, 160. Next year can I go for composition scheme? No. Why next year I cannot go for composition scheme? Because the previous year it exceeds 150 lakhs. So next year I cannot go for composition scheme. Are you understanding this? So pre-registration turnover should be included. Then 3 minus. What are the 3 minus? Inward supply under RCM, because right now we are computing turnover. Turnover means what? Outward supplies. So inward supplies will not come in turnover. So inward supply under RCM will be taken out. Taxes will be taken out. That is CGST, SGST, UTGST, IGST will be taken out. And interest income, interest on loans, advances, deposits will not be taken into aggregate turnover. Are you listening? Interest on loans, advance, deposits will not be considered anywhere in composition scheme. It will be excluded. So these 8 adjustments when you make, you will be getting aggregate turnover. Whether we need to see that aggregate turnover for current year or previous year to decide the eligibility to opt for composition scheme. Previous year. See there, aggregate turnover during previous year. So we need to check the previous year turnover only. And how the aggregate turnover is computed? State wise or all India basis? Always remember A for all India. Got it? ATO, aggregate turnover, will be all India basis. Okay. So you can see this. Aggregate turnover will be computed on the basis of turnover on all India basis. Underline all India basis. All India basis means if I have business in 4 states, so all the 4 states turnover should be taken together. That is called as aggregate turnover, and will include the value of all taxable supplies, exempted supplies, exports made by all persons with the same permanent account number, but would exclude inward supply under RCM as well as GST group, and even interest income will not be considered for calculating aggregate turnover. Now, what is the meaning of turnover in a state or union territory? Where we have come across turnover in a state or union territory? If you observe 10.1, in that 10.1, I can provide service up to 10% of turnover during previous year. Here it is not aggregate turnover. Here I did not use the word ATO. Here only I use the word ATO. Here I use the word turnover. What is the difference between ATO and turnover? Both are same, except that aggregate turnover will be on all India basis. Turnover will be state wise. Aggregate turnover ATO versus turnover TO. What is extra we have? A for all India. You understood or not? So aggregate turnover will be on all India basis, turnover will be state wise. That's what I have given here. So the same meaning will be applicable even for turnover in a state or union territory. Okay, but this meaning of aggregate turnover and turnover is applicable only for composition scheme, but not for registration. For registration, the regular meaning of aggregate turnover, what is that? So 4 plus 2 minus, what are the 4 plus? Taxable supply, exempted supply, non-taxable supply, zero rated supply, and excludes inward supply under RCM and GST taxes. Got it? Next, you can see here, person opting for composition scheme can provide service up to 10% of turnover. So a person who is under composition scheme will provide service up to 10% of turnover during previous year or 5 lakhs, whichever is higher. Why 5 lakhs? For example, this is the first year in which I commence a business. So what is my previous year turnover? 0. Means this year can I opt for composition scheme? Yes. But to what extent I can provide the services? Previous year 0, 0 into 10%, 0 or 5 lakhs. So at least 5 lakh services I can provide. That's why they brought in 5 lakhs, whichever is higher. Okay. And while computing this 10% limit, don't take interest on loans, advances, deposits. For example, concentrate, please listen. Previous year, my turnover is 120 lakhs. 120 lakhs into 10% is what? 12 lakhs or 5 lakhs, whichever is higher, 12 lakhs. Now current year, I have provided services, 11 lakhs worth of service I provided, and I have 3 lakhs of interest income. Whether I cross the 12 lakhs limit or I have not crossed the 12 lakhs limit, I have not crossed the 12 lakhs limit because only services other than interest you take. So interest is also service, but don't count that for composition scheme. So 11 lakhs does not exceed 12 lakhs. So therefore current year I have not crossed the limit. Is it clear or not? So that's what, interest should not be taken into account. And for these services up to 10% limit or 5 lakhs, whichever is higher is there na. For these services, which rate should be taken? The rate applicable to trader. What is the rate applicable to trader? 1% of taxable turnover. 1% of taxable turnover, that is 0.5% CGST, 0.5% is GST on taxable turnover. Are you understanding this? Then next one, other procedural provisions. In this other procedural provision, see there, how can I opt for composition scheme? That is, if I am already registered, I need to wait till the commencement of the financial year, and before commencement of the financial year, I need to make application for composition scheme. During the financial year, can I enter into composition scheme? Not possible. But now only I am getting registered. At any time during the year, I can go for composition scheme by making application for registration. See the first 2 points. Already registered. Apply in CMP2. CMP2 is the form for entry into composition scheme. When? Before commencement of the financial year. Suppose if I am not registered, not already registered, then in that case, apply in GST REG1 and select composition scheme at any time during the financial year. Is it clear? Then next, display composition taxable person. Where should I display composition taxable person? In every signboard, notice board or bill that I gave, I need to mention that I am under composition scheme, so that you should be aware that I should not be charging GST to you. Otherwise, what will happen? You don't know that I am under composition scheme, so I will normally charge GST. You will think that okay, he is a registered person, he is charging GST like that, but I may be under composition scheme, not possible, right? So due to that reason, I need to display that I am under composition scheme. and file quarterly return along with payment of taxes. So they will be filing monthly return or quarterly return? Quarterly return along with payment of tax in CMP 8 by 18th of the month following every quarter. Got it? Quarterly. And even they will pay tax also at the time of filing this return. Then whether they need to pay GST on advances or they are not required to pay GST on advances, they need to pay. So just now we saw time of supply, wherein I told you goods under FCM for a person opting for composition scheme or specified actionable claim, due date of invoice, actual date of invoice, or date of payment, whichever is earlier. For example, I am under composition scheme. This month or this quarter I received the advance for which I will be supplying in future. Should I add that for my liability? Yes, sir, I have to, because I need to pay GST on advances. Same way, this quarter I gave the bills. This quarter I gave the bills for which the advance is already received in the previous quarter. Means at the time itself I would have taxed, correct? But this quarter I am giving bills, so therefore you need to reduce. So how to take? First you see what is the value of bill of supply during the quarter. Why bill of supply? Because a person under composition scheme cannot recover the GST from the recipient. So what is the name of the document that they will be giving? Bill of supply. So therefore we need to take the bill of supplies issued during the quarter minus advances which is already received pertaining to current quarter, minus plus advances received during the current quarter for which supplies will be made in future. So that adjustment we need to make. GST payable on value as per bill of supply during the current quarter plus advances received during the current quarter pertaining to next quarter minus advances received during the previous quarter pertaining to the current quarter. This adjustment we need to make, and on which we need to pay the GST under composition scheme. Then they need to file an annual return. So that annual return will be in GSTR 4 by 30th June of the succeeding financial year. It is not 30th April. Previously it was 30th April and now they have made it as 30th June. Then next point, all in or all out. What does it mean? That is, for example, I have 4 registrations per. For 4 registrations, 2 registrations composition scheme, 2 registrations normal scheme. Is it possible? No. All the registration should be into composition scheme or all the registration into normal scheme. So I cannot do mix and match. Okay. Also remember, if I want to be in composition scheme also, all the registration should be under 10.1 or all the registration should be under 10.2a, but not both. So this is also applicable. See, this all in all out point is not only for composition scheme versus regular scheme, even for composition scheme also between 10.1 and 10.2a. Is it clear? But this word all in all out, I told you, I created. This is not there in the law. In law, that is in exam, don't write all in all out. They will not understand what all out you are talking about. You understood? So you need to write all the registrations of a person should be under composition scheme, or all the registrations of a person should be under normal scheme, but not both. Okay. So either composition scheme or normal scheme for all registrations of a person. They cannot choose normal scheme for few registrations and composition scheme for other registrations. Is it clear? Then next, this already we discussed. Composition scheme under 10.1 not applicable. Look into the next, validity of composition scheme. Validity of composition scheme, if all the conditions are satisfied, composition scheme remains valid and you can continue in the composition scheme. No need to intimate every year that you want to go for composition scheme like that. So if all the conditions are satisfied, option remain valid. What if the conditions are not satisfied? If the conditions are not satisfied, you need to pay tax as a normal taxpayer. For example, you cross the limit of 1.5 crores or you cross the limit of 75 lakhs or you started making interstate supplies, means you breach the conditions, means you need to exit from the composition scheme. What is the time limit within which you need to exit from the composition scheme? 7 days from the breach of condition. So whenever you breach the condition, from there within 7 days you need to exit. And what is the form for exit from composition scheme? CMP 4. CMP 2 is for entry into composition scheme. CMP 4 is for exit from composition scheme. CMP 2 time limit, before commencement of the financial year, I can go for composition scheme. CMP 4 exit from composition scheme. When? Anytime you can come, but whenever you breach within 7 days. Within 7 days. Okay. Then self withdraw, voluntarily anytime you can file CMP4 and you can exit from the composition scheme. Got it? So even when you breach the conditions, you need to exit mandatorily. Self withdraw, anytime you can come out of the composition scheme. Suppose you breach the conditions, means what? Say you made supply of services through e-commerce operator, which is disqualified, correct? Breach of condition. Now you continued in the composition scheme, but the department came to know. How they came to know? Whenever you made supply of service through e-commerce operator will update the information. So based on that, so department came to know and immediately they are giving you a notice. So that notice will be in CMP 5. Thereafter you need to give reply. That reply will be in CMP 6 within 15 days. What is that reply? Sir, only one transaction I made through e-commerce operator. I am unaware. So I will ensure that henceforth I will not make supply through e-commerce operator. Kindly allow me to continue in the composition scheme. Now it is at the discretion of the GST officer. If the GST officer is a sadist, he will tell no, composition scheme disqualified. You need to pay under normal scheme. So if he is a kind-hearted person like me, so then he will tell, okay, fine, continue, enjoy, like that. Because one transaction only, you can enjoy in the composition scheme. So therefore, they will pass a order. What is the time limit within which they will pass the order? Within 30 days. Within 30 days from when? From the time you gave the reply. From the time you gave the reply, within 30 days, they will pass an order in CMP 7, either allowing you to continue in the composition scheme or denying the composition scheme. Either accepting reply or denying the composition scheme. Now, whenever you exit from composition scheme and go into normal scheme, you can avail the ITC on closing stock. Do you remember 18(1)(c)? So you are under composition scheme, you are going into normal scheme, you can avail the ITC on closing stock. What is the ITC on closing stock? Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, and capital goods also you can take. After reducing 5% for every quarter or part thereof from the date of purchase till the date of conversion, correct? And you need to file one form. What is that form? You need to file ITC 1. What is the time limit with which you need to file that form? 30 days from the date you have exited from composition scheme. That is this statement in form ITC 1. Within 30 days of intimation or application order, furnish details of stock of inputs contained in WIP or finished goods and capital goods. Okay, now you are going into composition scheme. When you go into composition scheme, what you need to do with respect to your closing stock? You need to avail ITC or reverse ITC? Reverse ITC. From normal scheme, you are going into composition scheme. So you need to reverse the ITC. For reversal of ITC on closing stock, what is the form that you will file? ITC 3. ITC 3 for reversal. Now, these 4 forms you need to remember. What are the 4 forms that we have here? Like odd forms is ITC forms. So say this. First we have 1, then next 2, and then 3, and thereafter we have 4. Okay. So odd forms. What are the odd forms? 1 and 3. 1 and 3 is ITC form. 1 and 3 is ITC. 1 and 3 is ITC form. 1 and 3 is ITC form. Whereas 2 and 4 is CMP forms. 2 and 4 is CMP forms. Okay. ITC 1, ITC 2, sorry, ITC 1, then 1 second. So this is CMP 4. Okay, CMP 4. Now ITC 1 and CMP 4. First ITC 1 for what? Availment of ITC on closing stock. Availment of ITC on closing stock. Then ITC 3 is for what? Reversal of ITC on closing stock. CMP 2 is for what? Entry or exit? Entry into composition scheme. CMP 4 is for what? Exit from composition scheme. Understood? Now if you see here, this ITC first and last form is a combo. That is, whenever you exit from composition scheme, you will avail the ITC on closing stock. So these two is one combo, okay. These two is one combo. Then again CMP2 and ITZ3, that is whenever you enter into composition scheme, then you will reverse the ITZ on closing stock. You understood? So that's what I have given, ITZ1 and CMP4. ITZ1 and CMP4, this two is one combo. Whenever you exit from composition scheme, you will avail the ITC on closing stock. What is the time limit within which you need to exit from composition scheme? 7 days from the breach of condition, and you will avail the ITC on closing stock. What is the time limit for availment of ITC on closing stock? 30 days from the date on which you migrated from composition scheme to normal scheme. Is it clear? Whereas whenever you enter into composition scheme, entry into composition scheme, you will reverse the ITC on closing stock. When you can enter into composition scheme? Before commencement of the financial year, and you need to reverse the ITC on closing stock. So what is the time limit within which you need to file ITC 3? 60 days from commencement of financial year, because only before commencement of financial year you can enter into composition scheme. So from commencement of financial year within 60 days. Understood these 4 forms here? Mainly for MCQ this will be useful. Then CMP5, just now we discussed show cause notice. CMP6, reply to notice. CMP7, issue of order. Notice anytime they can give, and reply to notice within 15 days from receipt of notice. Order within 30 days of receipt of reply. CMP8, return to be filed by a person opting for composition scheme. What is the time limit within which they need to file return? Within 18 days from the end of the quarter. Then denial of composition scheme, whether it is prospective or retrospective. Concentrate. What has happened is that you have made interstate supplies, okay. So during the financial year 2024-25, during the financial year 2024-25, say somewhere on 18 September 2024, so you made interstate supplies. When you make interstate supplies, you are disqualified from composition scheme, correct? But what you did, you continued in the composition scheme. You continued in the composition scheme. So even for the next financial year also you continued. So but you did not exited. And thereafter somewhere in 2025-26, the officer will identify that you have breached the composition scheme, and they pass an order. What is that order? Order in CMP 7. Order in CMP 7 to, like already they gave a notice, you gave a reply, etc. They passed an order. So in CMP 7 on 30 November 2025. So now whether the date of denial of composition scheme, they want to deny the composition scheme. To deny composition scheme. Now what will be the effective date of denial? It may be prospective. Prospective means from 30/11/2025. Prospective means from 30/11/2025 they will deny. Or it can be retrospective. But not before 18/9/2024. You understood? It can be either prospective or it can be retrospective, but not before 18/9/2024. Is it clear here? So that is the maximum time by which they need to do that. So not before 18/9/2024. Understood with respect to this? So that is this point. So you can read that. In case of denial of composition scheme, option to pay tax under composition levy by the tax authorities, the effective date of such denial shall be from a date including any retrospective date, as may be determined by the tax authorities. However, such effective date shall not be prior to the date of contravention of provisions of CGST Act or CGST rules. Next, when is it advisable to opt for composition scheme under 10(2)(a)? You tell me. So whenever 10(1) is not possible, because if you are a trader, 10(1) is only better because 1%. Manufacturer also 1% in 10(1). Supply of food also 5%. But if you go for 10(2), you need to pay 6%. So it is better to continue in the composition scheme 10.1. So if you don't have the composition scheme under 10.1, when if you are engaged in service other than supply of food, then you can go for 10.2a. So who is exclusively engaged in supply of service other than restaurant service can go for 10.2a. And if you are also doing manufacturing, trading and supply of food service provider, but you want to provide beyond 10% limit services, then in 10.1 it is not possible, so you need to go for 10.2a. Is it clear or not? That is, who is engaged in supply of services along with supply of goods or service of value exceeding 5 lakhs in a financial year. Why 5 lakhs in a financial year? Simple pa, your turnover during the previous year should not exceed 50 lakhs, then only you can go for 10.2a. So should not exceed 50 lakhs means somewhere like 40 lakhs, 30 lakhs, 20 lakhs, like that. Now, what is the limit up to which services can be provided? 10% of that or 5 lakhs, whichever is higher will be 5 lakhs. So if you want to provide service beyond 5 lakhs, you can go for 10.2a. That is the logic behind it. Next, meaning of various turnovers you can see. We have come across in composition scheme 3 turnovers. One is aggregate turnover for determining the eligibility to opt for composition scheme. That is, if you want to go for composition scheme, your turnover during the previous year should not exceed. So whether we need to check this aggregate turnover for current year or previous year, previous year. Then next turnover we have come across is 10% limit. I can provide service up to 10% of turnover during previous year or 5 lakhs, whichever is higher. So therefore, that is also again previous year turnover. Turnover for determining 10% limit for services previous year. Then next one, turnover for payment of GST under composition scheme. Whether we need to see previous year turnover or current year turnover. Current year turnover. We need to see current year turnover, because current year only now we are paying tax under composition scheme. Are you understanding this? Then what is the basis? Aggregate turnover will be all India. Turnover for determining 10% limit will be state or union territory. Turnover for payment of GST under composition scheme, state or union territory. Now see the meaning of aggregate turnover. What is that I told you? 5 places. What are the 5 places? Taxable, exempted, non-taxable and then zero rated. Correct? Then next, what are 3 and even pre-registration turnover also place? 5 places pa. What are the 5 places? That is taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies and pre-registration turnover. 3 minus. What are the 3 minus? So interest on loans, then inward supplies under RCM and taxes. Okay. Now this is the meaning of aggregate turnover for determining the eligibility to opt for composition scheme. Now from this to this, what is the difference? From aggregate turnover to turnover for determining 10% limit, what is the difference? Here aggregate turnover will be all India, but this will be state or union territory wise. Rest of the information is ditto, copy paste. Everything is copy paste. Only difference is what? This will be on all India basis, this will be state or union territory wise. Then what is the difference between turnover for computing 10% limit versus turnover for payment of GST under composition scheme? So turnover for determining 10% limit we need to take previous year turnover, but here we need to see current year turnover. And you should not have non-taxable supplies or zero rated supplies or interstate supplies. If you are having this during the current year, previous year you can have non-taxable, current year you should not. Previous year you can have zero rated or interstate, current year you should not have. If you are having, then definitely you are disqualified from the composition scheme. So not applicable means what? These supplies cannot be made during the current year, and if made, the person is disqualified from the composition scheme. And also pre-registration turnover is excluded, because you start paying GST only after crossing the threshold limit. For example, current year only you commence a business. So current year can you opt for composition scheme? Yes, why not? Because previous year is 0. Current year you can opt for composition scheme. But when? After you cross the threshold limit for registration. So up to 20 lakhs or 40 lakhs you are not required to register. Thereafter only you register and pay. When you register and pay, you need to pay tax only on turnover after registration. Correct or not? So pre-registration turnover you don't have to pay any GST. That's why it should be excluded. So with this, composition scheme is over. One more point you just add here, that is, I told you now, all in or all out. So there you write down this point. Also with respect to few registrations 10.1, also with respect to few registrations of a person, also with respect to few registrations of a person, section 10(1) and remaining registrations section 10(2)(a) is not possible. 10(2)(a) is not possible. You understood? Like few registrations 10(1) and few registrations 10(2)(a), they cannot decide. So they need to go for either 10(1) or 10(2)(a), but not both. Is it clear? Then, so we completed composition scheme fully, and now let's see concept grills related to composition scheme. I have given some questions there. What's the page number? We don't have any amendments in composition scheme except for that one point. What is that? Annual return. Annual return is 30th June of succeeding financial year. You can see this, page number 36. So total I have given some 15 questions, 36, 37, 38. 5 questions we need to do. Carefully answer this and by referring the book, and I want you to commit the mistakes. Okay, try. And suppose if you have pencil, you write there. If not, some other notebook, you write down the answers. And hope you all subscribe to our YouTube channel. Please subscribe, because I wanted to share you one happy news that we crossed 60K subscribers. Okay, so 61,429. Okay, 61,000 treat. I'll give you, clear and come. I'll give big treat. I will give. Okay. Finished the first 5? Okay. See the first question. Turnover of a person during previous year, Tamil Nadu 60 lakhs, Karnataka 30 lakhs and Kerala 40 lakhs. During the current year, can the person opt for composition scheme under 10.1? What is their aggregate turnover during previous year? Come on. Aggregate turnover during previous year is 60 plus 30 plus 40. That will be 130 lakhs. What is the applicable limit? Applicable limit, whether one state, any one state is in MMTN, USAM, no. So therefore the applicable limit will be 150 lakhs and they use the word composition scheme under 10.1. So therefore as aggregate turnover during previous year does not exceed 150 lakhs, comma, they can opt for composition scheme. They can opt for composition scheme under section 10.1 during current year. During current year it is possible. Then number 2, turnover of a person during previous year, Tamil Nadu 60, Karnataka 30 and Kerala 40. What is the limit up to which service can be provided during the current year if they have opted for composition scheme under 10.1? What is the limit up to which they can provide services? 10% of turnover during previous year. What is the 10% of turnover during previous year? 130 lakhs. 130 lakhs into 10%, 13 lakhs. 13 lakhs or 5 lakhs, whichever is higher. 13 lakhs. Absolutely wrong answer. Because we should not see aggregate turnover. For 10% limit it is turnover, not aggregate turnover. Turnover. Okay. So limit up to which services can be provided, limit up to which services can be provided. Okay. So first we will see Tamil Nadu. For Tamil Nadu it is 60 lakhs into 10% or 5 lakhs, whichever is higher, that will be 6 lakhs. Okay. Then next Karnataka. Karnataka it will be 30 lakhs into 10% or 5 lakhs, whichever is higher, that will be 5 lakhs. Okay. Then next Kerala. For Kerala we need to take 40 lakhs into 10% or 5 lakhs, whichever is higher, that will be 5 lakhs. So we can render services 6 lakhs, 5 lakhs, 5 lakhs. How much? To the extent of 16 lakhs we can render the services. Is it clear? Next, third, turnover of a person during the previous year, Kerala 60, Nagaland 20 lakhs. During the current year, can that person opt for composition scheme under 10.1? Okay. So what is the limit? What is the limit? So as one state is in MMTN, USAM, the limit will be 75 lakhs. So what is the aggregate turnover during previous year? Aggregate turnover during previous year is 80 lakhs. Aggregate turnover during previous year is 80 lakhs. And what is the applicable limit? What is the applicable limit? Applicable limit is not 75 lakhs. Even though it is under 10.1, it is not 150 lakhs, it will be 75 lakhs. Because one of the state is in MMT and USAM, and as aggregate turnover during previous year exceeds or does not exceed? Exceeds 80 lakhs. Exceeds 80 lakhs. They cannot opt for composition scheme. They cannot opt for composition scheme under section 10.1 during current year. During current year they cannot opt for composition scheme. Then look into number 4. Aggregate turnover of a person in Tamil Nadu during the previous year is 120 lakhs. During the current year, such person opted for composition scheme and their turnover is as follows. Taxable goods 40, exempted goods 20, taxable service 8 lakhs, interest income 8 lakhs. What is the limit up to which service can be provided during the current year? So here they are doing business only in one state. So one state means aggregate turnover also same, turnover also same. And they opted for composition scheme during current year? Yes. So therefore, what is the limit up to which services can be provided? Limit up to which services can be provided during current year. So we need to take 120 lakhs. Why? Because aggregate turnover both are same. Aggregate turnover or turnover during previous year is same, 120 lakhs. So because when you do business in one state only, there is no difference between aggregate turnover or turnover. That is 120 lakhs into 10% or 5 lakhs, whichever is higher, that is 120 lakhs into 10% will be 12 lakhs. That is the limit up to which services can be provided during current year. Is it clear? Then next, in the above case 4, whether services provided during the current year are within the limit. Whether services provided during the current year are within the limit. What is your answer? During the current year 8 lakhs. Don't count interest. Only take services. Okay. Services other than interest. Services other than interest income. Services other than interest income is rupees 8 lakhs. Services other than interest income is rupees 8 lakhs, which is less than or equals to 12 lakhs. Therefore, current year services provided is within the limit. Current year services provided is within the limit. Okay. Next. So do the next question. Next two questions also I will discuss this because it's continuation. In the above case 4, what is the GST payable under composition scheme under 10(1) during the current year if that person is a manufacturer? So manufacturer will pay GST on what? Total turnover. Correct? But on services they will pay GST only on taxable turnover. Okay. So even though they are manufacturer, on goods they will pay GST on the total turnover. Okay. So first to see the goods. What is the value of the goods? Total turnover you take goods. Total turnover, taxable as well as exempted. How much? 40 plus 20. 40 plus 20, how much it will be? 60 lakhs. 60 lakhs into 1%. 60 lakhs into 1%, that is 60,000. Then services you take. For services, what is the limit? So taxable service only you need to take and only 8 lakhs will be taken. 8 lakhs. For that 8 lakhs, what is the rate of GST? 1%. That will be 8,000. So 68,000. In that CGST will be half. 34,000. And SGST is also half, 34,000. Are you getting this? Then next, in the above case 4, what is the GST payable under composition scheme under 10(1) during current year if such person is a trader? If that person is a trader, what we need to do? So we need to take 6%, no 1%, 1% only on what? Taxable turnover. So what is the value of the goods? The value of the goods, taxable goods only you take. What is the value of taxable goods? Only 40 lakhs. So 40 lakhs into 1%. 40 lakhs into 1%, that is 40,000. Services normal. Service also taxable only we will take, and given also taxable. Interest income, both cases we will not pay GST because interest on loans, advance deposits will be excluded for computing GST also under composition scheme. So into 1%, that will be 8,000. So total 48,000. in this 48,000, CGST is 24,000 and SGST is rupees 24,000, that is with respect to this. Okay. Now try the remaining questions, come on. You don't have the booklet? You can collect it. Oh, you left it. Okay. Finished? Okay, make it fast. See the answer for question number 8. A person commences business in Kerala and their pre-registration turnover is 40 lakhs and post-registration turnover is 120 lakhs. Can that person opt for composition scheme? What is the aggregate turnover? Aggregate turnover, whether pre-registration turnover is included? Yes. So 40 lakhs plus 120 lakhs, that will be equal to 160 lakhs. So aggregate turnover is 160 lakhs. And what is the applicable threshold limit? The applicable threshold limit is how much? 150 lakhs, because they are doing business in Kerala, and as aggregate turnover during previous year exceeds 150 lakhs, comma, they cannot opt for composition scheme. They cannot opt for composition scheme under section 10(1). During which year? During current year. Okay, during current year. Then 9. A person registered in Tamil Nadu engaged in making following supplies during previous year. Supply of goods 85 lakhs, interest income 15 lakhs, supply of service 60 lakhs. Can such person opt for composition scheme under 10(1) during the current year? If yes, what is the limit up to which services can be provided during the current year? First, so what will be their aggregate turnover during previous year? Supply of goods 85, don't take interest income, only supply of services 60 lakhs. Okay, so aggregate turnover during previous year. What is the aggregate turnover during previous year? 85 lakhs plus 60 lakhs. 85 lakhs plus 60 lakhs will be equals to 145 lakhs. Okay, and what is the applicable limit? What is the applicable threshold limit? 150 lakhs. 150 lakhs. Okay, and can they opt for composition scheme? They can, no? Aggregate turnover is only 145, but the applicable limit is 150. They can. That's for the current year. Previous year they can render any services. Current year, after opting for composition scheme, they should not render services beyond 10% limit. Okay, so they can opt for composition scheme. They can opt for composition scheme under section 10(1) during current year and can render services up to how much? Can render service up to 14.5 lakhs. Can render service up to 14.5 lakhs. Suppose if they render service beyond 14.5 lakhs, they are disqualified from the composition scheme. But previous year there can be any limit for services, because previous year they were not under composition scheme. Now current year only they are opting for composition scheme. Then 10th one, during the current year a person commences business in Kerala as a trader. Aggregate turnover for the year is 180 lakhs and applicable threshold limit for registration is 40 lakhs, which means first 40 lakhs he will not register and thereafter only he will register. So what is his overall turnover? 180 lakhs, and applicable GST is 12%. Compute GST payable if composition scheme is opted. Now you need to see what is his aggregate turnover. Aggregate turnover is 180 lakhs. In this 180 lakhs, how much will be under composition scheme and how much will be under normal scheme? So turnover, aggregate turnover under composition scheme under section 10(1) and aggregate turnover under normal scheme. Okay, so we need to find this aggregate turnover under composition scheme versus aggregate turnover under normal scheme. What is the aggregate turnover under composition scheme? 150 lakhs. And what is the aggregate turnover under normal scheme? 30 lakhs. Okay, aggregate turnover under composition scheme 150, normal scheme 30. In that 150, to what limit it will be under composition scheme? Minus pre pre-registration turnover you should take out, because we learned that while computing the GST under composition scheme, pre-registration turnover should be taken out, because up to registration date you don't have to pay GST. So what is the pre-registration turnover? Pre-registration turnover is how much? 40 lakhs. Then what is the balance? The balance will be 110 lakhs. On that 110 lakhs we need to pay 1%, whereas this 30 lakhs we need to pay 12%. So what is the total GST liability? Total GST liability will be 110 lakhs into 1%, 1 lakh 10,000, plus 30 lakhs into 12%, 1 lakh 3 lakh 60,000. 3 lakh 60 plus 1 lakh 10,000, that is 4 lakh 70,000 is the total GST. Hope you understood this. So first we need to take the overall turnover. In that overall turnover, divide into two: pre-registration turnover and post-registration turnover. Whatever is the pre-registration turnover, in that, that is turnover under composition scheme, you should take out. So thereafter remaining 150. See, 0 to 40, 0. And after 40 up to 150. What is after 40 up to 150? 110 lakhs. On that 110 lakhs we will pay composition tax 1%. After crossing 150, remaining 30 lakhs we will pay at the normal rate 12%. Then question number 11. What will be an answer in the above case? 10. If their aggregate turnover for there is 130 lakhs. 130 lakhs means entirely it is under composition scheme, correct or not? In that you take out pre-registration turnover. So what is the aggregate turnover under composition scheme? Aggregate turnover under composition scheme under section 10(1) will be 130 lakhs. 130 lakhs. In this 130 lakhs minus pre-registration turnover. What is pre-registration turnover? The pre-registration turnover is 40 lakhs. So we need to take the balance. What is the balance? 130 minus 40, that will be 90 lakhs. So on that 90 lakhs we need to pay 1%. So GST payable will be 1% of 90 lakhs, that is 90,000 will be the GST payable. Understood here? Next, a person, so still there is some balance on which they can pay under composition scheme, yes. So only 90. So still total will be 150. 150 minus 40, 110. In that 90 only they are paying. Remaining also if they make in the current year, they can still pay under composition scheme. Then 12, a person being trader opted for composition scheme under 10(1) during the current year, and the transactions are as follows for the second quarter. Advances received for the first quarter is 20 lakhs. Supplies are made in second quarter. So therefore advances received in first quarter. For this we will be making supplies in the second quarter, okay, on which we need to pay GST in the first quarter. Advances received in the second quarter, how much? 30 lakhs, okay, for which supplies are made in the third quarter. So on that 30 lakhs we will pay GST in the second quarter. Bill of supplies for the second quarter, 60 lakhs. So we need to make the adjustment, okay. So say this, bill of supply, bill of supplies. What is the bill of supplies for second quarter, Q2? What is the value of bill of supplies for the second quarter? 60 lakhs. In this 60 lakhs, there are some amounts for which advances are already received. Advance received in first quarter, we will raise bill in second quarter, na. So that we should separate, minus advances in Q1, advances in Q1 for which supplies in Q2, for which supplies are made, in Q2, okay. What is the advances in Q1 for which supplies are made in Q2? That is 20, that is Q1 we received some advances, that is 20 lakhs, that we need to separate. Then we need to add advances in Q2 for which supplies are made in Q3, but we need to pay tax now itself. Advances in Q2 for which supplies are made in, Q3, correct? How much is that advances? 30 lakhs. So 30 lakhs. Now 60 lakhs minus 20 plus 30 lakhs. What is the balance? 70 lakhs. 70 lakhs will be taken as the value on which composition scheme tax is payable. So, GST payable. What is a GST payable? Are they a trader? Yes. So, 70 lakhs into 1%. So, that will be 70,000. 70,000 is taken as GST payable. Are you understanding how we will do? Suppose in this advances there is some taxable supply related advance, exempted supply related advance. We should separate the exempted supply related advance because this person is a trader. Because trader will not pay tax on exempted supplies. So in that advance there is some advances pertaining to exempted supplies. Take out. Don't consider that at all. Why don't consider that at all? Because the person is a trader. He will pay GST only on taxable turnover. Next, 13. A person engaged in sale of beauty products in their shop in Chennai, Tamil Nadu, and is engaged in beauty parlor service in Coimbatore, Tamil Nadu. This person has obtained separate registration in these two places and aggregate turnover during previous year is 45 lakhs. They want to opt for composition scheme under 10.1 in Chennai and 10.2A in Coimbatore. Is it possible? No. So because few registration composition scheme 10.1, few registration 10.2A are not possible. Correct or not? So all the registrations of a person, all the registrations of a person should be either in 10.1, all the registrations of a person should be either in section 10.1 or section 10.2A, but not both. Okay. Therefore, in Tamil Nadu, section 10.1, in Tamil Nadu composition scheme under 10.1, and that is, sorry, in Chennai, no? One second. In Chennai, composition scheme under section 10.1, and in Coimbatore, composition scheme under section 10.2A, not possible. So therefore both should be under 10.1 or both should be under 10.2A. Then 14. Mrs. F, a taxpayer under composition scheme, had a composition tax liability of 50,000 for the quarter ending December 2023. She failed to pay the tax on time and made the payment on 31st January 2024. Calculate the interest on the late payment if the interest rate is 18% per annum. Now, what is the due date? What is the due date for payment of GST? What is the due date of payment of GST? Due date of payment of GST. By when they need to pay GST? A person who is under composition scheme needs to file by 18th of the month following every quarter. What is a quarter here? December. For December quarter, it will be 18 January 2024. Correct? And what is the actual date of payment? Actual date of payment of GST. Actual date of payment of GST is 31st January 2024. Number of days delay. What is the number of days delay? Number of days delay 18 January. 18 January means in January we have 2 days. In February and in I think 31 minus 18, 12 days. 12 days, 13 days in January. So number of days delay is 13 days. So interest will be on what? Composition tax liability. What is a composition tax liability? 50,000. So 50,000 into, what is the rate of interest? 18% into 13 divided by 365. So see how much? 50,000 into 18% into 13 by 365. 320. So 321. So because we need to round off to nearest 1 rupee. So this is the interest that is payable. Then 15. Mr. I, a manufacturer under composition scheme under 10.1, having aggregate turnover of 80 lakhs during the current year, receives legal services worth 5 lakhs. See, only for outward supply they need to pay composition tax. On their inward supply they need to pay regular rate, because whatever we saw 1% etc. is on turnover. not on inward supply, on their inward supply, because they are receiving some legal services. See there, receives legal services worth 5 lakhs from an advocate. So legal services will be covered under RCM. Okay, calculate the total GST liability of I if the applicable GST rate is 18% on legal services. First, so composition tax. What is the composition tax liability? Composition tax liability will be with respect to the amount. What is the amount? 80 lakhs. 80 lakhs into what is the rate? 1%. 80 lakhs into 1%, that will be 80,000. And thereafter RCM tax liability. What is the RCM tax liability? The RCM tax liability will be, so how much? 5 lakhs, na? 5 lakhs into what is the rate of GST? 18%. So on inward supply we need to pay the regular rate. What is that? 90,000. So total tax liability, total tax liability, if you see, that is 80 plus 90, 1 lakh 70,000. So in that separated we need to do CGST and SGST. So got the confidence on this composition scheme? Yes? Super here. Now we will quickly complete one small area which is left, that is e-way bill. So you can see e-way bill, accounts and records and e-way bill. In this accounts and records already we completed accounts and records related concept, hope you remember that. And now we need to discuss e-way bill. So kindly look into page number 176. This is one small concept, but even then there are some questions asked on that. Okay, so e-way bill. So when the e-way bill should be generated? E-way bill should be generated before movement of goods. What is the purpose of e-way bill? Whenever we are transporting goods from one location to another location, these goods may be unaccounted goods, and unaccounted goods, if they are transporting, no one will pay GST on that. For example, I am seller, you are my buyer, I am just transporting the goods, and for these goods I have not raised invoice and I have not paid any GST, and I will collect it in cash. No one can identify this transaction, correct or not? That's the reason why I need to prepare a e-way bill at the time when I am sending the goods. I need to intimate to the department that I am sending goods from one location to another location, and during the transit there is a proper officer who will stop the vehicle and will check whether these goods are matching with the e-way bill. Okay, otherwise goods will be seized, and even the lorry also will be seized. So that's the reason why e-way bill is very important document which is to be generated. Sir, when it is to be generated? It is to be generated before commencement of movement of goods, not during the movement of goods. Before starting the lorry we need to generate, and this is applicable only for goods. It is to be generated before movement of goods. Whether for all goods e-way bill is required? No, only for taxable goods. For exempted goods e-way bill is not required. It is not applicable in case of exempted goods, and it is also not applicable if the value of goods including GST and excluding exempted supplies does not exceed 50,000. For example, if the value is 55,000, e-way bill is required. If the value is 45,000, e-way bill is optional, not required. If you want to generate, you can generate. Sir, generally while computing GST, like when computing value, so we need to include GST or exclude GST? Generally we need to exclude GST. But here for e-way bill purpose, value includes GST. A very important point. Value includes GST. Value includes GST. So therefore, if the value is 48,000 plus GST 18%, so 48 plus 18% means it goes beyond 50,000. So e-way bill is necessary. But there are two goods for which e-way bill is not at all required. Sorry, e-way bill is always required even if the value does not exceed 50,000. What are those two goods? Goods sent on job work and handicrafts. These two cases, even if the value does not exceed 50,000, e-way bill always necessary. That is job work and goods sent on job work and handicraft goods. Okay, then so what if in the invoice there is both taxable supplies and exempted supplies? Take out exempted supplies and see only taxable supplies, add GST and see the value of invoice. If it exceeds 50,000, then e-way bill is applicable for that invoice. Is it clear? Then next, it has two parts. What are the two parts? Part A, that comprises the invoice details. Invoice detail means GSTN of the supplier, GSTN of the recipient, description of the goods, all those things will be there. and reason for transportation. So whether it is transported, so under supply or without supply, those details will be there. And in part B, it comprises of transport details. Transport details means like vehicle number, from where it is transported, to which place it is transported, that details will be there. Okay. Now, what is the validity of e-way bill? So once e-way bill is generated, it will have a validity, which means within that time we need to complete the journey. Okay. So how to count the validity? Depending upon the distance, the validity will be counted. The validity will be 1 day for every 200 kilometers or part thereof. Suppose if the distance is 480 kilometers, means how much is the validity? 3 days. First 200 kilometers 1 day, next 200 kilometers 1 day, thereafter 80 kilometers 1 day. So first 3 days will be taken as a validity. In case of over dimensional cargo, what is over dimensional cargo? The tail of the cargo will be very big. Okay, you would have seen over dimensional cargo. So over dimensional cargo wherein big containers, wherein very big, that lot of wheels will be there. And in case of ODC, over dimensional cargo, so it will take lot of time to complete the journey. So due to that reason, for over dimensional cargo, they have given a validity for 1 day for every 20 kilometers or part thereof. So the same 480 kilometers, what will be the validity? 480 divided by 20, 24 days, correct? 24 days is the validity of that e-way bill. So see there, in case of over dimensional cargo or multi-modal transportation, in which one leg of the journey is by vessel. So what is that? Up to some distance by roadways, thereafter by railways, thereafter waterways, again by roadways. Because some distances we may not have direct road, we have to go by waterways only. Then in that case, what we need to do? Waterways, the moment we touch waterways, it will take lot of time. So that's why again 1 day for every 20 kilometers or part thereof. So tell me, what is the validity in case of ODC? ODC means what? Over dimensional cargo, and MMT, multi-mode transportation, where one leg is by vessel. So then the validity will be 1 day for every 20 kilometers or part thereof. In all other cases, it will be 1 day for every 200 kilometers or part thereof. Sir, how this validity will be counted? So once the e-way bill is generated, the validity starts from the midnight of the day it is generated to the midnight of the next day as 1 day. For example, today morning 4 o'clock e-way bill is generated. So today midnight to tomorrow midnight, and again tomorrow midnight to day after tomorrow midnight. Like that the validity will be counted. Okay. So over dimensional cargo or multimodal transportation, in which at least one leg involves transportation by ship, 1 day for every 20 kilometers. So say for example, I told you 480 kilometers divided by 20, 24 days. So from today's midnight, even today, suppose like night 11 o'clock if we generate e-way bill, then also today's midnight only. Today anytime it is generated, the validity of the e-way bill will be counted from the midnight of the day when e-way bill is generated, and it will expire always by midnight. For example, e-way bill validity expired on 4th day. So thereafter, what is the time limit within which it should be extended? The validity of e-way bill may be extended within 8 hours from the time of its expiry. So whenever it expires from there within 8 hours, it needs to be extended. Then, so look into some FAQs on e-way bill. So when e-way bill is not required, there are some cases where e-way bill is not required, that is transportation by non-motorized vehicle. Non-motorized vehicle means, so that is bullock cart, horse cart, rickshaw, etc. e-way bill not required. Even goods transported from customs port, airport or air cargo complex. Remember, these are some places which are under the control of customs. What are those places? Port, airport, then next land customs station, container freight station, inland container depot, customs warehouse. These are some places which are under the customs control. Between these places when we are moving, so we are moving goods, anyhow customs control is there. So due to that reason e-way bill is not required. This is second point and third point. So goods transported are under the control of customs. Then transit cargo transported to or from Nepal or Bhutan. Nepal and Bhutan are landlocked countries. So first the goods will originate and it will go to Nepal and Bhutan. So when it goes to Nepal and Bhutan, this particular movement of goods to Nepal and Bhutan, so that will be, like called as transit cargo to Nepal and Bhutan. We have an exemption. So any transit cargo to Nepal and Bhutan, any services will be exempted. Even e-way bill also not required. Got it? So both to and fro. So transit cargo transported to or from Nepal or Bhutan. Then movement of goods for Ministry of Defense. Ministry of Defense will be transporting weapons or guns, etc. and all. So that do not require e-way bill. If they generate e-way bill, everyone will know now which lorry they are transporting. We can steal those goods easily. So that's the reason why e-way bill not required in case of defense goods. Then empty cargo containers are being transported. So what is inside that? Nothing. Empty. But the container is goods, na sir. Like that you may argue. That's the reason why e-way bill is not required. There is nothing inside. Then consignor transporting goods to or from between place of business and the weighbridge for a weighment at a distance of 20 kilometers accompanied by a delivery challan. What does it mean? First listen, there is one lorry. That lorry will go to the weighbridge to know the weight of the lorry. Is there anything inside that lorry? No. So e-way bill not required. Again the lorry will come back to the factory, and now the goods will be loaded like metal scrap, iron ore, etc. and all we will load. Again the lorry will go to the weighbridge. Now this particular movement, okay, this particular movement is with goods. So first the lorry went to weighbridge without goods. Next the lorry went to weighbridge with goods. So but it is within 20 kilometers what the weighbridge from the factory. So e-way bill not required. What if the weighbridge is beyond 20 kilometers? Definitely e-way bill is required. Got it? Why will they do, sir? Usually loose goods will be there, na metal scrap and all. So metal scrap, so weighing will be difficult. So what they will do, first they will take the lorry and they do the weight without goods. Then weight of the lorry with goods. The difference will be taken as the weight of the goods. For that purpose they do this. Okay. If it is up to 20 kilometers, distance up to 20 kilometers, e-way bill not required. Point number 8, goods being transported by railways, where the consignor of the goods is the central government, state government or local authority. If government goods are being transported that do not require e-way bill, in which mode? Railways. What is the difference between point number 8 and point number 5? Point number 5 is defense goods in any mode, but 8th point is railways, the goods belonging to any department of the government. Got it? Whereas 9th point, goods specified as exempt from e-way bill requirement in the respective states. So some state wise also there will be some exemptions which are given, because whatever e-way bill provisions that we are learning is interstate e-way bill provisions. The same e-way bill provisions is applicable for intrastate movement also. Got it? So if the question is silent, otherwise interstate e-way bill only we will be learning. Intrastate e-way bill we have separate provisions, are yes, separate provisions are there, and that we will not be learning for exam purpose, because different states may follow different provisions. For example, in Tamil Nadu the limit will be 1 lakh. What we learnt is 50,000, but in Tamil Nadu the limit is 1 lakh, and in Maharashtra it will be 1 lakh, in West Bengal it will be 2 lakhs. So the limits may change. When the limits are changing, so we don't have to remember all those things. You remember only interstate movement. And in question, if they give anything related to the state-wise exemptions, you follow that state-wise exemptions. Then 10th point, transportation of certain specified goods. So these specified goods transported, e-way bill not required. What is that? LPG for supply to household and non-domestic exempted category customers. So which cylinders? That red color cylinders. But the blue color cylinders requires e-way bill. The red color cylinders do not require e-way bill. And other than the dealer of cylinder, even if the dealer is transporting red color cylinders, e-way bill required. So normally we transport that only. If the dealer is transporting, always e-way bill is required. Then kerosene oil sold under public distribution system, that is for ration shops, e-way bill not required. Then postal baggage, our postal articles are there Then these two, natural or cultured pearls, then jewelry, goldsmith and silversmith wares. Why these do not require e-way bill? These are costly goods. If they mention which vehicle they are taking, yes, money heist will happen. So for that reason, there is no e-way bill requirement in that case. Is it clear? Next, other than imitation jewelry means covering. Even if they give free also, we don't need that. Okay. So that e-way bill required or not required? Imitation jewelry required. Imitation jewelry e-way bill required. Used personal and household effects. So when we are relocating our house from one location to another location, so we will book a lorry and we will transport the furniture, fixtures, everything that do not require any e-way bill. So these 10 points you need to remember. These are the cases where e-way bill is not required. So mostly in MCQs they will ask which of the following cases e-way bill is required, which of the following cases e-way bill not required, like that they will coin questions. Whether e-way bill is required if the movement of goods is not for supply, yes. Whether the movement is for supply or without supply, e-way bill is required. Example, we saw job work. When the goods are sent for job work, it is not a supply because it is not covered under 7(1)(a) for consideration, or it is not permanent transfer or disposal, so it will not come under 7(1)(b). Even then it is supply or not a supply, not a supply. So not a supply, goods sent on job work is not a supply. Is it clear? Even then e-way bill is required. Why e-way bill is required? Because it is taxable goods. So yes, irrespective of whether it involves supply or not, then in that case what is the document, sir? The document name is delivery challan. Okay, next, whether that 50,000 limit is for taxable goods or exempted goods? Definitely taxable goods. What if the invoice has both taxable goods and exempted goods? You take out exempted goods and see the taxable goods. If it exceeds 50,000, then e-way bill is applicable. While computing the invoice value, whether GST to be included or excluded? Definitely GST to be included. Now listen, who will generate the e-way bill? Suppose if I am the seller and I am a registered person, I will generate the e-way bill. Suppose if I am unregistered and you are the registered person, then you will generate e-way bill. What if we both are unregistered? The transporter will generate e-way bill. Is it clear? So registered person, e-way bill must be generated when there is a movement of goods more than 50,000. Unregistered persons are also required to generate e-way bill. However, when the supply is made by an unregistered person to a registered person, the receiver will have to ensure all compliances are met. Transporter carrying goods by road or air. Now suppose if the transporter don't know how to generate e-way bill, either seller or buyer, by enrolling as citizen of India they can generate the e-way bill. That point is also there, but e-way bill should be generated. Then suppose if the value of goods does not exceed 50,000, supplier will not generate e-way bill. Like me, there are 10 suppliers who is transporting goods in your lorry. You are the lorry transporter. In your lorry, one lorry, 10 different suppliers are transporting, each value less than 50,000, but cumulative value will be more than 50,000. Then in that case, whether e-way bill will be applicable. So now the lorry driver, that is lorry transporter, for each and every consignment they need to generate e-way bill. Why supplier will not generate? Because the value does not exceed 50,000. So the transporter will generate for each and every consignment. Consolidating all these consignments, they will generate a consolidated e-way bill also. See there. Transporter should generate the e-way bill as form EWB1 or EWB2, where all the consignments in the conveyance individually, that is each invoice or delivery challan is less than or equals to 50,000, but in aggregate means cumulatively it exceeds 50,000. And blocking of e-way bill, whether e-way bill should be like always mandatory, but sometimes e-way bill will be blocked. Blocked means what? It cannot be generated. In which case, if I am not filing returns for consecutive 2 tax periods, so e-way bill cannot be generated if the return GSTR1 or 3B or CMP8 is not filed for 2 consecutive tax periods, or e-way bill generation facility is blocked only with respect to outward movement of goods. Means what? So if I am not filing returns, my outward supplies only I cannot generate e-way bill, but for my inward supplies can the e-way bill be generated? Yes. So e-way bill generation facility is blocked only with respect to outward movement by a registered person who has not filed returns. However, e-way bill can be generated in respect of inward supplies of the said registered person. Is it clear? Next, other points you see, generally bill to ship to transactions are there. In place of supply chapter we discussed, I am raising invoice to you, you are my billing address, but I deliver the goods to a third person. That is known as bill to ship to. Now again you will raise invoice to the shipping address, na? Correct or not? Even though there are 2 supplies, but there is only one movement. So how many e-way bills are required? One e-way bill is only required. In case of bill to ship to transaction, one e-way bill is sufficient and it can be generated either by consignor or by the consignee. Then multi-vehicle updation is possible in e-way bill. What is multi-vehicle updation means? Up to some distance in one vehicle, thereafter the remaining distance in another vehicle. So in that case, so we don't have to generate a new e-way bill, same e-way bill in part B. So we will just update the vehicle number. Okay, we'll change the vehicle number. So that is possible. And Part B should be updated within 15 days from updation of Part A. What does it mean? For example, I added the Part A details, invoice details. Means a vehicle should start. What is the time limit within which vehicle should start? Within 15 days from the Part A gets updated. Otherwise, the e-way bill will expire and again new e-way bill we need to generate. Is it clear? Next. So this is not validity. First, e-way bill itself is not generated. E-way bill itself is not generated. To generate the e-way bill, we need to add Part B. What is the time limit to add Part B? They have given. Got it? Then e-way bill should be accepted by the recipient within 72 hours of its generation. So I generated the e-way bill. You are my recipient. You should accept or reject it. If you are accepting it, which means I have made sale to you. You understood? If you are rejecting it, which means I have not made sales to you. Means I made sale to some other person, but I am raising invoice to you. You got it? So that's why e-way bill should be accepted within 72 hours from its generation or delivery of goods, whichever is earlier. Then Part B, who can update? Either supplier. If I am sending in my vehicle, I know the vehicle number. If you are arranging the vehicle, you know the vehicle number. Or if we give to transporter, the transporter will enter the vehicle number. So Part B may be updated either by supplier or recipient or transporter. Then what are the documents required in case of movement of goods? Whenever there is movement of goods, we need to check whether it is taxable goods or exempted goods. If it is taxable goods, always e-way bill is required. If it is under supply, tax invoice plus e-way bill. If it is without supply, delivery challan plus e-way bill. If it is exempted goods, again divide into two. Under supply, bill of supply. Without supply, it will be delivery challan. And e-way bill can be cancelled. What is the time limit within which e-way bill can be cancelled? Within 24 hours of its generation, if such conveyance is not verified by the proper officer. Understood? So e-way bill can be cancelled within what time? Yeah, 24 hours of its generation. If such conveyance is not verified by the proper officer, what does it mean? Say I generated the e-way bill, but my customer cancel. Usually you place the order in Amazon. I pack the product and it will be ready for shipment. Then you may decide, okay, I don't want the product, and you will cancel. Now, can I cancel the e-way bill? Yes, I can cancel, but within 24 hours. Thereafter, I cannot cancel. I need to deliver the product. Then like sales returns, I need to raise a credit note and I need to cancel the transaction. Got it? So this is with respect to, e-way bill provisions that we have completed. Okay. And related to this e-way bill, we have few questions. Let's discuss those few questions. Page number 48, just 5 questions only, small questions. Have a look into that in workbook, page number 48. Discuss whether e-way bill is required based on the information given below. ABC Limited supplies goods worth rupees 2,50,000 under a government contract to various government departments within the same state. The goods are delivered directly to government offices. What is your answer? Whether e-way bill is required or e-way bill is not required? Why? Only if it is railways, I said e-way bill is not required. Is it by railways? No. So only if it is by railways, e-way bill not required. Otherwise, e-way bill will be required. What is the value of the goods? Okay. So if the goods are belonging to government, if the goods are belonging to government, if the goods are belonging to government and transported by rail then e-way bill is not required. Then e-way bill is not required. Then e-way bill is not required. However, in the present case, e-way bill is required. E-way bill is required. Then look into number 2. DF Limited, a company with branches in multiple locations, transfers goods worth rupees 3 lakhs from its branch A in Delhi to branch B in Delhi. The transfer is made between the branches of the same legal entity. They have not obtained separate registration. Means is it supply or not a supply? Not a supply. Even then e-way bill is applicable? Yes. So branches for which separate registration not obtained, branches for which separate registration not obtained are not distinct persons, in the present case, even though it is not a supply, e-way bill required or not required? E-way bill is required. ABC Limited, located in Maharashtra, dispatches goods worth rupees 50,000 including GST to XYZ Limited in Karnataka. What is the value? Exactly 50. E-way bill not applicable. Why e-way bill not applicable? Because it has not exceeded 50,000. Okay. So write down as value including GST, less than or equals to 50,000, comma, e-way bill not required. What if it is given that these are goods sent on job work? Then required. What if it is given that these are handicraft goods? Then also it will be required. Then PQR Limited transfers goods worth rupees 45,000 excluding GST at 18% from its warehouse in Delhi to a branch office in Uttar Pradesh. The transfer is between two branches of the same company. Then e-way bill is required or e-way bill is not required? So because if you see here, one branch is in Uttar Pradesh and warehouse is in Delhi. So warehouse in Delhi and branch in Uttar Pradesh are distinct persons. But before that, see the value of goods including GST. What is the value of goods including GST? So 53,100, and which is greater than 50,000. Therefore, e-way bill is required. Then next, XYZ Limited, Tamil Nadu, send goods on job work to their job work in Madhya Pradesh, where the value of goods is 50,000 including GST. Required. Job work, even if the value does not exceed 50,000. Write down, even if the value including GST, less than or equals to 50,000, comma, e-way bill is required. Why e-way bill is required? As the goods are sent on job work. As the goods are sent on job work. So it is required. Is it clear? So that is with respect to this. So these are the type of questions you may get on e-way bill. So we completed this. We'll take a break, and post lunch break we will discuss value of supply. That is one important chapter, value of supply, and then payment process we will see. Okay, we'll start. So we have completed so far e-way bill. Now the next area that we are going to discuss is value of supply, segment 7. In this value of supply, we have only one section, that is section 15, and section 15 says that the value of supply will be the transaction value. So we have section 15 subsection 1, which says that the assessable value equals to transaction value. What is transaction value means? The price involved in the transaction is known as transaction value, and the price involved in the transaction means the price actually paid or payable. For example, I am selling you a product for 100 rupees, then 100 rupees will be taken as the transaction value. So assessable value equals to transaction value determines in terms of section 15 if the following conditions are satisfied. What are the two conditions that should be satisfied? Supplier and recipient are not related. What if they are related? Then transaction value not applicable. Means what is transaction value? I told you the value given in the invoice. So transaction value not applicable. Then we need to determine the value as per rules. Okay. So price must be the sole consideration. Supplier and recipient are not related. You just write down. So if these conditions are not satisfied, if conditions are not satisfied, if conditions are not satisfied, then value is open market value, open market value, open market value or the fair market value that should be taken, because in some questions they have given related parties, they will give transaction value also, they will give open market value also, but we need to take open market value. So remember, assessable value equals to transaction value, and if two conditions are satisfied, what are the two conditions? Price must be the sole consideration, supplier and recipient are not related. Some other person, any expenditure I need to spend, you spent pa, means that is an indirect consideration for me, correct or not? So therefore any amount which is liable to be spent by the supplier but which is spent by the recipient. So in recipient incurs expenditure on behalf of supplier, such expenditure should be included in the value as per 15.2b. Is it clear or not? Then next one. So 15.2a we discussed, 15.2b we discussed. Look into 15.2c. Supplier is incurring some expenditure. Supplier incurs some expenditure, then that expenditure is charged to recipient. Will that expenditure be included in the value? Yes, of course. That expenditure will be included in the value. When it should be incurred? Anytime before delivery of goods or supply of services. For example, packing charges. Packing charges I will be spending and in turn recovering from you. Definitely it will be included. Or advertisement charges or design engineering charges or installation charges. Any amount which the supplier is incurring and recover from recipient should be included. That is 15.2c. Supplier is incurring expenditure and recover from recipient in the course of supply, this will be included. This pure agent is not applicable for you, don't bother. So in your syllabus it is not there, pure agent is not there, so you don't have to bother about it. So that is about 15.2c. 15.2d says interest, late fee or penalty for delay in receipt of consideration. That is, I have to get the money on time, you did not pay me money on time, for which I will be charging you interest. That should be included in the value. Got it? So what are the four inclusions we have seen? 15.2a, taxes, duties and cess other than GST should be included in the value. 15.2b, recipient is incurring the expenditure on behalf of the supplier, so that should be included, and supplier incurring the expenditure and charged it to recipient. Next, number 4, interest, late fee or penalty for delay in receipt of consideration. Then subsidy. Subsidies are divided into two: directly linked to price, not directly linked to the price. Not directly linked to the price means what? Subsidy is no way connected to the price. So for example, subsidy received for setting up a factory in backward region, that is no way connected to outward supply. Subsidy received for given employment to women, that is no way connected to outward supply. So that should be ignored. So subsidy not directly linked to the price, that is you get the subsidy irrespective of the outward supply, ignored and not considered for value. So don't consider at all. So what is the treatment? Keep quiet. You understood? The treatment is keep quiet, shut everything. You got it? So don't do anything. That's what. that if you do something, no, the answer will go wrong. Better leave it, okay? When the subsidy is no way connected to the price, ignored and not considered in value. Why it should not be considered in value? Because it's an independent activity. It will be treated as donations. So like some donation which is received, conditional donation, unconditional donation, in that category it will come. Then suppose if the subsidy is directly linked to the price. Directly linked to the price means what? With respect to every product sold or every service rendered, that subsidy will be given. For example, subsidy for selling goods at a concessional rate to backward region people, so which is related to sale. Subsidy for providing coaching to below poverty line students, so this is related to my outward supply. I am getting that subsidy that is directly linked to the price. Now we need to see whether it is from CGST or it is from others. If it is from central government or state government, even though it is consideration or not treated as consideration, it will not be treated as consideration. That's why it should not be included in the value, to be excluded from the value. What if the subsidy is from others? Others means NGO or a holding company or some other person, then it will be included in the value. So subsidy divided into two: directly linked to the price, not directly linked to the price. Not directly linked to the price, ignore and not considered in value. Otherwise, so directly linked to the price, from CGRSG to be excluded, from others it is to be included. Now when the question we are doing, when in question, what happens? There are two different treatments that is possible, view 1 and view 2. So depending upon the view, we need to accordingly change the answer, okay? So you can make note of this question if you want. That is, there is a person, there is a coaching center, okay? Coaching center provides neat coaching to students at rupees 60,000 per student, at rupees 60,000 per student. They received a subsidy of rupees 5,000 from an NGO, and rupees 4,000 from state government of Tamil Nadu. They received a subsidy of rupees 5,000 from NGO and 4,000 from state government of Tamil Nadu. So per student, okay. Now what will be taken as the value of supply in this case? What is the value of taxable supply? What is the value of taxable supply? What is the value of taxable supply? Now there are two assumptions which are possible. What is that? Assumption number 1, the price given is after reducing this 5,000 and 4,000. That is assumption number 1 or view number 1. So that view can be taken. So view 1 is price after considering subsidy. What is the meaning of price after considering subsidy? Price after considering subsidy. Price after considering subsidy means given price is there na, that 60,000. So there is some X price. From that they reduced 5,000, they reduced 4,000. That's where we got 60,000. That is the meaning of price after considering subsidy. There is another view. What is that another view? Price without considering subsidy. View 2. View 2 is price without considering subsidy. Means without considering subsidy means what? Subsidy is not reduced. Subsidy is not reduced from the given price, okay. So means the given price is before subsidy, so that X itself is 60,000, they have not reduced. These are the two views which are possible. Now what we need to do in this case? First we need to take the transaction value. What is a transaction value? That is the price involved in the transaction. So the transaction value is 60,000. Let's take view 1. So view 1, transaction value 60,000. What is the first subsidy? Subsidy from NGO, okay. Subsidy from NGO. Subsidy from NGO to be included or to be excluded? Subsidy from NGO to be included or to be excluded? To be included. Subsidy from NGO is to be included. In the given price it is excluded. So therefore we need to include. Simple. So subsidy from NGO as per provision, if you see, is it from CGST or is it from others? It is from others. So therefore to be included in the value. And in the given price it is what? It is already included or not included? Already included. Where it is included? We reduced na. As per provision, subsidy from others to be included in the value. But what we did in the given price? We have reduced. So we need to add. We need to add. What is that we need to add? 5,000 subsidy from NGO. Then subsidy from state government. Subsidy from state government, as per provision, if you see, it is to be excluded from value. And in the given price it is already excluded. So therefore don't consider that, ignore it. So therefore you will get the value of supply. So the value of supply will be 65,000. Okay, this is the way in which you need to arrive at the answer for view 1. View 2, price without considering subsidy. So the transaction value is 60,000. Subsidy from NGO to be included or to be excluded? Subsidy from NGO to be included. In the given price we have not done anything, means it's already included. So ignore. Then subsidy from state government to be included or to be excluded as per the provision. As per provision it is to be excluded, but we have not done anything in the given price. So we need to reduce. How much is that? 4,000. If you reduce, you will get 56,000. Sir, answer will change, of course. The assumption changes, that's why answer also will change. But when question is silent, so for exam, which one we need to follow when the question is silent? For exam purpose, we need to follow view 1. That is a price after considering subsidy. Okay, this is one way. There is an alternative way also, I will tell you. Say this. So view 1 is what? Price after considering subsidy. Correct? View 1 is price. View 1 is price after considering subsidy. Price after considering subsidy. Now from student how much we are getting? From student how much we are getting? So from student we will receive not 60. So because already we know that. So from student, price after considering subsidy means from student we will receive 60 because there is some original price. And from NGO how much we will receive? That is 5,000. And from state government how much we will receive? 4,000. So this will be taken as transaction value. Correct? This will be taken as transaction value. And from NGO 5,000, it should come in the transaction value. But state government will not come in the transaction value. So how much should be taken as a value? The value will be 65,000. Easy pa. Just divide it. From student how much we are getting, or from recipient how much we are getting, from NGO how much we are getting, from state government how much we are getting, we'll get the answer. Suppose view 2. View 2 is what? Price without considering subsidy. Price without considering. Price without considering subsidy. If the price is without considering subsidy, from student how much we will be getting? From student we will not receive. So 60. So 60 we know that we will get 5,000 from state government, NGO, and 4,000 from state government. Means from student how much we will receive? Only 51,000 we will receive. 60,000 fees. In that 5,000 we will receive from NGO, 4,000 from state government. Then from student how much you will be receiving? Only 51,000. And from NGO 5,000. And from state government 4,000 as usual. So this will be transaction value. This 5,000 will come. This 4,000 will not come. So 51 plus 5,000 will be 56,000. That will be taken as the value. Is it clear here? So view 1 and view 2. So depending upon the view we need to take. And I told you for exam we need to follow view 1. Okay. See, whichever is easy for you, you do it that way. But ensure that you do it properly. Got it? You do it properly and correctly and arrive at the answer. Got it? So either this way also you can follow, or you can follow this. To be included, it is already included. So what is the treatment to be done like that? Okay. So this is the treatment of subsidy to be followed. Now that's what I have given. Next page you can see, if the question is silent, consider the given prices after reducing the subsidy amount given in the question, that is original price minus subsidy is the given price. This is view 1 we need to take as the usual assumption. Now next one, you see, generally incentives will be received from the government, that is Ministry of Information Technology and Electronics, for the purpose of doing UPI transactions. So there is a vendor, for example I am the vendor and you wanted to buy this revised book. How much is this revised book? 299 rupees. What you will do? You will come, scan and you will make the payment. When you are scanning and making the payment, so I will get 299 rupees. So I will not have any deduction. So usually when you make card payment, there will be a deduction for me, that is processing fees. But in case of UPI transaction, so there will be acquiring bank like Paytm. We are having Paytm. So one voice box is there, Paytm mission is there. So you can scan and you can make the payment. So now in that case, Paytm is the acquiring bank. Will they do any deduction? No. Why they will not do any deduction? Because they will get an incentive from Government of India, Ministry of Information Technology and Electronics. Why like that? Because government is encouraging UPI transactions, for that they will receive. Now whether the money received by Paytm from Government of India, Ministry of Information Technology Electronics, is treated as consideration? No, it is treated as subsidy. So therefore it should not be included in value and chargeable to GST. Is that clear? So read that. Whether incentive paid by Ministry of Electronics and Information Technology to acquiring bank under the incentive scheme of RuPay debit card and low value UPI transactions. So whether it will be treated as consideration. Usually that incentive is provided if the amount in a transaction is up to 2000. So it is considered in the nature of subsidy by central government and not included in the value. Consequently GST is not payable. Then look into the next one. Whether the incentive amount received by those acquiring banks. So for example in our case Paytm. So Paytm may in turn transfer the money to other people who are included in the digital payment ecosystem, like Pine Labs. Pine Labs is like one device they will provide, swiping device, Pine Labs, or merchant onboarding agencies, like that lot of people will be there in this UPI ecosystem. So whether all these people will receive the incentive from government? No. So only the acquiring bank will receive the incentive. In turn that acquiring bank will share the incentive with others also. Whether others receiving incentive from acquiring bank also treated as subsidy from the government? Yes, deemed as subsidy from government. So that is the latest amendment. So it will also be treated as subsidy from government, even though government is not giving subsidy. Actually who is giving subsidy? Acquiring bank will give that. Acquiring bank will give the incentive to other people. So all those people will treat that incentive received by them from acquiring bank as subsidy from government. So consequently that will not be included in value, but not to everyone. So in this ecosystem, in this digital payment ecosystem, they should be authorized by government, they should be notified by government. So that is NPCI. NPCI is the authority which will notify them, so that they are covered under the ecosystem or not covered under the ecosystem. If they are covered under the digital payment ecosystem, means in the process, then they will be receiving incentive. That incentive is subsidy from central government. What if others are receiving? That is not treated as subsidy from central government. That will be taxable. Is it clear? So read this. Whether the incentive amount received from MEITY, that is Ministry of Electronics and Information Technology, shared by acquiring bank with stakeholders, is chargeable to GST. Sharing of incentive by acquiring bank with various stakeholders in digital payment ecosystem, example Paytm, Pine Labs, merchant onboarding agencies, underline as approved by NPCI. So they should be approved by NPCI. As approved by NPCI is also considered as subsidy, and it will not be included in the value. Is it clear or not? So related to this, I gave one question on amendment. Have a look into that. So this is an amendment concept. I gave that question. Question number 11, page number 55. Question number 11, page number 55. HDFC Bank, an acquiring bank registered under GST, participates in the incentive scheme for the promotion of RuPay debit cards and low value Beam UPI transactions, a scheme run by Ministry of Information Technology and Electronics. Under this scheme, HDFC Bank receives an incentive of 10 lakhs for promoting RuPay debit card and low value UPI transactions. As per NPCI guidelines, HDFC Bank is required to share a portion of this incentive with its ecosystem partners involved in facilitating digital payments. HDFC Bank distributes the incentive to stakeholders like Paytm, Payments Bank and Pine Labs, which helped facilitate UPI infrastructure and merchant onboarding respectively. In addition to the compliant sharing, HDFC Bank also shares 2 lakhs with XYZ Marketing Limited, a marketing consultancy that is not part of NPCI specified ecosystem for the incentive scheme, and this distribution is not in line with NPCI guidelines. Now, first, how much HDFC has received? 10 lakhs. What is the treatment of the 10 lakhs received by HDFC? Treated as subsidy from government, and it will not be included in the value and not chargeable to GST. What about out of the 10 lakhs, 3 lakhs shared with Paytm and 3 lakhs shared with Pine Labs? Whether Paytm and Pine Labs are approved by NPCI? Yes. So due to that reason, the money received by them from HDFC is also deemed to be received from central government, and it is excluded from the value, not treated as consideration. Is it clear? Whereas 2 lakhs received by XYZ Marketing, whether XYZ Marketing is specified by NPCI? No. See that XYZ Marketing, a marketing consultancy that is not a part of NPCI specified ecosystem. So money received by them will be taxable. Now, answer the following questions based on the facts given above. First question is the incentive of 10 lakhs received by HDFC Bank from METIY subject to GST. Already we discussed that this will be treated as subsidy and not included in the value. Second part, is the sharing of incentive by HDFC Bank with Paytm Payments Bank and Pine Labs taxable under GST? No. As per CBIC circular, further sharing of incentive by acquiring bank with Paytm and Pine Labs is also not treated as subsidy, not charged to GST, as they are notified by NPCI to receive incentive. Then third, is the further sharing of 2 lakhs with XYZ Marketing Limited, which is not compliant with NPCI guidelines, taxable under GST? Yes, because XYZ Marketing incentive received by them is not part of NPCI guidelines, and therefore it is not treated as subsidy and will be chargeable to GST. What is the total taxable value and GST chargeable? So 2 lakhs is the value on which GST will be payable. Is it clear? Out of the entire 10 lakhs, only on 2 lakhs GST will be payable. Understood this amendment here? Next, look into another one. Generally, expenses is incurred by the supplier and recovered from the recipient, correct? These expenses which are incurred by the supplier and recovered from the recipient, if it is as a pure agent, that will not be included. If it is in the course of supply, then you need to check whether it is incidental or other expenses. As this pure agent point is not there in your syllabus, so leave it, don't bother about it. But in the course of supply, incidental expenses or other expenses you need to check. If it is incidental expenses, what is incidental expenses? Without incurring that expenses, the supply cannot be made. That is known as incidental expenses. Example, you go to a restaurant, and when you go to a restaurant and you order for dosa, so what they will do, they will give only dosa, or they will give chutney sambar also. They will give chutney sambar also. That chutney sambar is incidental for the purpose of giving dosa. You understood? Otherwise, only dosa, how can we eat? So chutney and sambar is incidental expenditure. Without that, dosa is not complete. Whereas you will also ask for vadakari, okay? Because dosa 1 piece, vadakari 1 dip, chutney 1 dip, sambar 1 dip, and then when you eat, ayyo, that is heavenly. Now, in this case, whether that vadakari will be coming under incidental or other. Even without vadakari also you can eat dosa, but vadakari will add value to the product. You understood or not? Therefore, that is treated as other expenses. So see this, incidental expenses which is essential to make supply of goods or services, whereas other expenses not essential but adds value to the supply of goods or services. Incidental expenses will always be included in the value, whether it is at the time of delivery or before delivery or after delivery of goods or supply of services. Example, you can see packing charges. Packing is incidental or others are incidental. Example, when you go to a restaurant and you ask for Anna, idli Anna. Now what he will do? He will ask you, okay, show me your hand, and he will put idli and chutney sambar in your hand. He will pack and give na. Correct or not? Otherwise, how you cannot bring a bowl and take that na. because that will be like ayya, amma, that category, you understood. So due to that reason, so bowl and all you will not bring, they will only pack it and give. So that packing expenditure is incidental or not? Incidental. Definitely it will be included in the value. Before, at the time of delivery of goods or supply of service itself, they will do that. Sometimes installation, example, you purchased a refrigerator or you purchased a AC. When you purchase a AC, the technician will come to a home and do the installation. Then only the AC will work. Is it incidental or not? Yes. Without installation, AC will not work. So it is incidental. But when it is done at the time of delivery, after delivery, after delivery, even then it is after delivery, it should be included in the value. That is this. After delivery, installation charges to be included in value. All other expenses, check whether it is before at the time of delivery or supply of services. Then only it will be included. If it is after delivery of goods or supply of services, it will not be included. For example, transportation charges. You placed an order in Blinkit to deliver one product. So now Blinkit will charge delivery charges, some 30 rupees like that they will charge delivery charges. Whether this delivery charges is incidental or others. So even without that also the product is ready, correct? Delivery is not mandatory even without that. Sometimes free delivery also they will be giving. Am I right here? So if you buy for more value, they will give free delivery. So it is not incidental. And this particular delivery charges is before delivery of goods or after delivery of goods? Before delivery of goods, correct? For the purpose of delivery of goods only they are collecting. So it should be included in the value. Whereas if some charges are incurred after delivery of the goods, example, you wanted to buy a two-wheeler and you selected one two-wheeler which was like copper color, okay? So you went to the showroom and you saw the two-wheeler, it was so nice, and the color you did not like. You asked them what are the colors available, they said different color options. They gave you the book manual and you saw that copper color was very good to look. So therefore you ordered, okay, copper color you need like that. They said, okay sir, so you pay the money, we will deliver to you like that. And you paid money, you came home and they called you, sir, your vehicle is ready, you can come and take the delivery. And so when you go there to take the delivery, usually one black color cloth they will close, ta-da, like that they will show. You will get a heart attack because you ordered copper, it came orange. You understood? Literally like orange color. Orange color bike and all when you are taking, that too you live in a DMK area. So therefore what will happen? So very risky. You understood or not? So therefore you requested the dealer, sir, change the color, sir. This orange and all if I take, my father is DMK, municipal somewhere member, sir. Or my uncle or aunt will be related to some party, sir. Definitely they will kill me as if I joined for BJP and all. So change the color. So therefore they change the color. For color changing you will spend some money. That is called as customization charges. Is it at the time of delivery or after delivery? After delivery. Therefore will it be included in the value? No. It's an independent activity. Got it? No way connected. That is this. After delivery of goods or supply of services, customization charges to be excluded. Understood or not? Incidental. The moment it is incidental, don't see anything. It will always be included. If it is others only, you need to check before the time of delivery or after delivery. Then look into exclusions from the value of supply. So when it comes to exclusion from the value of supply, we have three exclusions. First one is, before or at the time of supply if the discount is given. So discount given before at the time of supply, what discount? Trade discount. So there are different types of trade discount. So you will go and do the bargain and you will tell, so my friends will come, my relative will come next time if you give me discount, like that and all you will tell, So that is what? That is trade discount. And sometimes you will tell, I will buy 100 quantity and like that you will start. And thereafter you will buy one only. But that idiot will have given discount to you. And all these are trade discount. When it is given before at the time of delivery, is it allowed as reduction? Of course, yes, it is allowed as reduction, but it should be duly recorded in the invoice. For example, a lot of people I have seen, they go for the shopping, mainly girls and all. So this Pandi Bazaar, that side and all, they go for shopping. When they go for shopping, footwear and all will be there. Lot of footwear shops will be there. They buy lot of footwear. So boys means one footwear for 4 years, one footwear only. Okay. But girls and all like different garments, matching they will buy footwear. And this footwear when they are purchasing, that person will tell how much is the cost of that footwear. 500 rupees like that he will say. Our people will start at 100 rupees. 100 rupees will you give? You give, otherwise I will go like that. And that person will tell, okay, wait, I will give you, because for him sales has to happen. he will give a 200. At that place and all, you don't stand, because when you stand, I don't know, shopkeeper will take what and hit you. You understood or not? So be careful when you go with shopping with girls, okay? And so they will not have any problem, but somehow they will get it here. I don't know how. 200 rupees. Now the shopkeeper will raise a bill. What is that bill? Value 500 minus discount 300. So 200 rupees he will mention. So now GST payable only on 200. It's a pre-supply discount. Pre-supply discount. Discount given before at the time of supply, trade discount allowed as deduction. If the discount is given after supply, post-supply discount, but the terms are agreed before at the time of supply, that is say cash discount. So what they will tell, if you pay within 10 days from the date of sale, so I will give you 2% cash discount, like that. So cash discount, terms are agreed before the time of supply, yes, but the discount is given after supply. Is it allowed as deduction? Of course it is allowed as deduction, but there is one problem. Invoice already prepared, so therefore we need to give a credit note. When we give a credit note, the recipient should reverse the ITC. Why when we give credit note, the recipient should reverse the ITC? Have a look into this example. First, there is a supplier who gave a invoice for rupees 10,000 excluding GST at 12%, okay, excluding GST at 12%, invoice for 10,000 excluding GST at 12%. For this invoice, in the books of supplier, okay, in the books of supplier, and in the books of recipient, tell me what is the journal entry in the books of supplier? Come on. In the books of supplier, what is the entry for this? Sales? No, sales entry or sales entry. What is that? Recipient account debit, credit sales, recipient account debit to sales account and to GST payable, that is our liability. So recipient account 11,200, 10,000 into 12%, 1,200, to sales account 10,000, to GST payable 1,200. Then in the books of recipient, what should be taken? So that is purchase account debit. So purchases account debit, how much? 10,000. Then ITC account debit, how much? 1,200, to supplier account. How much is that supplier account? That is 11,200. So then this is the journal entry in the books of supplier and in the books of recipient. Then next, what will happen? A cash discount is given. Cash discount, how much is the cash discount? Say 5%. Cash discount at 5% of sale price. So how much is the cash discount for? 560 rupees, correct? 11,200 pa, 11,200 into 5%, that is 11,200 into 5%, that will come to 560. For that 560, what is the entry in the books of supplier? In the books of supplier, and in the books of recipient. Come on, in the books of supplier. So discount is expenditure, correct? Loss. So discount account debit. How much? 500 or 560? 500, because in the 60 is the GST component, 500 is the value component. You recognize sales only 10,000. 10,000 into 5%, 500 only is the discount account debit. Then that 60 rupees, to that extent your liability will be reduced. Liability shows what balance? Credit balance. When you make a debit, it will be reduced, correct? So GST payable account debit. So because when we give credit note, what will happen? Our liability gets reduced, 60 rupees, to recipient account. How much is recipient account? 560. As recipient account is credited, that's why the name of the document is credit note. Who will be giving credit note to whom? Supplier will be giving credit note to the recipient. In the books of recipient, what is the journal entry in this case? Come on. So discount is an income, correct? So supplier account debit, the creditor balance will get reduced. Supplier account debit, how much? 560, and they got a discount as an income. So to discount account 500, and they have availed ITC of 1200, but they cannot take entire ITC because 60 rupees related ITC they need to reduce. ITC shows what balance? Debit balance. To reduce it, they need to do the credit. So to ITC account, how much? 60. So therefore they need to reverse the ITC of 60 rupees. That's what they are telling. To the supplier, the liability gets reduced to the supplier if the recipient reverses the ITC. Read this wording. Suppose if the supply discount is given after supply, but terms are agreed before supply, cash discount treatment, it is allowed as deduction if credit note is issued. A credit note is issued and recipient should reverse the proportionate ITC. Recipient should reverse proportionate ITC. Now, how will the supplier ensure that recipient reverses the proportionate ITC? The problem is that discount, I can give a credit note and my liability comes down if the recipient reverses ITC. How will I know the recipient reverses the ITC? For that reason, they have got a circular. They have brought in one circular. They are telling first, if the recipient is required to reverse ITC 5 lakh rupees against this supplier for a financial year, against this supplier, I may give 100 credit notes, I may give 100 credit notes. Cumulative all these 100 credit notes in a financial year, how much is the ITC component that the recipient should reverse? 5 lakhs, up to 5 lakhs. Ask him to give a declaration. Who? Recipient will give a declaration to the supplier that recipient has reversed the ITC. So when the declaration should be given? After the financial year. After the financial year gets over, he will give the declaration. Now I can show my liability reduced. I can give credit note and my liability can be reduced, but the recipient should give me the declaration after completion of the year. Otherwise tomorrow in audit, so department will ask me to pay liability on this. Whatever reduction I have got, I need to pay. Are you getting this? Suppose if it exceeds 5 lakhs in a financial year, then the recipient will have a CA-CMA. That recipient CA-CMA should give a certificate that recipient reversed the ITC. So they have brought in this amendment. Say this. How to ensure recipient has reversed the proportionate ITC? If the ITC does not exceed 5 lakhs in a financial year, supplier shall obtain certificate or undertaking from the recipient. Suppose if the ITC exceeds 5 lakhs in a financial year, supplier shall obtain certificate from CA-CMA of the recipient. Is it clear? This 5 lakhs should be what? Value ITC component. ITC component. That is in our example we discussed this 60 rupees. That is credit note related ITC component. Credit note related ITC component which they need to reverse. So should be 5 lakhs. And in a financial year, against all supplier, one supplier, against one supplier, not all supplier, against one supplier. And certificate or undertaking includes details of invoices. So what are the invoices for which these credit notes are issued, and with supporting details like GSTR 3B or DRC 3. How they will reverse ITC? They will reverse ITC through DRC 3, okay, or GSTR 3B. That. Then certificate of CA-CMA shall contain UDIN, unique document identification number. Otherwise what we will do now? One certificate recipient will get and he will take photocopy of that and he will distribute to all the suppliers, to whomsoever it may concern. My client so and so person has reversed the ITC. Like that one document they will get from a CA-CMA and they will do Xerox. Okay, give it to all the suppliers. No, not allowed. So every supplier wise they need to get a separate certificate, and every certificate should have a separate unique document identification number. And ITC reversed in a financial year. Sir, while computing this 5 lakhs, whether it is only CGST component or SGST component or in total, because if it is interstate supply IGST, if it is intrastate supply CGST, SGST. So total you see, ITC reversed in a financial year is sum of CGST, SGST, IGST and compensation cess. And the certificate or undertaking not required to be uploaded in the portal. No need to upload in the portal here. Just we need to get it. We need to get it, and whenever the officer is asking during proceedings, we need to submit, but made available to officer during any proceeding. And even we need to do it for the last period also, that is 17, 18, 18, 19, 19, 20, every financial year. Yes, every financial year. Now the supplier need to get it from the recipient. Is it clear? So this is a retrospective amendment for all past periods also. So this is applicable for all past periods. Applicable for all past periods. Okay, applicable for all past periods. All past periods. So even for old periods also this will be applicable and they need to do that. Okay, applicable for all past periods. Next, so you can see one question related to this, question on amendment, which I gave in page number 55, question number 10. Page number 55, question number 10. PQR Limited, a manufacturer, entered into contract with DF Limited, a distributor, on 1st April. What is the date on which contract is entered? 1st April 2024. The supply was made on 10th May 2024 with a value of rupees 25 lakhs and the applicable GST rate was 12%. Payment terms required full payment within 30 days of the invoice date. So, full payment within 30 days and a post-supply discount of 7% was agreed upon. When? Conditional on DF Limited successfully selling 80% of the goods within the quarter. So, I am PQR, you are DF, and if you sell more than 80% in a quarter, I will give you a post-supply discount of 7%. Now, I will not give, but I have entered into agreement with you that I will give you discount. Means post-supply discount, whether the terms are agreed before the time of supply. Yes. By 30th June 2024, DF Limited sold 85%. So, you sold 85% of the goods. So, you are eligible for the 7% post-supply discount. Yes, 7% post-supply discount you are eligible. Consequently, on 15th July, PQR Limited issued a credit note for such discount to DF Limited for the post-supply discount. DF Limited had availed ITC on the full invoice value as they complied with the conditions of availment of ITC. To comply with the provisions of section 15(3)(b), DF Limited is required to reverse the ITC proportionate to post-supply discount, because there is a condition. Supplier can take post-supply discount as reduction provided the recipient reverses the ITC, correct? So in this case, how much ITC needs to be reversed by DF Limited based on the credit note issued by supplier? How much ITC they need to reverse? Simple pa. What is the value of the goods? What is the value of the goods? 25 lakhs. In the 25 lakhs, how much will be the discount that will be given? 7%. So 25 lakhs into 7%. In that, what is the GST component? 12%. Per value discount will be given. Yeah, in the discount, what is the tax component? 12%. So 25 lakhs into 7% into 12%. How much that comes to? 21,000. So therefore, to the extent of 21,000, ITC needs to be reversed by DF Limited. What is the consequence to PQR Limited based on the credit note? What will happen? Just now I told you. So whenever the invoice is, the credit note is given, what will happen to the liability of the supplier? Gets reduced. Okay. So GST liability of PQR gets reduced to the extent of 21,000 as and when credit note is issued and reported in GSTR1 of PQR Limited. Then third, how PQR Limited can prove that recipient has reversed the ITC? How can he prove? Simple. So supplier should get, that is PQR should get a declaration, no certificate from CACMA, because the amount does not exceed 5 lakhs, 21,000 only. As per CBIC circular, as the ITC reversal in a financial year does not exceed 5 lakhs, PQR Limited shall obtain a declaration from DF Limited that they have reversed the ITC along with supporting documents, that is GSTR 3B, DRC 3, etc. Then fourth point, what will be your answer in 3 above? If the ITC to be reversed is 5,50,000. If the ITC reversed exceeds 5 lakhs in a financial year, DF Limited shall obtain certificate from CACMA certifying ITC reversal along with UDIN and supporting documents. Is it clear? And this procedure is also applicable for the past periods. So that is about this particular amendment. Then look into one circular, whether GST applicable on additional or penal interest on the overdue loan. What is penal interest on the overdue loan means? First, when you borrow, you will pay in EMIs. Every EMI will have an installment, and if you miss the deadline, what will happen? They will be levying a penal interest. Example, you purchased a mobile using Bajaj Finance. You converted into EMIs. You have to pay EMI. If you miss a EMI, what they will do? They will charge a penal interest. What is the treatment of that penal interest? Is it taxable or exempted? Why first of all this discussion comes? Because interest is divided into two in GST. One is interest on loans, advances, deposits. That interest on loans, advances, deposits will be exempted. Interest on account of delay in receipt of consideration, that will be included in the value and taxable accordingly. So that's why this discussion or this conflict will come, whether the penal interest will be taxable or penal interest will be exempted. For that, we need to understand whether the transaction is hire purchase transaction or hire purchase financing. If it is a hire purchase transaction, there will be only two parties, hire vendor and hire purchaser. I am the hire vendor, you are the hire purchaser. I will give you asset, you will pay me EMIs. Now that interest is included in the value and chargeable to GST. So if you miss a EMI, I will collect a penal interest, that is also chargeable to GST. If the main interest is chargeable to GST, penal interest is also chargeable to GST. You can see here, supplier collects the consideration in installments, where such installment cover price of the goods plus interest towards time value of money. This interest is included in the value, and even penal interest for delay in payment of installment is also included in value. Then hire purchase financing. In hire purchase financing, what will happen? Supplier will finance, like supplier will receive the money from the financier. For example, Bajaj Finance. So I am a mobile shop, Purvika Mobiles. You are recipient. Bajaj Finance. Now you will buy the mobile. Purvika Mobile seller will receive the money from Bajaj Finance. In turn, Bajaj Finance will collect the EMI from you. Correct? Now whatever money that Bajaj Finance collects will include interest also. That interest will be exempted. What if it is no cost EMI? There is no interest. The question of taxability will not arise. If it is interest, then chargeable to GST or exempted. Exempted. Why exempted, pa? Why exempted? Because it will come under interest on loans, advances, deposits. Due to that reason, it is exempted. Now that EMI you may miss. What about the penal interest? That is also exempted. If the main interest is exempted, penal interest is also exempted. Supplier finances the product and collects principal and interest as EMI or installments, and interest involved in such financing transactions are exempted. As interest is exempted, penal interest is also exempted. Understood now this clarification? Then look into this treatment of inclusions or exclusions. So whenever you get a question related to valuation, first you need to see price, thereafter all the amounts given in the question. First you need to interpret each and every amount. As per provision, whether it is to be included or to be excluded, you need to check. Say for example, packing charges. Packing charges to be included as per 15(2)(c), and in the given price what they have done? Already included. So ignore, don't do anything. Then second, you need to see another amount, and as per provision it is to be excluded. Example, subsidy from state government to be excluded, and what they did in the given price, it is already excluded, so ignore. Then next one, suppose if it is entertainment tax other than GST to be included in the value, and what they did in the given price, not included, so we need to add. Then an amount is to be excluded. Example, pre-supply discount. In the given price they have not deducted the discount, so you need to deduct. Is it clear? Next, whether no claim bonus given by insurance company to insured can be claimed as deduction while computing the value of supply. What is no claim bonus? That is, we will be paying the renewal premium. You have two-wheeler. When you have a two-wheeler, you will pay the renewal premium for the two-wheeler. Correct? When you pay that renewal premium for the two-wheeler, this particular renewal premium when you are paying, you don't have to pay full renewal premium. They will give a no claim bonus. Example, you have to pay 4,000 rupees. 500 rupees they will give a no claim bonus because last year you did not claim anything from the insurance company. So 4,000 minus 500, you will pay only 3,500. So GST will be computed on 3,500, not on 4,000. Is it clear? So say this, whether no claim bonus given by insurance company to insured can be claimed as deduction while computing the value of supply. Yes, provided it is shown in the invoice. Yes, it will be shown. They will give a premium receipt. They will tell, Ayya, your renewal premium is 4,000 minus no claim bonus 500. So difference 3,500 you need to pay like that. So it shall be claimed as deduction as pre-supply discount from the value if the same is shown in the invoice as per 15 subsection 3. Got it? Concentrate, don't sleep. Now next one, TCS. What is the treatment of TCS? TCS under Income Tax Act. The treatment of TCS under Income Tax Act is very simple. First of all, TCS who will collect from whom in income tax? Supplier will collect it from the recipient. Simple pa. I am a dealer, car dealer. You are buying a car from me for 10 lakhs. and you will be giving me 10 lakhs plus GST plus TCS. While computing GST, whether TCS should be included or not? No, because first of all is this TCS your income, your expenditure or your income when you are buying a car. When you are buying a car, your income or your expenditure? Your expenditure. But income tax is a tax on income. Due to that reason, this TCS is an interim levy, not having the character of tax. So it should not be included in the value as per CBSE circular. See there, TCS not to be included in value. Under section 15 subsection 2 of CGST Act, any taxes, duties shall be included in value, but TCS is not includable in the value. Why TCS not includable in the value? As it is an interim levy. Interim levy. Interim levy means what? Stopgap arrangement. Why they will levy? If you are able to buy a car, 1% is 10,000 pa. 1% is 10,000 means 100% is how much? 1% is 10,000 means 100% is how much? 10 lakhs. When you are able to buy a car for 10 lakhs, what is your source of income? From where you got money? To find that source of income only they will be levying this. That is interim levy, but not having character of tax. So it should not be included. Then next, we learn business facilitator and business correspondents. Who are business facilitators and business correspondents? Agents of the bank. And what they do? They will provide the services on behalf of the bank and collect the service charges from the customers, and they will be paying it to the bank. Say this. So there is a banking company, there is business facilitator or correspondent and a customer. Now, banking company, on behalf of banking company, business facilitator or correspondent will provide the services to the customer and will receive the service charges. Is it clear? And this service charges will be remitted by business facilitator or correspondent to banking company, for which banking company gives the commission. Now, in this case, what should be taken as value of supply? The service charges should be included in whose value of supply? Banking company value of supply. Then what should be included in the value of supply of the business facilitator correspondent? Commission. On that commission also, who will pay GST? If it is business correspondent, FCM. If it is business facilitator, it will be RCM. See there, in case of business correspondent, GST payable under FCM on the commission, and in case of business facilitator, GST payable under RCM by banking company on the commission. Then there is one CBSE circular related to value of molds and dies to be included in the value. So look into situation number 1. In this, what happens? There is Maruti Suzuki, original equipment manufacturer. They are making cars, and they have ancillary industry, MSR's IR India Private Limited, which is a component manufacturer. What they do, say for example, they are making car doors. Now first, Maruti Suzuki enters into contract with IR India Private Limited to buy the car doors made by IR India Private Limited, and for which, as per contract, molds and dies, die means to bring the product in requisite shape, die is to be given by original equipment manufacturer. So write down point number 1. So first, Maruti Suzuki entered into contract with IR India Private Limited for purchase of molds and dies manufactured by IR India Private Limited, for which molds and dies to be given by original equipment manufacturer. Now OEM is supplying the molds and dies. Whether these molds and dies supplied by OEM to component manufacturer, supply or not a supply? Not a supply. Why not a supply? There is no consideration, and it is not permanent transfer or disposal of business asset on which it is available, because those molds and dies will be returned. So it is no consideration, temporary transfer, and not a supply. Is it clear or not? Next. Now what happens? IR India Private Limited is selling the car doors. For the car doors, who is the seller, who is the buyer? For the car doors, who is the seller, who is the buyer? IR India Private Limited is the seller. Maruti Suzuki is the buyer. Now in this case, the buyer is giving me molds and dies. Now I am IR India. Buyer is giving me molds and dies. Whether that molds and dies to be included in the value? No. 15(2)(b) will not come. As per 15(2)(b), any amount that the supplier is liable to pay but which is incurred by the recipient should be included. But first of all, here I am supplier and I should buy molds and dies. As per contract, I am supplier pa, IR India pa, should I buy the molds and dies? No. Who should buy the molds and dies? Recipient only should buy. That is, Maruti Suzuki only should buy. They only purchase. It will not be included in the value. Is it clear? So therefore, sale of car doors, point number 4, sale of car doors, value of molds and dies not required to be included, because because as per contract anyhow recipient only should buy and recipient only purchase. So that's what I told you. If recipient is incurring some expenditure, if recipient is incurring some expenditure on his own account, it will not be included in the value. Got it? Now next point. Now this Maruti Suzuki will buy the molds and dies from the market, for which they will pay 10 lakhs plus GST 1,20,000. Can this 1,20,000 be availed as ITC? Yes, they can avail the ITC, not at all a problem, because as per contract they only should buy and they have purchased, so it is in the course or furtherance of business. Molds and dies nowhere in the blocked credit and used in the course or furtherance of business, they can take ITC with respect to that. Understood? Next one. Second situation. In second situation, what happened you see. First, Maruti Suzuki entered into contract with component manufacturer to buy the car doors manufactured by component manufacturer using the molds and dies belonging to component manufacturer. Here molds and dies supplied by original equipment manufacturer. There is a difference. Now in this case, who should buy the molds and dies? IR India. Who should buy the molds and dies? IR India. But who supplied it? Recipient. So it is supplier liability met by the recipient. So therefore it should be included in the value. So second, molds and dies is 10 and it is not a supply, same. And in the sale of car doors, amortized cost. What is amortized cost means? Amortized cost means depreciable value. Molds and dies divided by number of units that can be made using molds and dies into number of units that is sold. For example, the capacity of molds and dies is 10,000 and they have made now 4,000. So total cost of molds and dies divided by 10,000 into 4,000. That amortized cost of molds and dies to be included because of 15(2)(b). Understood? Now in this case, Maruti Suzuki purchases the molds and dies and pay 10 lakh plus GST, which they cannot avail as ITC. Why they cannot avail ITC on this? Because it is not used in the course or furtherance of business. Actually, who should buy the molds and dies? Component manufacturer. But who purchased it? Maruti Suzuki. That's why Maruti Suzuki cannot take ITC with respect to that. Are you understanding this? Now, this I have just given into two parts. First, as per contract, OEM should provide molds and dies to component manufacturer. Okay. Now, who is sending? OEM is sending molds and dies to component manufacturer on free of cost basis. It is not a supply. Can the ITC be availed on molds and dies by OEM? Yes. Whether the components will be like whether the car doors, okay, so components supplied by CM to OEM, whether the value of molds and dies to be included in value or not included in value? Not included in value. Suppose if it is as per contract, component manufacturer should purchase but given by OEM. Now OEM sending molds and dies. Now also not a supply. However, ITC can be availed by OEM. No, because it is not to be purchased by them, but they purchased it. So if already they have availed, they need to reverse. And what about the components? Whether the amortized value of molds and dies to be included? Yes, amortized value of molds and dies to be included in the value. Got it? So with this, we completed value of supply. So mostly we get the practical questions on this, and this molds and dies point also can be tested because they have not asked this in the couple of attempts in the last. So therefore they can make a question on this molds and dies. Okay. Then kindly look into your concept grills. So there are few questions only I have given on value of supply. You need to answer that. So page number 29 and 30. There are around some 5 questions. Read the questions carefully and answer it. I'll give you 10 minutes time. Make it fast. Okay, finished here? Yes. So have a look into question number 1. ABC Architects entered into contract with BTC Group of Hotels to design the architecture of one of its hotels at an agreed consideration of 20 lakhs. Out of the total consideration, it asked BTC Group of Hotels to pay 12,50,000 to its material supplier, Khanna Manufacturers. What is the value of supply in this case? Because first of all, the transaction value is 20 lakhs. Transaction value under section 15.1, transaction value under section 15.1 will be 20 lakhs. Okay, and thereafter, out of the total consideration, it asked BTC Group of Hotels to pay 12,50,000 to its material supplier Khanna Manufacturer, that is recipient incurring expenditure on behalf of supplier. Recipient incurs expenses on behalf of supplier as per section 15.2b. How much is that? 15.2b, 12,50,000. Okay, so therefore value of supply will be 20 lakhs plus 12,50,000. So 32,50,000 will be taken as the value of supply. Then number 2, Mr. Ram provided repair and maintenance service of equipments belonging to A Limited which are used in manufacture of oxygen. The repair and maintenance work was carried out at a factory of A Limited using electricity belonging to A Limited. The charges for services are fixed at rupees 1 lakh. While value of electricity used is estimated rupees 10,000, what is the value of supply in this case? 1 lakh will be taken as the value of supply. Why? Sir, this 10,000 rupees is recipient incurring expenditure. Is it on behalf of supplier? No. So it is not on behalf of supplier. So this A Limited using electricity belonging to the repair work was carried out at the factory of A Limited using electricity belonging to A Limited. The charges for services 1 lakh while value of electricity used is estimated 10,000. So that electricity is not an expenditure incurred by supplier and recovered from recipient. Also it is not an expenditure incurred by recipient on behalf of supplier. Okay, so write down such electricity charges are not expenses incurred by supplier, and charged to recipient, also such charges are not incurred by recipient, on behalf of supplier. Therefore it is not included in value. And how much will be taken as the value of supply? So value of supply equals to 1 lakh. Value equals to transaction value, that equals to rupees 1 lakh. You understood why that electricity charges will not come? Because it is not expenditure incurred by supplier and charged to recipient. Moreover, it is not expenditure incurred by recipient on behalf of supplier. So nowhere it will come. Then next, third one, a supplier provides IT consulting services for rupees 10 lakhs. The terms include an additional 1 lakh for software licensing and 50,000 for travel expenses. Both include in the invoice. The supplier offers a 10% discount on the IT consulting services. The supplier also incurs 75,000 for a special training session, which is paid by the recipient directly. Determine the value of supply in this case. First, IT consultancy services 10 lakhs. Additional 1 lakh for software licensing, 50,000 for travel expenses, both included in the invoice. First of all, it is incidental expenses and it is recovered from the recipient, so it should be included as per 15(2)(c). And supplier offers a 10% discount. First we will see transaction value under section 15(1). What is transaction value under section 15(1)? That will be equals to 10 lakhs. And thereafter expenses incurred by supplier, expenses incurred by supplier and charged to recipient, and charged to recipient, it should be included in value as per section 15(2)(c). How much is that? So that will be 1,50,000, 1,50,000. Thereafter discount, pre-supply discount or post-supply discount? Pre-supply, before supply itself. Pre-supply discount, how much is that pre-supply discount? 10%. 10% of what? 10% on 10 lakhs. 10 lakhs into 10%, that will be 1 lakh. Pre-supply discount is allowed as deduction, am I right? Next one, the supplier also incurs 75,000 for special training, which is paid by recipient directly. So supplier expenditure met by the recipient, correct? So recipient incurring expenses, recipient incurs expenses on behalf of supplier, on behalf of supplier. So that is to be included as per section 15(2)(c). Okay, how much is that? 75,000. 75,000, when you add, you will get the value 10 lakh plus 1,50,000 minus 1 lakh plus 75,000. 11,25,000 will be taken as the value in this case. Next, question number 4. Messrs. Korelal Print and Private Limited, a registered person under GST in the state of Jammu and Kashmir, has been engaged in the business of offset printing and has been providing services to various book publishers. So basically Korelal Printer is doing publishing of books. Okay, a publisher situated in state of Himachal Pradesh, a registered person under GST, sent content of the book to be printed. Usually what we also will do, we will send a soft copy of this book to the publisher, printer. So we are publisher, printer will do the printing activity. So content is given, and Korelal Printer, what they are doing, the publisher also send the paper worth 4 lakhs, correct? So publisher will give the paper, so I will send the paper also. I will procure the paper from an agency, and the paper also I will be sending to the printer, and soft copy also I have sent to the printer. And what they are doing, just they are doing the printing and they are sending the books to me. Okay, now it is what job work, carrying out process on the goods belonging to other person. Korelal Printer raised an invoice of rupees 1,50,000 against printing of books and returned the printed books through challan to the publisher. The proper officer intercepted the vehicle and claimed that Korelal Printer should have sent an invoice of 5.5 lakhs. No, because actually it is expenditure incurred by recipient. Is it on behalf of supplier or in his own account? In his own account, on his own account. So it will not be included in value. Got it? So write down paper worth 4 lakhs, paper worth 4 lakhs sent by recipient to supplier is an expenditure incurred by whom? Recipient, on behalf of supplier or on his own account? On his own account. Expenditure incurred by recipient on his own account. Therefore, it is not included in value, not included in value of books printed by supplier, So what should be taken as a value of supply? Value of supply value of supply under section 15(1) equals to 1,50,000 only, whatever they have charged. And moreover, carrying out process on goods belonging to other person is job work. Carrying out process on goods belonging to other person is supply of service and proper officers contention is not valid. Proper officers contention is not valid. Is it clear? The next one, fifth one, Z Limited is manufacturing lunch boxes and they have entered into contract with Y Limited to make the lids for the lunch boxes. As per the contract, Z Limited has to send the design and mold based on which Y Limited shall manufacture lids. Whether the value of molds and dies include in the value of lids? No. So write down as per contract, as Z Limited, as Y Limited or Z Limited, Z Limited, as Z Limited in brackets recipient should send molds and dies, to Y Limited in bracket supplier. As per contract, as Z Limited recipient should send molds and dies to Y Limited supplier, comma, such cost of molds and dies, not included in the value of lids, manufactured by Y Limited. Such cost of molds and dies not included in the value of lids manufactured by Y Limited. Is it clear? Then next. So this is with respect to this questions on value of supply. We'll take a break and then we will continue with other chapters. Okay. So now we are going to discuss segment 13, payment process. So in this payment process, there are two sections, that is section 49, which talks about various electronic credit ledgers, and section 50, interest on account of delay in payment of tax or wrong availment and utilization of ITC. Look into this e-ledgers in overview. So section 49 says that every registered person, on behalf of every registered person, there are three electronic ledgers that will be maintained by GST network. That is electronic liability ledger, electronic credit ledger, and electronic cash ledger. Whatever balance that is there in the electronic credit ledger, that will be used only for payment of tax dues. So in electronic liability ledger, total there will be 5 dues belonging to a registered person. T, I, P, F, O. T for tax, I for interest on account of delay in payment of tax, and P for penalty, and F for fee, and O for others. So in electronic liability ledger, tax dues and other dues, and whatever balance that is there in the electronic credit ledger can be used only for payment of tax dues, cannot be used for payment of other dues. But the balance that is there in cash ledger can be used for payment of tax dues as well as other dues of the person. Okay. And how the money will come into electronic credit ledger? So whenever we avail the ITC, how we will avail ITC? Either through GSTR 3B or ITC 1, that is in case of availment of ITC on closing stock, or ITC 2, transfer of business. So whenever there is a transfer of business, ITC also will be transferred. Then ITC 2A, a single registration is getting separated into multiple registrations. In all these cases, ITC will come into electronic credit ledger. Also, in case if there is any refund, that refund also will come into credit ledger. Whatever balance that is there in the credit ledger will be used for payment of liability ledger. Same way, money will come into cash ledger. How money will come into cash ledger? Whenever we make deposit into the cash ledger, cash deposit. So that deposit through PMT6 challan or any TDS, TCS deducted by the e-commerce operator and by the notified recipients, and any refunds will come into cash ledger, and the balance in the cash ledger can be used for payment of liability ledger. So whatever is the outflow of credit ledger and cash ledger is the inflow into liability ledger, which will be used for payment of tax dues and other dues. Now electronic liability ledger will be PMT1. So you need to remember the form numbers. Electronic liability ledger will be PMT1, and electronic credit ledger will be PMT2, and electronic cash ledger will be PMT5, and PMT6 is deposit challan. Whatever balance that is there in the credit ledger or cash ledger after payment of interest, penalty, fee, or any other amount may be refunded to the person. Okay. So therefore, if we have some excess balance in the cash ledger or credit ledger, we can claim it as a refund. Now look into some special points with respect to cash ledger. So through cash ledger, what are the various modes of deposits? So total 6 modes of deposit is there into cash ledger. Easily remember, PMT6 is deposit challan and 6 modes. PMT6 deposit challan and 6 modes. What are those 6 modes? Number 1, NEFT, RTGS, net banking, then debit card, credit card, and UPI, IMPS. Then over the counter. Over the counter means cash deposit. To what extent? Only 10,000 in a tax period. But these 5 modes unlimited. What are those here? So net banking, debit card, credit card, NEFT, RTGS, and UPI, IMPS, and over the counter up to 10,000 in a tax period. And whenever sometimes we make a debit from our bank account while making payment. So our bank account got debited, but the electronic cash ledger not got credited. In that case, what we need to do? We need to make a complaint to the payment gateway through the portal. Okay. Say this, when payment is debited from the bank account but not credited in electronic cash ledger, then communication to payment gateway shall be made through GST PMT 7. And next, for transfer of balances between major heads and minor heads in cash ledger, form GST PMT 9 is notified. For what purpose? Transfer of balances. Sometimes, like we will have in a cash ledger 4 major heads: CGST, SGST, SGST or UTGST, IGST, and then compensation cess. These are the 4 major heads. For every 4 major head, we will have 5 minor heads. T, I, P, F, O. Tax, interest, penalty, fees and others. Okay. So now sometimes by mistake we will put money into one cell. To transfer the balance from that cell to another cell, we will be using PMT9. For transfer of balances between major heads and minor heads in electronic cash ledger, form GST PMT9 is notified. Then whatever balance that is available in the cash ledger can also be transferred from one distinct person to another distinct person. For example, I am having registrations in 2 states. You can see in the next page. I am having registration in 2 states. Andhra Pradesh, one registration, Tamil Nadu, one registration. Now I need to shift the balance in cash ledger in Tamil Nadu, from Tamil Nadu to Andhra Pradesh. Can I do that? Yes. For that also we use PMT9. So PMT9 has 2 purposes. One is to shift the balance from one cell to another cell within the cash ledger, or to transfer the balance from one distinct person to another distinct person. These are the 2 purposes of PMT9. But whenever you are transferring the balance from one cash ledger to another cash ledger, ensure that in the transferor's cash ledger there is no pending liability. Means we should meet the liability, complete the liability, then only the transfer can be made. Balance available in cash ledger can be transferred between distinct persons using PMT9. However, transferor should not have any unpaid liability in the electronic liability ledger. Then, so whenever you transfer the balance, remember 2 important points. That is, SGST head balance cannot be transferred. SGST head balance cannot be transferred, and CGST, IGST balance cannot be transferred to SGST head of the distinct person. Okay. So we have some SGST balance now. Can this SGST balance be transferred to the another GSTIN? No. This SGST balance cannot be transferred. Also, this CGST, IGST balance is there now. It cannot be transferred to SGST head. Got it? So SGST balance cannot be transferred to a distinct person. CGST or IGST balance cannot be transferred to SGST head of a distinct person. Then what they need to do in that case? First SGST balance they need to transfer to CGST or IGST using PMT9. Already we know. Thereafter, once it reaches CGST, IGST, then it can be transferred to CGST, IGST. Again, once it comes to CGST, IGST, it can be retransferred to SGST. This is the only way that is possible. Okay. Next, look into special points with respect to credit ledger. Whenever we have some balance in the credit ledger, we can get it as a refund. But remember, only in 2 places we will get the balance in credit ledger. What is that? That is zero rated supplies. Whenever I am making zero rated supplies, or in case of inverted tax structure. Inverted tax structure means what? Tax rate on output is less than the tax rate on input. For example, I am purchasing cloth. The rate of GST on cloth is 12%. And using that I made the garment and I am selling the garment. The rate of GST on garment is 5%. As the tax rate on output is less than the tax rate on input, so in this case I will have lot of ITC balance which I can get it as a refund. So you can see, so inverted refund from electronic credit ledger is possible only in 2 cases, that is inverted tax structure, tax rate on output less than tax rate on inputs, and zero rated supplies. Then refund to original source ledger. What is this refund to original source ledger means? Sometimes what will happen, we will be having some excess balance, so that is excess payment of tax we would have done by mistake. For example, in the place of 1 lakh we would have made 10 extra, 10 lakhs we would have paid. You understood? Now 9 lakhs excess paid, we will get it as a refund. But in which ledger we will get as refund? To the source ledger, from whichever ledger you have paid. If you paid from the credit ledger, it will come to credit ledger. If you paid from the cash ledger, it will come to cash ledger. If you used both in the same proportion, you will get as a refund. For example, 3:2 ratio you paid from credit ledger and cash ledger. So in the refund also 3/5 will come into credit ledger, 2/5 will come into cash ledger. Are you understanding? See there. Refund to original source ledger, where a registered person has claimed refund of any amount paid as tax, wrongly paid or paid in excess. Underline, tax wrongly paid or paid in excess, for which debit has been made from credit ledger. Then the said amount, if found admissible, proportionate amount, proportionate amount, okay. So proportionate amount will be given, okay. Proportionate amount debited from credit ledger shall be recredited to the electronic credit ledger by an order in PMT3. PMT1 liability ledger, PMT2 credit ledger, PMT3 recredit into electronic credit ledger when some excess payment of tax is made. Then there is one more form, PMT3A. What is this PMT3A? Say this simple. First, 1 second. So PMT3A come into picture when, say for example, I have some balance in ITZ, okay. There is some electronic credit ledger balance, okay. There is some electronic credit ledger. In that electronic credit ledger, there is some balance, say for example, some opening balance of 5 lakhs. 1 second here. Just 1 minute, system has hanged. It also could not tolerate the heat. Okay, there is some opening balance of say 5 lakhs in the electronic credit ledger, okay. Now what happened? I claimed a refund. How much is the refund that I have claimed? Say for example, 3 lakhs I claimed as a refund. So closing balance is 2 lakhs. Understood up to this? Now what happened? This particular 3 lakhs got credited to the bank account. And out of this 3 lakhs, there is some wrongfully paid, okay. There is some money which is wrongfully paid. Something happened again. say this, I'm just repeating it again. So there is some electronic credit ledger opening balance, that opening balance is 5 lakhs and the closing balance is 2 lakhs, and there is a refund of 3 lakhs. That refund is credited to the bank account of that person. In this refund, whatever is credited to the bank account of the person, there is some excess that are wrongfully claimed. Okay, so wrong refund or erroneous refund, okay, erroneous refund, that is I'm not supposed to get the refund, but I claimed a refund. Now what will happen, this particular erroneous refund will be paid back. Okay, so it is paid to government, it is paid to government. When it is paid to government, what they are trying to convey is that again the balance will be created into the electronic credit ledger. Now what is the opening balance? The opening balance will be 2 lakhs na, the opening balance, that is closing balance is opening balance, and there will be recredit. To what extent? To the extent of 3 lakhs, because first you claim the refund and thereafter there is some excess payment, so therefore it will be recredited to the extent of 3 lakhs. Is it clear? So therefore this is known as, this recredit is through PMT 3A, this recredit is through PMT 3A, you can say this. Yes, so this recredit will be through PMT 3A. Special points with respect to electronic credit ledger, see this. When a registered person claims erroneous refund of ITC, upon payment of such refund along with interest and penalty, proper officer shall pass an order in PMT 3A for recredit to electronic credit ledger. So whatever balance that is there in the credit ledger can be used only for payment of tax, but cannot be used for payment of interest, penalty, fee and others. Already we know that. Also, whatever balance that is there in credit ledger can be used only for payment of GST under FCM, but not for payment of GST under RCM. Then balance available in the credit ledger may be restricted for utilization by proper office. That is, whenever I have taken the balance in credit ledger, that may be restricted. May be restricted means sometimes as per rule 86A it may be suspended, as per rule 86B you cannot use fully. So 1% you have to pay through cash ledger, like that they can restrict it. Balance available in the credit ledger can be used for payment of tax demanded under section 73 or 74, that is arrears of tax. For payment of arrears of tax, I can use the balance in credit ledger. Arrears of tax means what? Tax pertaining to one period, not paid in that period, I am paying it now. For that, can I use the credit ledger balance? Yes. Okay. Now look into this rule 86A and rule 86B. This is restriction with respect to balance that is there in the credit ledger. Already I availed the ITC. Even after availment of ITC, officer may restrict it. In which case? Point number 1, my supplier is not in existence or not doing business from the place where they have obtained registration, or I am not in existence, recipient not in existence or not doing business from the place where I have obtained registration. Means what? Not in existence means they are unable to locate me, or I may be doing, they are able to locate me, but I am in a different place now rather than the place where I have obtained registration. That is these 2 points. ITC availed against the invoice issued by a supplier who is not in existence or not doing business from the place where supplier has obtained registration, or ITC availed by a recipient who is not in existence or not doing business from the place where recipient has obtained registration, or ITC availed without actual receipt of goods. So without receipt of goods, if I have taken any ITC, or ITC availed against an invoice for which supplier has not paid tax to government, so supplier did not pay tax to government, okay, or invoice or debit note against which ITC availed is not in existence. Means what? Invoice is missing. Total 5 situations. My supplier is not in existence or not doing business from the place where they have obtained registration, or I am not in existence or not doing business from the place where I have obtained registration, or I have not received the goods but I have availed the ITC, or invoice is missing, or my supplier did not pay tax. Then whatever credit which I have already availed in my credit ledger can be suspended for a period up to 1 year, maximum 1 year. What will happen after 1 year? After 1 year, if there is no mistake on my part, that credit will be given to me and I can enjoy it with adjustment with our liability. Got it? So GST officer has power to disallow the set off of provisional credit against GST payable for a maximum period of 1 year if he is of the opinion that. So these 5 cases, what will happen upon expiry of 1 year from the date of restriction, the registered person shall be able to debit input tax credit so disallowed subject to any other action that may be taken against such person. Then look into next one, Rule 86B. Rule 86B talks about payment of 1% of liability through cash ledger. That is, whenever the taxable turnover of a person exceeds 50 lakhs in a particular month. What turnover? Taxable turnover. So turnover in a month exceeds 50 lakhs. Taxable turnover. Why taxable turnover? While computing this turnover, we should eliminate exempted supplies, we should eliminate zero rated supplies, we should eliminate taxable supplies. Now you need to see taxable turnover in a month. If taxable turnover in a month exceeds 50 lakhs, then I have to pay 1% of my gross liability through cash ledger, even if there is sufficient balance in the credit ledger to make the payment. Okay, and this will not be applicable to. So which means, for example, my liability is 8 lakhs. When my liability is 8 lakhs, 1% is what? 8,000 I have to pay through cash ledger. Means 7,92,000 only I can use from the credit ledger. But this is not applicable to government and its family members. Why? What is the point in generating? What is the purpose of this 1%? Just to create a cash inflow to the government. If everyone uses ITC for payment of liability, then there won't be any cash inflow. Got it? For that purpose they are bringing it. But this is not applicable to government departments or local authority or public sector undertakings or PSUs. Okay, statutory bodies. So government department, PSU, local authority or statutory body, this will not be applicable. Also, this rule is not applicable in the following cases. What is that? Such person or proprietor or karta or managing director. Such person means that registered person, or its proprietor, its karta or managing director or any of its 2 partners paid income tax more than 1 lakh in each of the preceding 2 years. Then also already they created a cash flow to the government, so they don't have to comply with Rule 86B for the current year. Then next, received a refund of unutilized ITC greater than 1 lakh in the preceding financial year. So preceding financial year already they got excess ITC refund. Then again, if you restrict ITC, it will not be correct. So that's why Rule 86B not applicable. Or during the current year, concentrate, during the current year, up to the month already I paid more than 1% through cash ledger. Okay, so during the current year from April to this month, already I paid more than 1% through cash ledger. For this month we don't have to comply with Rule 86B. For example, you can see amount paid through cash ledger up to previous month in the current financial year divided by total gross liability up to current month in the current financial year into 100. If it is greater than 1%, means already I paid. As already I paid, whether Rule 86B is applicable or not applicable for this month? Not applicable for this month. What if it is less than or equals to 1%? Rule 86B applicable for the current month. That is, I paid greater than 1% of the total output tax liability through cash ledger calculated cumulatively up to the month. Remember the formula. First see how much is the cash ledger balance, how much is the liability I paid through cash ledger up to previous month. But denominator you take up to current month into 100. If it is greater than 1%, this month you don't have to comply with Rule 86B. Otherwise you need to comply with Rule 86B. Then next one we have section 50. Section 50 talks about interest on account of delay in payment of tax. When will there be interest on account of delay in payment of tax? 3 situations there will be interest on account of delay in payment of tax. First is delay in filing GSTR 3B. So I am filing GSTR 3B late. Whenever I am filing GSTR 3B late, then I need to pay interest at what rate? At the rate of 18% per annum. From when to when? From the first date after due date till the actual date of payment. Is it clear? And so for example, GSTR 3B due date is 20th. I am filing by 31st. So therefore I need to pay interest for this 11 days. On what? Gross liability or net liability? Net liability. Net liability means what? Gross liability minus ITC plus RCM liability. So see there, computed on amount paid through cash ledger, that is net liability. What will be considered as the date of payment? The date on which I file 3B. Okay, whenever I am actually filing 3B, that should be taken. You understood this first interest, delay in filing 3B, second interest. Invoice not reported in a particular tax period. So for a particular month, I have not reported the invoice, means I have not paid the liability, but 3B and all is filed. Now I am paying this tax after say 6 months or 9 months, like that I am paying. I told you already, now whenever you are paying arrears of tax, not necessary that you have to pay through cash ledger only, you can pay through cash ledger as well as credit ledger. So I have paid. Now whether I need to compute interest, of course yes, because there is a delay in payment of tax from when to when, from the due date till the actual date of payment. And interest at what rate? 18% only. On what? Net liability, gross liability, gross liability. See there. So interest at the rate of 18% from the first date after due date till the actual date of payment, computed on amount paid through cash ledger and credit ledger, that is on gross liability. And what will be considered as the date of payment? Whenever I am actually filing 3B, or I can also make the payment through DRC3. Okay, either I can make the payment through 3B or I can make the payment through DRC3. Okay, next we have situation 3. Situation 3 is ITC wrongly availed and wrongly utilized. Then the interest will be at the rate of 18% from the first date after the date of utilization till the date of reversal or payment. So what will be considered as the, so interest should be computed only on the ITC availed and utilized. What will be considered as the ITC utilized? That month in which balance in ITC falls below wrongly availed ITC, to that extent we have utilized the ITC. So compute on ITC utilized, that is the extent to which balance in ITC falls below availed ITC. What will be considered as the date of utilization? Date of utilization will be actual date of 3B or due date of 3B, whichever is earlier, for the month in which balance in ITC falls below wrongly availed ITC. Okay, and date of reversal is the actual date of GSTR 3B or DRC3. And because either through 3B or DRC3 we can make the payment. Tax can be paid either through 3B or demand and recovery DRC3. Such DRC3 can be filed anytime. And there is one important amendment here. If you are maintaining sufficient balance in the cash ledger as on the due date, if you are maintaining sufficient balance in the cash ledger as on the due date, you don't have to pay interest even if there is a delay in filing 3B. For example, my net liability is 2 lakhs. In my cash ledger there is 2 lakhs as on due date of 3B, that is 20th of next month, there is balance. Now I don't have to pay interest even though I am filing 3B late. So generally if I file 3B late I need to pay interest now. They gave a relaxation. If sufficient balance is maintained in the cash ledger by the due date of 3B, interest is not payable on account of delay in filing 3B. Then next one. So whenever I need to check the balance in ITC, that is at the time of wrongly availment and utilization of ITC, if there is sufficient balance in the cash ledger, that is if the balance in ITC is not falling below the wrongly availed ITC, I have not utilized. While counting it, whether I need to see, so all the heads or only the respective head. For example, IGST wrongly availed. Should I check the balance of only IGST or should I check all the heads? I should check all the heads. For example, see this illustration. So what happened is that I have availed the IGST wrongly. So IGST credit wrongly availed. What is the IGST credit wrongly availed? Say for example 8 lakhs is IGST credit wrongly availed, and balance in ITC in March 2024 and reversed in say June 2024. March 2024 we availed and reversed in June 2024. Now from March onwards you need to see the balance. March 2024, April 2024, May 2024, 3 months we need to see because in June we are reversing. So what is the balance in IGST? IGST credit, then CGST credit, then SGST credit and total. Okay. Now if you see IGST credit balance in March, this is balance, okay. Balance in March for IGST is 6 lakhs, CGST 2 lakhs, SGST 2 lakhs, so total 10 lakhs. Again April 4 lakhs, then 3 lakh 50,000 and 3 lakh 50,000, so that is 11 lakhs. And next May 2 lakhs, 4 lakhs and 4 lakhs, that is 10 lakhs. Now if you observe, IGST credit is decreasing. So 8 lakhs came down to 6 lakhs, came down to 4 lakhs, came down to 2 lakhs. But we have not utilized IGST. Why? While doing the balance, we should see the total. Whether the total falls below wrongly availed ITC, no. So as the total in ITC, as the total balance of ITC, as the total balance of ITC does not fall below 8 lakhs, comma, interest is not payable. Interest is not payable on account of wrong availment and utilization of ITC. Is it clear? So interest is not payable on account of wrong availment and utilization as there is no utilization, correct? As there is no utilization. Why there is no utilization? Because we maintain the sufficient balance in the cash ledger. That's why there is no utilization. Is it clear here? Understood? Then what if CGST credit wrongly availed? Which two heads you need to check? CGST head and IGST head. What if SGST credit wrongly availed? Check SGST and IGST. What if compensation cess wrongly availed? Check only compensation cess. And what if CGST, SGST both wrongly availed? See total, okay. So look into this. If IGST credit wrongly availed, check the balance in ITC of CGST, SGST, IGST. CGST credit wrongly availed, check the balance in CGST, IGST. SGST wrongly availed, SGST plus IGST. Compensation cess wrongly availed, check only the balance in compensation cess. Why? Because compensation cess cannot be utilized for payment of anything. Suppose if both CGST and SGST wrongly availed, you will see everything, CGST, SGST and IGST. So this is about, payment process. I told you that there are only two sections, section 49, various e-ledgers, and 50, interest on account of delay in payment of, payment of tax and wrong availment and utilization of ITC. Now, let's see one illustration on amendment. You can see here, illustration on amendments. One question is there. I think last question, that is question number 19. Question number 19. Yes, say this, question number 19. Due date of filing GSTR 3B is 20th of next month, and month July 2024, gross liability 8 lakhs, August 2024 4 lakhs, September 2024 6 lakhs. This is our liability. ITC availed 3 lakh, 1 lakh and 4 lakhs. Balance in electronic cash ledger as on 20th of next month 5 lakhs. So if you see July month, 8 minus 3, 5. So whether we maintain sufficient balance in due date of GSTR 3B? Yes. So by due date of GSTR 3B, what is the July month GSTR 3B due date? 20th of August. As on 20th August, you have maintained 5 lakhs. Then again August 2024 gross liability 4 lakhs, ITC 1 lakh. So 4 minus 1, 3. So which means 5 plus 3, 8 lakhs should be there in the balance. But what happened? Only 7 lakhs is there. Means they deposited only 2 lakhs. 1 lakh shortfall. Is it clear? Then that 1 lakh they have deposited on 30th September 2024. September 2024, 6 lakhs is the gross liability, ITC 4 lakhs. So net will be 2 lakhs. Already 8 lakhs is there. Now they deposited 2 lakhs by the due date. So 10 lakhs. All these 3 months they filed GSTR 3B on 28/12/2024. Compute interest payable. Now first we will see for July month. For July month is there any interest? No. Why there is no interest? Just now we saw an amendment. What is that? If sufficient balance is maintained in the cash ledger by the due date of 3B, interest is not payable on account of delay in filing GSTR 3B. So whether sufficient balance we maintain by due date? Yes. So interest is not payable even though GSTR 3B is filed late. Understood here? Then for August month, what is the net liability? 3 lakhs. But how much is maintained? 2 lakhs only maintained. Sir, 7 lakhs how it got? Already 5 lakhs we have. Now 2 lakhs we deposited. So 2 lakhs only we deposited by the due date. Is it clear? And therefore 1 lakh we have not deposited by due date. So on 1 lakh we need to compute interest. From which date to which date? What is the due date? 20th of September. Till the actual date of 3B, not 10 days. Not 10 days. Not for this 10 days we need to pay interest. Not 20th of September to 30th September. Because this provision will not be applicable. When this provision will be applicable? If you maintain sufficient balance in cash ledger. If you are not maintaining sufficient balance in cash ledger, you need to pay interest from which date to which date? From the first date after due date till the actual date of payment. What is considered as actual date of payment? Actual date of filing 3B. Actual date of filing 3B will be taken as the actual date of payment. So due to that reason, we need to pay up to 28th December. So you take your calculator and count the number of days. For September, 10 days. October, 31 days. November, 30 days. December, 28 days. So how many days interest? Huh? So we need to compute interest for 99 days. From when to when? 99 days. At what rate? When to when we computed? 20th September to 28th December. 99 days. On what? 1 lakh. So 1 lakh into 18% into 99 by 365, that is 4,882 we need to pay as interest. For September, should we pay any interest? No. Why for September we don't have to pay any interest? Because September month, what is the net liability? 6 minus 4, 2 lakhs, and we maintain that sufficient balance. So due to that reason, we don't have to pay any interest for September 2024. So therefore, interest not applicable as 2 lakhs is deposited by 20th October. Is it clear here? A very, very important question. There is a high chance because of the amendment, this question can come in exam. Then, in input tax credit concept drills, we have not discussed a few questions because those questions, 2 questions, because that was related to this rule 86B. Okay. So please go to page 35, question number 14. Page 35, question number 14. A taxpayer has a turnover of 75 lakhs for September 2024 and a GST liability of 6 lakhs. The taxpayer has ITC of 7 lakhs for the month of September. The taxpayer cumulative tax payment through cash ledger from April to August 2024 was 40,000 out of the total liability of 48 lakhs. Is the taxpayer exempt from Rule 86B? Also compute GST liability through cash ledger for September 2024. This is the question which I was referring to. First, we need to see the payment through cash ledger up to previous month. Up to previous month, how much we paid through cash ledger? Turnover 75 lakhs per, GST liability 6 lakhs, taxpayer has ITC of 7 lakhs. The taxpayer cumulative tax payment through cash ledger from April to August was 40,000. So take 40,000 divided by total liability including September. So April to August, what was the total liability? 48 lakhs. including September liability. What is the September liability? 6 lakhs. So 48 plus 6 lakhs, 54 lakhs. So 40,000 divided by 54 lakhs into 100 is how much? 0.74, which is less than 1%. Therefore, Rule 86B is applicable. Rule 86B is applicable. Less than or equals to 1% also. Rule 86B is applicable for September 2024. Is it clear? Now, what is a gross liability? What is a gross liability? Gross liability is 6 lakhs. Even though they have ITC sufficient balance, but they can use ITC utilized. How much ITC they can utilize? Only 6 lakhs into 99%. So liability 99% only they can use. That is 5 lakh 94,000 only they can utilize. So balance 1%, that is 6,000 will be their net liability. Got it? So what is the excess balance in cash ledger? What is the excess balance in electronic cash ledger? So out of 7 lakhs is the balance. Check there. 7 lakhs is the balance. Out of 7 lakhs, 5 lakh 94,000 only we have utilized. Out of 7 lakhs, we utilize 5 lakh 94,000. So what is the difference? 1 lakh 6,000 will be still be there in the cash ledger. Understood? Next, 15. A taxpayer with a turnover of 55 lakhs has filed a refund claim for ITC on account of exports in the previous month. The GST liability for the current month is rupees 4 lakh 50 with an ITC of 4 lakh 50. Does Rule 86B apply in this case? Is Rule 86B applicable in this case? Applicable or not applicable? Why not applicable? So if they have claimed a refund, so how much refund? Did they give how much refund? Refund. No. Turnover 55 lakhs, filed a refund claim of 1 lakh on account of exports, but they did not give. How much should be the refund claim? More than 1 lakh. Write down. Only if refund claim, only if refund of ITC greater than 1 lakh during previous year, then Rule 86B is not applicable. Then Rule 86B is not applicable. Okay. Whether in the present case Rule 86B is applicable? Yes. In the present case, Rule 86B is applicable. And 4,400 shall be payable using cash ledger. Shall be payable using electronic cash ledger. How 4,400? What is the liability? 4 lakh 40 na? 4 lakh 40 into 1%. 4,400 shall be payable through cash ledger. So only when they have given the amount more than 1 lakh you can take. Otherwise, so that exemption will not be applicable. Is it clear? So that is with respect to this. Done. Next, look into another one. In registration, already we completed 3 things. That is, when a person is liable to get registered, and that concept we have completed. Correct? Threshold limit for registration. I am just quickly repeating that. So have a look into registration related provisions. So see segment 11. Segment 11 deals with registration. So first one, I told you that these are the sections that we have. Section 22, 23 and 24 deals with when a person is liable to get registered. 23, persons not liable for registration. 24, compulsory registration. Whereas these 3 are procedural aspects. 28, 29, 30 is special cases. Okay. So threshold limit, already we learned this. When a person is liable to get registered, if their aggregate turnover exceeds threshold limit. What is the threshold limit for registration? If they are doing business in 4 states, that is MMTN, then the limit will be 10 lakhs. Let it be goods or services. If they are doing business in U-stamp, the limit will be 20 lakhs. Let it be goods or service. Other states it will be 20 lakhs for services and 40 lakhs if they are exclusively engaged in supply of goods. Suppose if a person is engaged in business in many states, then what we need to see? One of the state is in MMTN and taxable supplies are made from that state, then it will be 10 lakhs. Suppose if none of the states is in MMTN U-stamp and they are exclusively engaged in supply of goods, then it will be 40 lakhs. All other cases it will be 20 lakhs. And aggregate turnover will be computed on all India basis and not state wise. This point also discussed. 40 lakhs is only in case of exclusive supply of goods. If they are supplying goods plus they are also giving interest income, then they are treated as exclusive supply of goods only. And if they are supplying services or supplying both goods and services, the limit of 40 lakhs will not come, only 20 lakhs or 10 lakhs. And the limit of 40 lakhs is not applicable in the following cases: persons who voluntarily got registered, persons who are compulsorily required to get registered under section 24, and person making exclusive supply of some goods. What are those goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, bricks and roofing tiles. But in composition scheme we saw one list. What is that? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. So aerated waters is extra in composition scheme. Here it is not there. One more difference is that list manufacturer only cannot opt for composition scheme, but trader can opt for composition scheme. But these points are applicable for both trader as well as manufacturer. So section 22 subsection 1 says, as and when aggregate turnover during a financial year exceed threshold limit as discussed above, that person is liable to get registered. And exemption from registration. In some cases, there is a person who is exempted from registration. What is that? If they are exclusively engaged in exempted supplies, that is my outward supply is fully exempted, then I am exempted from registration, including non-taxable supplies. Or I am an agriculturist to the extent out of cultivation of land. So I am an agriculturist, my outward supply is only engaged in cultivation of land, then also I am exempted from registration. Or if I am exclusively engaged in RCM supplies, means my outward supply is fully covered under RCM, but except supply of metal scrap. For example, I am an unregistered person, I am making supply of metal scrap to registered person, it is RCM. Even though it is RCM, but I am not exempted from registration, I need to register whenever my aggregate turnover exceeds threshold limit. This is one latest amendment. Is it clear? So remember, whenever there is an unregistered person who is supplying metal scrap to a registered person, that is covered under RCM, that provision you don't have. But what they are telling is that for them this is not applicable, so they need to. Apart from that, in all other cases, if my outward supply is covered under RCM, I am exempted from registration. Then if a person is making both exempted and taxable supplies, then the above exemption is not available. Then this is one point, that is, if I am a supplier engaged in supply of goods through e-commerce operator, I need to compulsorily register. However, that compulsory registration is not applicable if I am making only intra-state supplies and I have obtained a unique enrollment number. I am not making supply through e-commerce operator in more than one state. That is this point. Person making supply of goods through e-commerce operator who is required to collect TCS having aggregate turnover of previous year and current year below the threshold limit subject to following conditions. What is that? He shall not make interstate supplies. He shall not make supply through e-commerce operator in more than one state or union territory. And they need to declare permanent account number and get a unique enrollment number. And as and when their aggregate turnover exceeds threshold limit, they will register normally and the unique enrollment number will be cancelled. Then compulsory registration. So 3 cases they are compulsorily required to get registered as per section 22. That is, if a person is registered under earlier indirect tax regime, they should also be registered under GST. Or in case of transfer of business, whenever I am transferring my business also, I need to register. Or transfer pursuant to a scheme of amalgamation, merger or demerger. In this case also, transferee should register. But what is the point in these 3 cases? You know, they are not mandatorily continue to get registered. They need to register, and if their turnover falls below threshold limit, they can make an application for cancellation of registration. they can make application for cancellation of registration if their aggregate turnover falls below threshold limit. What are the three places? Registered under earlier law, transfer of business, or transfer pursuant to scheme of amalgamation, merger or demerger. Then as per section 24, some people are compulsorily required to get registered. But what is the difference between this compulsory registration and this compulsory registration? In 22 compulsory registration, so if the turnover falls below threshold limit, they can make application for cancellation of registration. But in 24 compulsory registration, they need to mandatorily get registered. Even if their turnover does not exceed threshold limit, they need to register and continue in the registration. Understood the difference? See this below. Irrespective of threshold limit, a person is liable to get registered. What are the cases where a person is compulsorily required to get registered? Point number 1. You remember this with a mnemonic I creations. I for interstate supply of what? Goods or services are? Only goods. Interstate supply of goods other than handicrafts. Then C for casual taxable person. Who is a casual taxable person? Coming from outside the state to this state. And that person is also compulsorily required to get registered, but other than handicrafts. If they are engaged in supply of handicrafts, they are not compulsorily required to get registered. Or recipient who is liable to pay GST under RCM. Then E for e-commerce operator. So there are two e-commerce operators who are compulsorily required to get registered. Who are they? E-commerce operator liable to pay GST under 95, that is HATE, housekeeping service, accommodation service, transportation of passenger service and eating food in a restaurant. So these cases. And e-commerce operator liable to deduct TCS under section 52. So these people are compulsorily required to get registered. Okay. Then A, agent making supply on behalf of principal. Every agent who is making supply on behalf of principal. Then TDS deductor under section 51. I for input service distributor. Who is an input service distributor? They are a head office. They will take the credit and distribute the credit to the branch offices. They need to compulsorily register. Then O for OIDR supplier and OMG supplier. What is OMG? Online money gaming. Online money gaming. OIDR supplier located outside India, making supply to non-taxable recipient in India. Then online money gaming supplier located outside India. These people are compulsorily required to get registered. N for NRTP, non-resident taxable person. Yes, supplier of goods through e-commerce operator other than those who are making only intrastate supplies. So these people are compulsorily required to get registered. But remember, section 23 overrides all these sections. Once a person is exempted from registration, they are exempted from registration, even though compulsory registration is applicable to them. Is it clear? Then section 24 overrides section 22. That's what. So whenever I am registering, only when aggregate turnover exceeds threshold limit, but in case of compulsory registration, irrespective of threshold limit, I need to get registered. So these are the three core sections. 22, when a person is required to get registered. 23, exempted from registration. 24, compulsory registration. Then you can see 25, procedure for registration. So when a person, what is the procedure for registration? So there are 6 forms you need to remember. REG 1, application for registration. REG 2, acknowledgement. As soon as you make application for registration, you will get an acknowledgement. Acknowledgement means like evidence that you have made application. And thereafter, you will be getting a notice if there is any discrepancy. REG 3, notice. REG 4, reply to notice. And REG 5, rejection of application. REG 6, certificate of registration. And what is the time limit within which we need to make application for registration? Within 30 days from the date on which a person becomes liable for registration. So as and when I am liable to get registered, I need to make application for registration within 30 days. Then when I make application, I'll get an acknowledgement immediately. After that, within 7 working days, either I should get a notice or I should get the certificate of registration. So see there, REG 1 application to REG 3 notice, 7 working days. REG 1 application to REG 6 certificate within 7 working days. Say I got a notice, I need to give reply to the notice. What is the time limit for reply? Same 7 working days. So REG 3 to REG 4, 7 working days. After I give reply, thereafter within 7 working days, they should either grant registration certificate or they need to reject the application. So see there, REG 4 to REG 5 or REG 6 will be within 7 working days. Is it clear? Then every person who is making application for registration should furnish their bank details, but the bank details can be furnished at a later point of time also after getting registration. But what is the maximum time limit by which they need to furnish the bank details? Within 30 days from the date on which they get the registration certificate or date of filing GSTR1, whichever is earlier, and this provision is not applicable in case of TDS and TCS deductor. And the above procedure whatever we discussed now, it is not applicable to not you. Remember, not you. See the procedure and tell not you. Okay. So who is that not you? N for NRTP, O for OIDR supplier or OMG supplier, T for TDS TCS deductor, U for UIN holder. Is it clear? Then next one. So this point is important for MCQ. What is the time limit within which the bank details needs to be furnished? 30 days from the date of registration or date of filing GSTR1, not due date of filing GSTR1, actual date of filing GSTR1, whichever is earlier. Then, so there are few cases where physical verification is mandatory, means whenever you make the application, so they will take up for physical verification. Only after conducting physical verification of premises, then only they will grant registration. That's a very important theory question. 3 situations physical verification is mandatory. Number 1, whenever you made an application without Aadhaar authentication. Number 2, you made application with authentication but it is not completed within 15 days of submission of REG1. First one, you applied itself without authentication. Second, you applied with authentication but not completed within 15 days. Third, you applied with authentication, completed authentication, but officer wanted to conduct physical verification based on risk parameters. Maybe you are living in an area which is prone to risk, so that is like fake registrations and all easily will come. So for example, you are somewhere in Saukarpet or you are somewhere in Pandi Bazaar, like these areas. So in that case, they will be, like definitely doing physical verification, then only they will grant registration certificate. That is this. So these are the 3 cases where physical verification is mandatory. Only after doing physical verification, they will grant the registration certificate. Now, sir, sometimes can they do the physical verification after grant of registration also? Yes. After grant of registration also they can do physical verification. Before grant of registration also they can do physical verification. These are the 3 cases. Before grant of registration they will take physical verification. They will do physical verification. What is the time limit within which physical verification should be completed? Within 30 days from the date when we make application, they need to complete. So listen carefully. They need to complete the physical verification within 30 days from the date we make application. At least 5 working days before, the officer should do the physical verification and upload the physical verification report in the portal. Okay, see this. Where the physical verification of place of business of a person is required before grant of registration, the proper officer shall get such verification done, and the verification report along with the other documents including photographs shall be uploaded at least 5 working days prior to the completion of the time specified, that is 30 days from the date of application. Suppose if the physical verification is to be conducted after registration, so they are giving registration and then they are doing physical verification, then in that case, so how many days they need to upload the report? Within 15 working days after verification, they need to upload the report along with photographs, etc. and all. Got it? So 2 points you need to remember. If they are doing physical verification before registration, at least 5 working days before the time limit prescribed for doing physical verification, that is 30 days. Suppose if they are doing physical verification after registration, whenever they complete the verification from there within 15 working days, they should upload the report. Is it clear? Next one, Aadhaar authentication. You can see. So when you make application for registration, is Aadhaar authentication mandatory? No. At the time of making application, Aadhaar authentication not mandatory. We have 2 options. Either we can select Aadhaar authentication or we can make application without authentication. Suppose you selected Aadhaar authentication. After submission of application, that is part B of REG1, one link will come, and in that link we need to do the OTP verification. But now there is biometric Aadhaar authentication. So not just OTP is sufficient, we need to do the biometric, that fingerprint, etc. and all also we need to. That they have implemented across the country. You can see the same page at the end. Biometric based Aadhaar authentication is now extended to all states and union territories for the purpose of completion of registration application. Is it clear? So now, so therefore after successful Aadhaar authentication, then the registration certificate will be granted within 7 working days of authentication or else deemed registration. And suppose you fail to authenticate within 15 days, that is you selected the application, not completed authentication within 15 days, then what will happen? Application is deemed to be submitted without authentication. Got it? So this is what 3 places I told you. If you submit the application without authentication, or submit application with authentication but authentication not completed within 15 days, or completed authentication but they are taking it for risk parameters, in these 3 places officer will conduct physical verification of place of business within 30 days of application. Are you understanding this? Then now see this. Suppose if you apply without authentication, after submission of application there is one more amendment. You need to visit the nearest facilitation center. There are some GST facilitation centers, e-Seva Kendras, etc. There you need to give your address proof and ID proof. So other than Aadhaar you will have some KYC na. So those details like driving license or like ration card, etc. That details, bank statement. So visit nearest facilitation center where verification of photograph and verification of original copy of documents are completed, and then they will do physical verification. After physical verification, they will be granting registration certificate. Is it clear? Now, there is a concept of deemed registration. Deemed registration means within a particular time limit, if they are not doing registration, it is deemed that registration is to be granted. Okay. So you can see that in the next page. First, total 5 situations we will be getting deemed registration. So whenever you get a question, what are the situations where registration of a person is deemed to be granted, you need to write these 5 situations. Situation number 1, a person made application for registration without selecting Aadhaar authentication, then what is the time limit within which they need to get the registration? 30 days. 30 days, because they need to conduct the physical verification, 30 days. If not, deemed to be registered. What are the 3 places I told you physical verification? Concentrate. What are the 3 places where I told you physical verification? Application without Aadhaar authentication, application with authentication not completed within 15 days, application with authentication completed but based on risk parameters requires site verification. All these 3 places physical verification, correct? So 30 days, point common, you understood? 30 days from the date of application, 30 days from expiry of 15 days, because after 15 days only that 30 days will count, and here 30 days from application. Easy, 3 points. Next to 2 points, that 2 points is 7 working days. That is, once you make, concentrate, once you make application for registration, within 7 working days, they should either give you notice or they should give you certificate for registration. Otherwise, registration is deemed to be granted, correct? Then, after you give reply for notice, thereafter within 7 working days, either they need to give you registration or cancel, like rejection of application. Otherwise, registration deemed to be granted. Understood, pa? So remember 3 cases: physical verification, 30 days if registration not granted from application, deemed to be registered. Next 2 will be you made application within 7 working days, neither notice nor certificate, or you gave a reply, after reply within 7 working days, no rejection of application nor grant of like certificate. Understood? Now come back to this point. If show cause notice is received within specified period, then applicant need to file clarification, and after filing clarification, officer should grant registration certificate within 7 working days or else deemed registration. If Aadhaar authentication, if opted, is mandatory and can be completed within 15 days from submission of part B of REG 1. So whenever you complete the authentication, or whenever 15 days is over, whichever is earlier will be taken as the date of application. Date of authentication or 15 days will be deemed, whichever is earlier is deemed to be the date of submission of application. And physical verification shall be conducted within 30 days of submission of application. Okay. that is that 15 days, first 15 days you need to complete authentication. If not, only 30 days will come. So the 30 days is after 15 days. And to whom other authentication is applicable and not applicable? Simple. First, you are a citizen. Citizen of India, definitely other authentication is applicable. What if you are not a citizen of India? Not applicable, because there is no other authentication. For individual or sole proprietor, not a citizen of India, other authentication not applicable. In case of HUF, only Karta is required to undergo authentication, but other members not required to undergo. Then in case of firm or LLP, only authorized or managing partner is required to undergo authentication, but other partners not required. In case of company, body corporate or other entity, only authorized signatory required to undergo authentication, but other members not required. So first 4 points remember. Actually you get a question who are not required to undergo authentication. Point number 1, not a citizen of India. Then members other than Karta of HUF. Then partners other than authorized or managing partner. And members other than authorized signatory of company or body corporate. Next 4, government and its family members. Who are they? Central government, state government department, local authority, statutory body and PSU. Last UIN holder. These are the 9 points you need to remember who are not required to undergo authentication. Usually at the time when we make application for authentication, it is optional. But once you applied without authentication and they did physical verification and granted registration, thereafter other authentication is mandatory. Is it clear? So the above persons are not required to undergo authentication even though they have already registered. Generally you need to undergo authentication always, either at the time of application or at a later point of time. But for these people, at the time of making application also other authentication not applicable, and thereafter also other authentication not applicable. 9 points. Can you remember? Next, what is the time limit for making application for registration? Usually we need to make application for registration at least 5 days before commencement of business, whereas this is in case of CTP and NRTP. So generally 30 days from the date when you are liable to get registered, but only in 2 places at least 5 days before commencement of business. What is that? CTP and NRTP, at least 5 days before starting of business. Then deemed registration. What is deemed registration? If a person is registered under CGST Act, they are deemed to be registered under SGST Act, etc. Then special provision for CTP NRTP. So who is CTP NRTP? See the next page. Casual taxable person is a person who is occasionally undertaking transaction involving supply of goods or services in the course or furtherance of business, whether as a principal or agent. Means they are coming from other state to this state. Do they have any physical place of business in a state or union territory? No. But NRTP also same, but only difference is that NRTP will be coming from outside India to India, and they don't have any fixed place of business or residence in India. And CTP undertakes a transaction in the course or furtherance of business, but NRTP no such requirement. CTP will have a permanent account number, but NRTP will not have a permanent account number. Then how they will register? Using their passport. And CTP will file GSTR1 and GSTR3B regular return, but NRTP will file GSTR5. And casual taxable person, the application form is in REG1, and NRTP application form is in REG9. REG9, that is the application form. Now you can see below, that is before. So special provision for CTP and NRTP, whatever the registration that they need to get is a compulsory registration, and that registration is a temporary registration. For what period? 90 days, maximum 90 days, and it can be extended for a further period of 90 days. On sufficient cause being shown by the said taxable person, proper officer may extend the said period of 90 days by a further period not exceeding 90 days. And they need to pay advance tax either at the time of registration plus at the time where they are extending also they need to pay advance tax. How much will be the advance tax? The advance tax that they need to pay will be estimated net tax liability. Means they are coming to this state. If they make supply, how much is their liability they need to estimate, and that estimated tax liability, which liability? Gross or net? Net liability. After adjustment of estimated ITC, they need to deposit, and whatever money that they have deposited will be into the cash ledger, and it will be adjusted against their actual liability. Suppose if they have excess liability, they will pay. if there is a short, like if they don't have that much of liability, that excess balance they will get as a refund. So that is this. So where any extension is sought, an additional amount of tax equal to estimated tax liability of such extended period shall be deposited. This advance tax shall be credited to the cash ledger, which shall be adjusted against final liability, and excess balance can be claimed by filing application for refund, and no time limit for such refund. Also, it is not subject to unjust enrichment. Not subject to unjust enrichment means no need to prove that we have transferred the burden to the next person. Okay, so these points are there. Then we have amendment in registration, cancellation of registration, that you go through. Okay, that you go through, and we have, like, there are some more points: amendment registration, cancellation of registration, revocation of cancellation of registration, that is special cases. Then we have returns chapter, tax invoice chapter. So that alone I will just put it in YouTube, because you have classes from tomorrow you have exam. I will put it in YouTube and you watch that. Okay, so what you need to do is that you have a test now, you have a test. So for the test you do the revision. So I will just cut this portion concept wise and I will put it in my YouTube channel as a playlist, small each and every segment one video. So you watch that, that will be easy for you. You don't have to watch this video again, you understood? So this video you don't have to watch, chapter by chapter I will cut it and put, and even this questions on amendments I am discussing now, that also I will separate and put, so that one day before exam quickly you can go through that questions on amendments also. Okay, fine. And with this we'll conclude today, and we will see the next few portion in YouTube. You can see that before your exam. When is your test on GST? I think they gave today only. I said no, correct. They prepared actually. So indirect tax will be on 29th March. 29th March. Tomorrow 26th March you have advance accounts. 26th March you have advance accounts, and next 26th March Wednesday, not tomorrow, Wednesday you have advance accounts mock test 1, and 29th March will be indirect tax mock test. Okay, so you prepare accordingly. Done.